Cabinet approves 12,015 crore rupees in funding for expansion of Delhi Metro. 13 new stations to be added in the next 3 years. New stations include India Gate, Bharat Mandapam, War Memorial High Court, Kartavya Bhavan and Baroda House. US government scraps lottery-based selection under the H-1B visa program, prioritizes skilled, higher-paid foreign workers, making it hard for entry-level professionals for securing work visas in America. Hello and welcome. A very good afternoon, viewers. This is Malika Mishra and you're watching Profit 360 on NDTV Profit. But apart from the Christmas spirit, today is special also because December 25th marks the day Mumbai gets its second international airport. The Navi Mumbai International Airport formally kickstarts its operations today. The airport, in fact, welcomed its first commercial flight with a water cannon salute this morning. The water cannon salute is a ceremonial aviation tradition in which fire trucks spray arcs of water over an aircraft as it taxis. IndiGo flight 6E460 traveling from Bengaluru landed at the NMIA at 8 a.m. this morning. My colleague Saurabh Gupta sent us his ground report capturing the moment of NMIA receiving its first flight. Let's take a look.
As one enters the terminal, one gets a feel of what an amazing experience it's going to be for flyers who are going to fly through the Navi Mumbai International Airport, which is a digitally advanced high-tech airport. This is how futuristic airports in the country are going to look like and how airports in Viksit Bharat are going to look like. Now, the airport is not just about high-tech and design. It is also about integrating India's elements, India's cultures, and this is of course inspired by the lotus, India's national flower. The design, when you see, is inspired by the lotus, India's national flower, and it is of course integrating the architecture with cultural identity and contemporary design. Along with sustainability features. In its initial phase, the NMIA is designed to handle 20 million passengers per annum, with future expansion planned to scale capacity up to 90 million passengers per annum. So, to give you a sense of what the entire project entails, this is a full-scale model or a miniature model, of course, of the full scale of development at this airport. Now, this is the Terminal 1, which is the one that's been constructed now in the phase 1, and then of course the two parallel taxiways and the initial runway, which is of course the southern runway of the airport. And then there are, so look at the connectivity. You have this metro station that's coming in. You will have road connectivity and metro station that's coming in, and that comes all the way up to the terminals. And then of course there is the metro terminal at the station. Then also there is the Targhar station, which is the local train connectivity, and there is metro connectivity that's coming. And then there is also this particular line, the automated people mover, something that foreign airports have. That is also planned here, with the first flights landing and taking off today, with operations beginning at the Navi Mumbai International Airport and commercial paying passengers taking flights from this airport. This day in Mumbai's civil aviation history is going to strengthen the city's role as a global gateway and support long-term economic growth through expanded aviation capacity. Planned as part of a distributed aviation framework, the NMIA, or the Navi Mumbai International Airports, with flights now operating from this airport, is set to transition Mumbai to a multi-airport system aimed at improving capacity, operational resilience, and long-term scalability, giving the city a chance to grow, a chance to achieve its potential and rewrite its own destiny as it looks to build for the future with a goal in Viksit Bharat 2047.
Well, that was all about the first flight that took off from the Navi Mumbai International Airport. Now let's show you the visuals of the first flight that landed from at the NMIA from Bengaluru. Our colleague Ritu Rajpurohit captures those historic moments, and we also bring you an NDTV exclusive with Gautam Adani as he personally welcomes passengers at the new airport. The Adani Group chairman calls it a proud moment for Mumbaikars and says the facility will ease air traffic and offer world-class services. Let's take a look. Here you see finally the first flight that took off from Bengaluru Kempegowda International Airport has landed here at Navi Mumbai International Airport, and you can see the excitement here in the air among the passengers, the way they have been welcomed here at the airport, being garlanded. You have Adani Group chairman himself, Gautam Adani, being here greeting the passengers with a bright smile therein. You see, that's the sort of a special welcome that's been provided the moment that you had the flight landing over here. There was a special welcome in the form of cans, basically the water cans, showing that whole of a different dance show for the passengers. You have the passengers being with the phones up now, excited to take selfie with the man himself here, who is valuing each and every passenger being landed at Navi Mumbai International Airport. It's a historical moment, of course, because this is the airport with the lotus structure, which again significantly of nation's national flower. But the picture here says a different story of how that the aviation gateway is now seeing a new chapter altogether. We have the man himself, Mr. Gautam Adani, joining us, who is greeting and welcoming the passengers with a bright smile. Sir, the excitement is in the air. We saw, passengers clapping. We are seeing a new gateway altogether when we talk about the aviation, sir. What's like for you now?
Oh, actually, this is a very proud moment for Mumbaikars, and we are really fortunate where we got basically rights to develop this airport. It's a brand new airport, and we try to make it the world-class airport.
Sir, at this point in time, what would your really message be to the passengers? I saw them all with the phones up, being excited to take selfie with you.
No, this is actually Mumbai was struggling since last 10 years to having the more facility on airport side, and the present Mumbai airport was actually fully jammed. And this will basically ease out air traffic movement in Mumbai.
Now, as the city welcomes its second airport, let's talk to some voices that would help us understand the gravity of this milestone. We have with us Ajay Avtane, aviation expert, and Jitendra Bhargava, former ED at Air India. Thank you so much for joining us, gentlemen. Let me begin by asking Avtane, how will NMIA's launch today significantly reduce congestion at Mumbai's Chhatrapati Shivaji Maharaj International Airport, sir? And I ask you this question because, Mumbai has been struggling with managing its congestion for a long time. We're a very populated city and there's high traffic. How do you think NMIA is going to solve that key problem?
So thanks for having me on the show. I think one of the primary issues with Mumbai always has been that there is only one runway. So they've been trying to do the best that they can do with managing, as much traffic movement out of that single runway. With Navi Mumbai, obviously you have two runways now. I mean, the first one's already operational right now. The second one's coming up. So there's already planning for two runways. And I think they've been potentially talking of a third one as well. So additional capacity is always welcome, and this is going to be helpful for the people of Mumbai and the visitors to Mumbai, because obviously now you don't have to really kind of be constrained by capacity at this point of time for expansion into one of the largest cities in India.
Expansion does give a relief in terms of handling high number of passengers. But Mr. Bhargava, from your experience at Air India, how will NMIA relieve the severe capacity crunch at Mumbai Airport that has impacted operations for years in some form or the other? And do you reckon with his view, is it the same reason?
No, I fully agree. And the fact is, it's a historic day for Indian civil aviation, historic day for Mumbai city. As a financial capital, Mumbai had always had an important place in Indian aviation. Let's not forget, the first flight which heralded the birth of Indian civil aviation landed in Mumbai. with JRD Tata in command. Now, what are we looking at is that in the last few years, Mumbai ceded its place and other airports grew because they had greenfield airport. What was done in Mumbai was that the old airport was only renovated, refurbished, and as we call it, a brownfield airport being made to add capacity. But now that the new greenfield airport is coming, and as Ajay said, the capacity will be increased in a calibrated manner, which would mean that the government will be able to give slots, both departing and arrival slots, to foreign airlines, to domestic carriers to expand. And that is what will take the load off the Mumbai existing airport, and there'll be no more congestion. And once you take care of the congestion, the growth will certainly take place, Mumbai being the financial capital, and more airlines would love to travel, arrive in Mumbai and have businesses out of it. The other part, of course, is that once this airport is coming up now, and you'll find the real estate growth in that area. So it acts as the catalyst for economic growth, economic activity, and this is what we must be looking at. And I am myself looking forward to traveling from the Navi Mumbai International Airport day after, just 48 hours from now.
Right. Mr. Bhargava, you highlighted a very important point. You mentioned city-side development as well. And I remember when I was watching the interview that our managing editor, Tamanna Inamdar, did with Jeet Adani, he did mention that how this airport is going to fuel growth, not just inside, but also outside and in and around the area. It's going to uplift the economical appeal of the area by various folds. But my follow-up question to what you just said, and this is just me being inquisitive, what is a metric for the success of an airport? And I ask you that because while the airport has been made in a very fancy and appealing manner, where there are many features that make the airport experience itself extremely memorable, I just recently heard somebody say that the success of an airport lies in the number of airlines that would eventually come and partner with the airport. How do you think NMIA stands at that position, according to you?
The first thing is to look at that convergence of economic growth, infrastructure creation, airlines adding capacity assures growth in aviation. This is a standard practice that's happened. Navi Mumbai International Airport has all the qualities of an international world-class airport. Now, there is no reason, Mumbai being the financial capital, that airlines will not press the government into giving them slots which were being denied in the past. We saw Delhi Airport grow, Bangalore, Hyderabad, all greenfield airports. They grew in a very fast manner at the expense of Mumbai city. Mumbai would always remain the first choice. So I am very clear about it, that it's a question of time, and as the calibrated growth takes place of Navi Mumbai International Airport, more and more airlines will flock to Mumbai city because Mumbai has the capacity. One thing, of course, one can say that there was a time when Mumbai monopolized the international travel. People would come in from different cities to Mumbai to catch an international flight. But now India, as the Prime Minister has very often stated, the number of airports has grown twofold. Now, with all major cities having their old airport, now you don't need transiting passengers to come to Mumbai and then take an international flight. But Mumbai, on its own standing as the financial capital, will have enough business for many more airlines to come in and fly or add frequencies to it. And of course, as I said earlier, the real estate development, and we have very often said, aviation industry acts as a catalyst for economic growth. And with the coming up of the airport, you will find the area up to 50, 70 kilometers away from Mumbai, from Navi Mumbai International Airport, develop and create employment, create hotels, create travel industry, create businesses for a whole lot of people. And of course, the exports, let's not rule out, because there is a separate thing for cargo that this airport has made a provision for.
Right. So the holistic development is a key byproduct of the airport being built in such a strategic location. But Mr. Avatne, as Mr. Bhargava highlighted, that he sees high potential and expressed confidence in a flock of airlines coming at NMIA. I'd like to ask you, just for the benefit of our viewers, to understand what exactly are the challenges when such a transition happens, and how do you think this is going to happen? Is there going to be a fresh line of airlines that would come with a fresh batch, or are they going to divide their operations between the two airports? What do you think the strategy would be?
So, different airlines will have different plans for this airport. I think, as we've already seen today, Akasa, Indigo, and how do you call it, Air India Express, these three airlines and Star Air as well, they've all started operations from Navi Mumbai today. So obviously these are domestic carriers and they will continue to fly from both the airports. What can also happen is for some international airlines who were unable to launch flights to the Mumbai international airports. These might now come into Navi Mumbai and target flights from the same catchment area that Mumbai and Navi Mumbai share. So yeah, domestic carriers, they will obviously split operations between both the airports because for a Navi Mumbai person or somebody flying into Navi Mumbai for a meeting or a work thing, it becomes easier.
Mr. Aftani,
Yeah.
sorry to interrupt you, but you mentioned that the airport would now facilitate flying of those airlines that have not been able to fly from the existing airport, which is in the central part of the city. What airlines exactly are you referring to?
Look, I don't have names, but there could be international carriers who wanted to come into India, but they never got slots because the other airports were crammed. So they can now approach the airport operator and kind of get slots if that was the constraint for them.
All right. Mr. Bhargava, I'd like to get you in and ask you what key passenger benefits does NMIA bring in phase one, especially for domestic flyers facing overcrowding at the older airport?
One can say that in the initial months, there will be a problem of connectivity. But then when you have the Atal Setu bridge, you'll have a metro connectivity, you'll have even waterways, water boats you've taken from that place to Gateway of India, etc. It's a question of time. But then, as I said, always with all new airports, it happens that in the initial part, you do not plan for a large capacity. And as you go along and the capacity increases, number of passengers will get and there will be enhanced connectivity. So one negative factor, because it is away from the city. And as we have often seen, all airports are essentially created away from the city, but city grows closer to the airport as you go along. So this is a limited, I think, restricted factor, maybe for a year or two, that you will have connectivity issues. And that's why the significance of airlines splitting their operation from the existing airport and the new airport that they have. Because what it impacts is when you have capacity restraint, the fare differential comes in very often. And then you find, okay, this is closer to the cities or the fares are higher. And in the city, which is far away, fares are lower comparatively, putting this way. But then, as Ajay very rightly said, at the moment when airlines approach the government of India for enhancing their capacity into India, in and out of India, the government does not look at Mumbai currently because of the capacity constraint congestion. Now that the congestion will be taken care of, you will naturally have more airlines, not just new airlines coming into India, but also airlines adding capacity.
Bhargava, I again have a follow-up to what you said, and you actually make some very interesting remarks. Yesterday, I had the opportunity to speak to some experts on how easy is it for India to welcome airlines, and not just welcome them, but help them sustain on Indian soil. Because since 1995, if you go back, we have seen about 18 airlines fail. And very recently, Ram Mohan Naidu, the civil aviation minister, he announced going to Platform X that he's been meeting teams of 3 new airlines, 2 of which have already gotten their no objection certificates, one being Shankh Air out of them, and Al Hind as well. I'd like to ask you, is India ready to now not just welcome new airlines, but also help them sustain on Indian land? And if not, what are those loopholes that you see that needs to be fixed on an immediate basis?
It's good of Minister to say that there is provision for 3 more large airlines to come into India to break the duopoly of IndiGo and Air India, Tata Airlines. The reality is you really cannot bring an airline and it can't muster support or get a market share of even 2% or 3%. Take the case of Akasa and we can review it. A good airline, but has it been able to muster the market share? If all that it has got is thanks to SpiceJet, whose market share has been dwindling. IndiGo is unlikely to yield ground. Likewise, Air India. Air India, of course, has in the recent months cancelled a whole lot of international flights from their their operations. But for a domestic player to come in a market with high taxation, high landing charges, high parking charges, high airport charges, let me add this also, you are unlikely to see a new airline survive. And the reason why 18 airlines, including mega people backed by Naresh Goyal, for example, Vijay Mallya, etc., could just survive? The fact is they never made profit. It's a low-cost model that India needs, and if the more low-cost come in, and of course these new airlines we are talking about are low-cost carriers, but for IndiGo to yield ground, considering that they've already placed orders for 1,000 aircraft to take care of future growth of the Indian market. Likewise, Air India has placed orders for 570 aircraft to take care of the future growth. Now, how is anybody going to grow? And unless you have some volume scale of operations, you cannot break even in the aviation industry. It's a tough industry.
That's exactly my point. Thank you so much for giving us some reality check on where India's aviation landscape currently stands in terms of sustaining airlines. But Mr. Avtani, how might NMIA improve connectivity to underserved areas in Maharashtra and beyond through its initial domestic routes? Because we've been talking extensively about how its multimodal transport facilities is going to enable transport from different locations within Mumbai and Navi Mumbai. But what about its strategic location and the significance of it in connecting other areas, not just in Maharashtra, but beyond?
So, one of the interesting things about the location is that this is almost centrally between Mumbai and Navi Mumbai. So one of the impact of this is going to be that Pune, which does not get enough connectivity of its own. Now, the people from Pune don't have to come to Mumbai whenever these new flights internationally and domestically start. They also have the option of taking a flight from Navi Mumbai in case that is served by the destination that they want to fly to is going to be served from there. So that's one point on the connectivity. And also, I was reading this morning that a lot of at this point of time, a lot of bus services are being started into the neighboring areas, which can also, again, connect a lot more people. People who had to take cabs, to drive down to Mumbai, and they can now kind of just take a bus or still get a cab and come into Navi Mumbai, which is closer to them at this point in time. Over a period of time, obviously, as the new options of connectivity with the airport are established, there'll be a lot more people coming in because, this is a greenfield airport. And there is hence a lot more capacity here to accommodate passengers. And again, this is closer for a lot of regions of Maharashtra as compared to the, Mumbai airport, which is like right at the tip of the island city, sort of.
Okay. Great point made. Thank you so much, Mr. Ajay Avtani and Jitendra Bhargava, for giving us your insights into this milestone for Mumbai. Of course, there are areas of more development. There is scope of further expansion, but one can't ignore how strategic and important Navi Mumbai International Airport is, not just for Mumbaikars, but also for the country at large. But viewers, Navi Mumbai International Airport is now open for business. That matters, bringing faster travel, reducing congestion and fresh hope. From the first IndiGo touchdown this morning to the promise of 90 million passengers in the future, NMIA has the potential to be a game changer for travelers, businesses and the city. And on that note, viewers, it's the end of this edition of Profit 360, but I do urge you to continue watching NDTV Profit as we bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves...
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani and we're going to talk about two very interesting topics today. The first one is an interesting one because for many Indian families, the biggest uncertainty around foreign education today isn't admissions or rankings. It's the rupee. We've seen how rupee has been depreciating, and as a currency swings, reshapes costs, studying abroad is no longer just a career decision, but actually a financial one tied closely to exchange rates. So how much of the rising bill is really about the rupee, and how should parents plan when currency stability itself feels uncertain is the kind of topic that we're going to address today. And to talk exactly about this, we're joined by Karthik Javeri, who's the Director Investments at Tanzan Capital, joining us now. Karthik, hi. Thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is that how much of the rising cost of the foreign education is now really about the kind of rupee depreciating?
Firstly, thanks, Mahima. Thanks for having me there. In my last 25 years of interacting with so many parents, and we've been sending children abroad, and we've been planning education, etc. It's a very important consideration. But the fact is that rupee has been on a decline and kind of a depreciation all the way since the time we got our independence, when 1 rupee was equal to $1. So since then to now, about more than 75 years, we are at a situation where we see ourselves, with 90 rupees and buying the same dollar. So somewhere I think this is ingrained in everyone's senses that rupee is going to continue depreciating. We have to budget not only for that, but budget a little extra over and above the cost. And depending on the duration of the course, if it's a slightly longer course, if it's not the 1-year courses, then and anything longer than that, 2, 3, 4 years, we automatically take a little bump up in what we would expect to spend. So parents do that. And there's a very important consideration that everybody puts to the depreciating rupee, because we don't see our rupee appreciating really in that sense, do we? So I think it's a part of our life. We have to live with that.
Yeah. So 2026, what is the trend that you anticipate? Because you did mention that this is here to stay, right? So just want to understand long-term trend. What is it that you're seeing? Do you think that the rate at which it's been depreciating will reduce versus how it's been in the past 1 year? Or what is the trend looking like?
So we did a study, since 1947 onwards till now. And we found that on an average, it's about 4 to 4.5%. That's been the rate of depreciation of the rupee. Now, in some years, the depreciation is a little faster. Means we've even gone down to 10% plus in a year, single year. But there were years in which we did not go down much. We were reasonably stable. So we were at about maybe minus 1% or just about stable there. So in that sense, it's an average of about 4.5%. The rupee has recently depreciated in front of us. So I think 2026 should be stable. And the reason I say that is because, the corporate earnings, government earnings, everything is absolutely intact. And even the current depreciation is not due to anything wrong with India. It is more to do with geopolitical reasons and tariffs and all those kind of, things playing in our background. But Indian economy per se is strong, is resilient, is moving forward. And there are no negative surprises in terms of GDP growth or tax collections or GST collections or any of that. So I would think that we will have a stable 2026.
Okay, so Karthik, if somebody as a parent is planning to send their kid to the US or maybe any part of this world, I'll say US specifically because we've been depreciating against the dollar. How should one go about it? What should be the checklist? One thing, and like you mentioned, right? If it's a 1-year course, might not be that big of a concern. But if it's a good 5-year course, how should one go about planning it?
So in our experience, we've seen that people don't actually plan because the maximum, in terms of foreign exchange and, management of forex rates, we of course plan, we of course help people to save up money, to accumulate money over many years, because even the original, say 10, 15 years ago, the original time when we started investing, we would automatically budget for about an 8% inflation, slightly higher than the Indian inflation. So if that is one thing that you keep in mind, because remember, the inflation being 6 or 8%, is purely because 4% is rupee depreciation. And then the foreign inflation may not be as high as India. So the foreign inflation could be 2%, 3% if you look at countries other than America. But these days, American inflation itself is high. So if you kind of make your projections for new parents or parents who are planning to send their children 10 years hence, etc. Maybe you want to work with an 8% inflation rate on an annual basis for your funds. So if you plan on an incremental 8%, then you will know that if you were to spend 1 crore today for your kid for 1 year, how much would you actually land up spending maybe 10 years or 15 years ahead, in that sense. So I would think 6% being aggressive, 8% being actually conservative. If you work on an 8% number, it's nice because then you will not get any rude shocks or surprises.
Interesting. And a lot of people, go through the debt route, right? So just want to get a sense there as well as to how should that planning be done. Let's say if a person has the capability to pay off, let's say 40% of the fees or 50% of the fees, and remaining the person is taking a debt. How should that planning be like, considering the rupee depreciation also into consideration?
So, Mahima, unfortunately, we can't do much to control the rupee depreciation. We cannot book forward contracts and education loans, etc., so that, we can hedge or protect ourselves from from adverse interest rate movements, forex movements against us. But what we can do is use bank finance. Because what happens with bank finance, of course, you pay it to the extent that you want to. And if you're comfortable with the idea of doing bank finance, then I think it's a great idea. Because you can get education loans as much as, up to even $100,000 or more, depending on the tuition fees. And then you're going to send that to the child over a period of time. The interest rate, the interest rate in India, the growth rate in India will more or less take care, because your investments would assume, we assume that they will earn much more than the incremental forex rate. So on the foreign exchange side, you will have to pay 4% more. But if your investment in India is generating, say, 12 to 15% in equity, then net, you are still moving up by about 8%. So which is not bad. If you are in a very conservative fixed deposit kind of a scenario also, say about 5% or so returns post taxes, and you will still have a slightly incremental positive cash flow. But I would think an equity investment for your personal funds, bank finance on the other side, bank finance where you cannot control the foreign exchange rate, but your investment growth rate being much higher than the depreciating rate of the rupee. So if you think in that sort of sense, then you'll be very happy with your planning. And definitely, I would say go with the loans, because then it gives the child also a sense of responsibility. Plus, you can break it down into EMIs if your assets don't permit at the moment to pay lump sum. So try and use bank finance. I think it's a great idea. And limits are good. You get good limits.
Interesting. And so you did mention that taking loans, of course, is is good in terms of where responsibility stands in terms of for the kid, of course. But considering financial decisions into picture, do you think paying off the fees earlier would make sense, considering that the trend is here to stay because of dollar depreciating?
So, Mahima, that has two angles to it. One, I may be prepared to pay fees in advance. Now, is the university on this other side prepared to receive the monies in advance? So that's a very big consideration. Mostly, that facility is not available. So that option is not really feasible and possible for us to do. If you, for example, have a bank account, or if you have a trust, which a lot of very wealthy families do, who have number of students from their house, from their family, extended family, maybe they fund these kind of structures where they already transfer the money, but then the money sitting there is of no use. It has to be again invested to put at some use. Then you are insulated against the foreign exchange movement. But then if the money is just sitting in the bank offshore, even that's of no great help. So, that's a much different and a complex sort of an argument to have. But in the very simplistic sense, should you pay in advance? A, you should have the money to pay it in advance. And B, if you have the money, does the university on the other side happily accept advance payments from you? Normally, they don't. They want the fees to come as per the schedule. So, even our Indian schools don't have a prepayment option. So I would think, I wouldn't be surprised. But then there might be university. There might be some who accept. But mostly, I don't see this facility available.
Okay. One last question to you, Karthik. Do you think that the overall picture before making this decision whether to send your child abroad or not right now has become more a financial decision than a career decision?
Oh, absolutely not, Mahima. Absolutely not. Because the ones who want to send their children abroad and the children who want to go abroad for education, it's a matter of personal and family choices. Personal choice for the student, family choice for the family together that our child must study abroad. So they only make this choice because they know they have the funding or they can arrange the funding over the next 3 to 5 years. So there is no consideration. I mean, financial consideration, even 20 years ago was not a criteria. Even today, it's not a criteria. You broadly know if you want to do it, this is what the cost is going to be. The costs assumptions are very easily available. Foreign universities very clearly display the cost structures. You can, you can plan for it now, or you can plan for it 10 years later, depending on where the child is. But and fortunately, I would say parents don't give any consideration to the foreign exchange movement. Yeah, I think they are valuing the education there and the inputs that the child is going to get much more over the little extra financial burden that they are going to have. In any case, we all budget for about 10 to 15% extra. So over and above the whole cost. So I think no parent worries about this. Financial criteria is not the criteria. I mean, the choice is to study abroad. So.
All right, makes sense. Makes complete sense. Karthik, thank you so much for giving us those insights, and I'm sure our viewers will find this very helpful. So thank you so much for taking out the time and giving us all those insights.
Thank you for having me. Pleasure.
All right, so we did see how depreciating rupee has been affecting the overall decision of whether your child will study abroad or not. But the next conversation is also an interesting one. As 2025 comes to a close, it's been a year of uneven returns and wide divergence across funds. So, heading into 2026, how should investors rethink fund selection and portfolio construction? My colleague Alex spoke to Himanshu Kohli, co-founder at Client Associates. Let's listen into that conversation.
As you look back at 2025, you will notice that these broader market funds have not done particularly well, and that's why a lot of people are complaining that their portfolios have done nothing. Is that likely to continue into 2026, or do you see a change happening?
So Alex, yes, 2025 has been a difficult year. One, there has been a lot of uncertainty. So Mr. Trump came into power sometime early 2025, and overall there has been an uncertainty. If we see broader asset classes, equity has given a suboptimal returns compared to what it is supposed to give. But within that also, some of the broader market funds, multi-cap funds, they have underperformed because one, mid-cap and small cap was slightly overvalued. While large caps, they were reasonably valued, and large caps have done better in this year compared to small cap and mid caps. And as a result, you have seen some of the large cap funds doing better than the multi cap funds or a mid cap, small cap funds also. So I see this was the year of uncertainty. Gold and silver have been clearly outliers. International markets, certain pockets have done very, very well. India, which was performing so well for last 3-4 years before the beginning of this year, has underperformed this year. And some of these multi-cap funds where there is so much of liquidity coming in thanks to SIPs, they have become more of money managers and just accumulating the AUMs, but underlying performance is becoming weak over there. And I would say I still see mid-cap and small cap slightly in the overvalued zone. And this SIPs to continue. So I like the funds which have a certain reasonable size, which can do justice with the clients' portfolios. And there are certain pockets which are beyond mutual funds, whether it is PMS or AIFs. They can do far better by being slightly more concentrated and also controlling the tap of money inflow and outflow, because that is something which can really create alpha for clients.
But I don't want to restrict Himanshu to mutual funds purely because the people that are tuning into this program are primarily retail investors, and those are the ones that seek the advice the most. So if we restrict ourselves to the mutual fund space, are these trends likely to continue into 2026, or do you see finally that there is a possibility that small cap portfolios, that mid cap portfolios start performing again?
Right. So if we see, there are certain indexes somewhere at the highest level, but number of stocks which are away from their all-time high, they are number of stocks which are away from their all-time high are very high numbers. 70%, 75% stocks are away from their all-time high. They are about 10%, 20%, 30% below their all-time high. Good thing what has happened, Alex, is last 1 year has been a time correction period. Earnings have grown, and now we are seeing the earnings coming back into the system. Second quarter was quite encouraging. Third quarter will be even better encouraging. And next 3 years, we expect the earnings to grow by about 11 to 13% of the broader markets. Now, if that is the trend which continues, I see 2026 will be a better year. One, because valuations have become far better than what they were last year or the beginning of this particular calendar year. And second, if earnings growth starts happening, performance will start coming back. But I will say go for certain funds which are not too large size. If you're going for a large cap, then size may not matter. But if you're going for a multi-cap or a mid-cap or a small cap fund, maybe go for a fund which is between 1,000 to 3,000 crores. Beyond that, it becomes very difficult to create alpha for the fund manager also.
Okay, fair point. Now, given what you've already said, which is that there is still a little bit of a concern on valuation even in the broader space. But the argument can be made that on the large cap space, at least there's a little bit of comfort even as things stand right now. Would you say that value will still maybe struggle a tad bit in 2026? That in any case, momentum has been missing completely in 2025. Some parts of that might come back in 2026. What are the styles? And I know that it might be too simplistic to say this one will do well, this one might not, because you will have fund managers that use a blend of a couple of these. But what, in your opinion, is the bent of style or strategy that could potentially do well in 2026?
So I would say, Alex, a lot of times we have seen you're driving in a lane and the lane stops and you want to just jump off the lane. And by the time you jump the lane, maybe the earlier lane starts moving. And then you realize you made a mistake. Had you not shifted, it would have been better. Only way you should change the lane is if you see fundamentally there is something wrong. Let's say there is a car broke down in front of you and that is not going to move. So then you change the lane. Similarly, in investment also, a lot of people, they see this fund has not done very well, or this deal has not done very well last 6 months, 12 months. Let me just change the lane and go to the best performing fund. By the time they shift, that fund stops performing or starts underperforming. And the earlier one starts outperforming or starts performing.
That's such a great analogy, Himanshu. And so therefore, let me ask you this, which is ultimately the crux of the conversation, right? Which is that just because something has underperformed in 2025, and there are some that are rank underperformers. I was looking at the performance of flexi-cap funds over the course of 2025, and there's one or two relatively new entrants that have a 19% decline. And that just goes to show that you really have to buckle up if you've chosen wrong, right? And trust in the process. But having said that, there are still some metrics that you would look at, Himanshu, if you were to judge a portfolio, and you probably have less mistakes than a retail investor would make on their own. But what, according to you, are the 3 or 4 metrics that would tell you that you should either stop an SIP or fresh investments into a scheme and let it be, or 2, pull out entirely?
Right. So I would say one, only reason to change will be if there is some change in the team or the core fund management expertise has changed from there. Second would be if there is something which is not right with a particular institution, then you should look at it. Otherwise, what are the factors, 3 most important factors which I give importance to? One, what is the rolling 3 years performance of the particular scheme? Not point to point or last 3 years, rolling 3 years over last many years, which gives you consistency of the data. If the manager or the scheme is in the top quartile most of the times, and between the top 2 quartiles 90% of the times, one should just stick over there, even if last 1 year they have been underperformer, but consistency will come back over there. Second, I would also say, what is the return per unit of risk which the scheme is giving? Because there are 2 R's which are equally important. In fact, returns is something which everyone looks at it on a day-to-day basis because there is a movement in NAV. But what is the risk, which is the other R, which is equally important. So what's the Sharpe ratio which the fund manager is or the scheme is giving for per unit of risk which you are taking? What is the return they have delivered? Or maybe the alpha which they have delivered consistently over a period of time. Third, I would also like to see if one fund manager, let's say, be a top performer, but in certain years or certain 3 years period, they are basically the bottom quartile. Try to avoid someone who is too volatile in their strategy. Try to bring in more consistency. So Sharpe ratio, alpha, these are very important parameters. Are they consistently in the top quartile? And yes, if they have been showing consistency in the top quartile, there is a possibility they go into the second quartile also sometimes. But if they are too often getting into the fourth quartile also, avoid those schemes. But yes, if the lane has stopped moving or it has not done well in the recent past, last 6 months or so, unless there is something fundamentally wrong with the lane, don't change the lane.
And a Sharpe ratio of above 1 and sometimes heading towards 2 in the case of true outperformers is a great metric, right? So, but having said that, Himanshu, I do want to also ask you, we're heading into the last quarter of the year, financial year, and this is an opportunity to correct mistakes that you might have made in your portfolio selection, right? For more reasons than one. And one of that is that the tax laws allow you to have gains of 1.25 lakh in long-term capital gains in a year that is tax-free. So you can actually book out something that you've held for a long time that has been underperforming, right? And the metrics that you decided are important. Alternatively, you can even book a loss. You can book a loss and you can set that off against future gains. So the question is, should you do that, or should you only pause your SIP and continue in another scheme and shift your allocation?
So first of all, Alex, if you stop and book a loss, just see if there is any exit cost or exit load which you need to pay. Second, you need to see if there is any capital gains which is adverse, which means it's any short-term capital gains. But if that is not the case, and you can stop the SIP, and sometimes booking a loss is better rather than booking a short-term capital gain. So if there is a loss which has happened and you have chosen a wrong scheme, and there is something which is not fundamentally correct, whether it's the consistency of rolling returns, or whether there is a change in the fund management team, or there is some inquiry happening against a particular institution, and you feel fund management team will be busy addressing those queries rather than focusing on the performance, I think maybe cutting a loss and setting it off against the gains will be a better thing. Because sometimes booking a loss helps you save taxes. So saving taxes is as good as money earned also over there. So I am all in for it. Fundamentally, just see if something has gone wrong. Doesn't mean that you don't correct it right now. Even if it's a loss, do it, provided you don't end up paying any exit penalties over there.
Okay. Final thoughts, and this is simply the advice that you're giving to your clients and your mutual fund clients specifically heading into 2026. Any ideas that you like, any sectors or themes that you might want, and this is purely from the perspective of tactical or satellite allocation?
Right. So I would also say, if there is a feeder funds option which is available, that you can diversify beyond India. Because there is so much of good work which is happening in technology and AI, whether it is in China, whether it is in US, whether it is in Taiwan, and certain markets have been undervalued for quite some time. If there is a feeder fund option available and you can do your SIPs over there, please bring that as a part of the satellite portfolio, besides your core portfolio, which is going to be between the large, multi, mid and small cap within India also. Because howsoever India is an attractive basket, putting all your eggs in one basket is not the best of things. If you don't want to look at beyond India, maybe certain sectors which have not done very well, let's say private banks have not done very well, maybe look at doing a SIP into a banking financial services sector also, and build it as a part of the satellite portfolio with a 3 years view.
Okay. All right. On that note, Himanshu, thanks so much for taking the time. I wish you season's greetings from all of us at NDTV Profit, and speak to you really soon.
Thank you. Thank you, Alex, for having me over here. Thank you.
All right, so that brings us to the end of this edition of Your Money Matters, but do stay tuned. More news and updates on the other side.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Yeah.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today on show in KYC there is a very important company in this agro space, but I'll let you guess which this company is. It's an agro pesticides manufacturer. Also, looking at the stock itself, it has recently did a stock split and a bonus issue. and the stock is up more than 30% in just last 1 month. The company's name is Best Agro Life, and that has actually caught my attention, and a lot of viewers who look at KYC and they have stated to look into this company and to see whether this company is worth the up move or not. The first question is, will the sales actually do well in Q3 as well, or this impact will continue to happen because already they stated that in the Q2 numbers? That's the first question we'll be asking the management. Are there any recovery expected in the bulk sales? Is the management walking the talk? That mentioned that in the Q2 con call. So that's what we'll ask the management again. And what is the launch pipeline for the patented products? That's where the bullish sentiment is there, which the street is expecting, especially in H2. The fourth question is, what are the debt reduction plans? Already I saw the debt reductions are coming down. It's almost 0.5 debt reduction level. So will this actually come down more? And also any international expansions on the cards? That's what we'll ask the company. Apart from non-LATAM or the non-American regions, which else regions are they finding value going ahead? And that is going to be very much important. But Best Agro Life, let's just ask about more questions about the company, what this company is all about. Of course, it is a pesticide player itself. It is having some patented technologies also. So let's just make you understand what the company does. My company manufactures agrochemicals, but to just give you a perspective, the space has been under tremendous pricing pressure, and also the seasonality of the rain season, especially for domestic players, has been on the negative side. They have roughly 9 patented products. It's just on the start when it comes to the patented products, and they're supposed to have higher levels if they want valuation premium in the market. And the branded institutional sales, that's the breakup coming in. Branded is roughly 69% and the institutional sales, that comes in at 31%. Also, let's pull out, apart from the branded and the institutional, there's the contribution of products, how things happen. And largely in Q2, the number has been on the lower side. If you compare it with the Q2 FY26, that's 38% of sales has happened from the patented segment. And when you have a patented product, of course, you command a higher margin in a business like this. And also, you have a bargaining power. Non-patented products, they are a bit commoditized. And the sector itself, if you look at it currently, is going under a big pricing pressure, and the Q2 numbers have been on the weaker side. Now you must be wondering, the stock is up 30%, why? So we'll try to break it down why it is up. Of course, one of the main and the key reasons would be coming in is the stock split and the bonus issue announcements, and that is where the interest has actually come into the markets. So maybe it's a demand supply situation, because fundamentally also we need to judge the company. That's why we are having 8 of these parameters coming in: income statement, balance sheet, cash flow, return ratios. These are the 4 basic numbers which you should actually look out for. Apart from that, even shareholding, street cred, valuation amongst its peers, that's something which we will do for you. And also the outlook going ahead. Is it mixed? Is it good? Is it bad? We'll get you all the details. Out of these rating parameters, which are 8, we'll give our rating. The first one, that is the income statement, and we'll of course get you the numbers, how it's actually panning out. The 3-year CAGR for the revenue, that's a decent 14%, but my concern starts coming in when it comes to the EBITDA and the margin fronts. Nothing much happening. A company has given a target of 13 to 14%. So the question is, will that actually bounce back, in the H2? That's something which we'll ask the company. Net profit, there are some issues. The Q2, largely the numbers which had come in sequentially, the numbers have done well, but when you judge the company, especially a fertilizer company, you should do year-on-year basis, because there is a seasonality impact to it. And look at these numbers here: revenue down, EBITDA down, margins hit, net profit down, and that's where the concern starts coming in for me. Because of that, I'm just getting the short-term as well as the long-term numbers. I'll be giving this a total setup, a kind of a neutral rating, but there is some hope here. 15% coming in, and they're expecting that to be around that 13 to 14% odd mark. So there seems a hope, and if that has bottomed out, maybe we can see some kind of help in the margin front. But net, my view still remains kind of, neutral for the income statement. Also, let's move to the balance sheet segment, how actually that is panning out. And largely we see the book value that has gone up on the higher side, but the borrowings, that has largely come down, and that is why my comfort comes in the debt to equity ratio. But the concern is, of course, they're on the working capital front, because it's a very highly working capital business, and over here we see that the Q2 numbers were on the weaker side, Q1 also, and largely Q3 is supposed to be a good quarter for these companies, but this time the company has itself stated that the sales will be impacted. That means these numbers might see some more hit coming in, and because of that there are two divergences happening. I will give a neutral rating when it comes to the balance sheet. The third one is the cash flow segment. This is also very much important, and remember, a company like this will always have kind of, you could say, a very divergent cash flows coming in, because this is the nature of the business. There is lumpiness, there is seasonality involved, so that is something we'll be looking out for, and no clear trend actually comes out. Of course, the operating cash flow for September, that has done well. That's, you look at that amount, 228 crore rupees. PAT, that has come down, and I mentioned you there has been inventory hits coming in. Now whether this reversal happens in Q3 or Q4, that's something which time will say. The cash flow to PAT numbers, they are decent to actually get you in. Net cash flows, it's very divergent, but net I would say the upper numbers have been very strong. At least this seasonality impact which has come in, and because of that I will give a good thumbs up or for the cash flow segment. But return ratios, that's also my concern. Generally a 15%, when you look at it, it's a very decent number to actually look at for a company like this, and had this been on the higher side, I would have actually given a good thumbs up for it. But see, the reduction has started happening in from 26%, it's 15%, and then these numbers is going down to 13%, and that's where the concerns are happening. And because of that, I will be giving a thumbs down when it comes to the ROC, the return on capital employed numbers. Now let's come and show you the ratings, how things actually move when it comes to the overall shareholding, how it's actually coming in. Largely looking at the shareholding, we see not much change happening. The promoters, it's maintaining that 50% mark. FIs, there is a concern. It was 9%, but then it has come down and it's almost 6%. DIs, nothing much change, but institutionally the participation has gone down, and retail participation, which was 41, has gone up to 42%. So because of the institutional participation slowly coming down, I would be giving this a thumbs down, and that's why shareholding pattern, we can see there's a red mark happening. Street cred, that's a very important trigger, and largely the stock came into my interest because it spiked up almost 30% plus in the last 1 month itself. But apart from that, let's look at how other numbers have panned out. Last 6 months, it's 22%, and then the last 1 year, it's down 37%. That's very concerning. So if you're a shareholder for more than 1 year, that's where the stress starts coming. That's where your patience in holding the stock is getting tested. Last 5 years, let's see what has happened. It's decent, 73%. That's not a problem. So because of the divergence coming in, 5 year, this has been good. 1 year holding, this has been really big questionable investment. But last 1 month, that's where the interest lies for the market, and it's a very forward looking setup whenever you come and invest in the market. So I would be giving this a neutral rating when it comes to the street trend or the share movement. But apart from that, let's see the valuations, because the company has two types of peers. One is of course the larger peers in the agri-pesticide segment, and ones are the smaller ones who are domestic focused. So I'm going to get all of them to give you the flavor. Where does the valuation stand? And these valuations are 12-month forward P ratios going ahead. Best Agro Life, remember the word, it is 16 times FY27 P. But now let's see how the competitors are faring, and we could just show the UPL and PI Industries again, and we see here it's almost 19 to 20 times. It's on the expensive side, but remember, they do command this premium in the market because of the sheer strength and distribution. Let's see the local players, how that has actually come in. And these are the local names, Dhanuka Agritech and Sharda Crop. They are largely similar, when it comes to their valuations. Not much changes happening. And remember, all of the industry valuations are on the lower side. There has been a significant correction. So most of them are showing some kind of strength and maybe a valuation comfort also if you want to play a short-term technical bet on this theme as well. But net, be it comes to the local peers and the valuations from the steep corrections from the highs, I would give this a neutral rating when it comes to the valuations. But now we are done with 7 of the rating parameters. The 8th rating parameter is also very much important. That's the outlook for the company. They're anticipating a lower Q3 sales number. They have mentioned it already. There's a change in the sales strategy and some adjustments as well. They're expecting a 13 to 14% EBITDA margins in H2, and that's a decent one. They have come out with almost 15% in Q2 itself. Patented sales, that's likely to improve from December onwards, and that's very much important. It contributes high margin push and also a strong momentum for other sales profile as well. Exports area growth expansion, that's what we'll be looking at and asking the company which are the geographies and by when these benefits will start coming in. So net we can say that we have given this outlook a kind of a neutral rating going ahead, but let's just give you the entire picture what we have done over the last 8 to 10 minutes and analyze the company itself, and let's just show the 8 parameters which are there. Largely for the income statement, balance sheet, it has been a neutral rating. Cash flow has something which I show some improvement in parameters. Return ratios were disappointing. Shareholding, the institutional participation has gone down, and street trade valuation and outlook, it's there, but is it fully there? That's the question, and that's why I've given a neutral rating when it comes to this space. And overall for best agro life, it's on the lower side in my show KYC. It's 3.5 out of 8 I have given to this company. The stock has of course done really well over the last 1 month or so, but can this move sustain, or this is just a demand supply kind of a move, because the more shares will be available for the retail as company has announced a bonus as well as share split. So we'll discuss all these questions and we'll be joined by Vikas Jain. He's the CFO of Best Agro Life. After the break, stay tuned to NDTV Profit.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. We are now joined by Vikas Jain. He is the CFO at Best Agro Life. A very good afternoon to you, Vikas. Largely the stock has done really well over the last 1 odd month, and there has been an announcement. There's a bonus coming in and a share split also. What's the rationale for this? What is tempting this company to do this right now, especially after a very weak quarter in H1? Why this reward coming to the shareholders?
Yeah, so I think as you had shown that since last 1 year there was little downward trend in the price of the shares. So we thought it would be a good option to give certain benefits to the shareholders. So that's how we thought of doing the splits and bonus now.
Right, but Vikas, this is just for the shareholders, but fundamentally let's go back to how you have actually placed the company in Q2. There were concerns on your Q3 sales number, and you had mentioned it in the investor presentation itself. Now we are almost at the end of Q3, and I want to know about this numbers, the sales. Will that be as bad as what it was last time in the con call in Q2, or now has this actually improved?
So this year we are going to improve, and the last 2 years, where in the H2 we were into generally losses. So this year we had tried that we'll not go into losses. We had changed certain policies this year, resulting in a lot of reduction in the sales return. So we wanted to improve our market share. So we had done a lot of sales earlier, and in H2 earlier years we used to take back a lot of sales return. But this year we had changed our policies to ensure that we are not taking huge sales return and to ensure that not getting into losses. So more or less the policies have worked. We have been able to reduce our sales return by more than half, and hopefully we should be, so this is the beginning of the Rabi season, we should be able to see good sales resulting into not huge profit, but at least will ensure that we are not into losses.
All right, but will this impact happen in Q3 or Q4? That's what the street wants, because Q3 is already largely discounted, but you had pointed out is going to be on the weaker side. So will the benefits actually move to Q4 going ahead, or we can see some respite in Q3?
So we'll see respite both in Q3 and Q4. As we mentioned earlier years, there were huge sales return, which this year we have avoided, and also there were other factors, like 2 other factors wherein we wanted to drastically reduce our inventory levels and to improve our cash flow. That also we have been able, we were successful this year. And the third point which we had took ourselves to reduce was the OPEX. If you see our OPEX for 6 months, we had reduced a good 13 to 14% of our OPEX, and the trend will continue in Q3 and Q4. So this should give us benefit and ensure that we are not into losses in Q3 and Q4.
All right, you mentioned, Vikas, about the reduction in OPEX. Now, if that happens, you have given a 13 to 14% EBITDA margin target for H2. Will it remain the same? 15% I think I was in Q2, and you are expecting 13 to 14% in H2. Am I right with this, or would you like to change your margin outlook guidance for H2?
So prior to September, our initial guidance was that we would be achieving close to 15% EBITDA for full year. It was not for Q2, it was for full year. But due to the excess rainfall which has happened throughout September, continuing in October, and also a lot of flooding had happened in mostly north part of India, we had reduced our numbers to 13 to 14%. So we are hopeful to get 13 to 14% EBITDA for full year by the time we close Q4.
All right, so you are sticking with what you had stated earlier in Q2, and no major change has actually happened over this last 1.5 odd months. But Street is also looking at an important commentary which you had given. So of course the management will be joining us in some time, but I just like to point out to our viewers, the stock itself, they have given a kind of a good guidance going ahead after taking a big beating in Q2 when it comes to the numbers, and the management is keeping and reiterating their guidance going ahead. Now, why you are seeing an up move in the stock? There are 2 reasons for it. Shareholders are getting rewarded in terms of bonus and share split, and when this happens, because the number of shares that also goes up and share split also increases. So what happens is larger retail participation also comes in, and right now also the valuations are depressed for the industry and for the company as well. That means we can see some more smart money buying or HNI buying happening in this segment as well. And slowly, I just like to know one more thing is that the bulk sales, that is something which we are looking at where there can be a good up move coming in from the month of December as well. This company also has patented products and non-patented products. Largely from my analysis, the patented products are still on the lesser side. And now that expectation, if you look at it, they can be looking at growth over there. But now we are joined back by the management. Vikas, the bulk sales, I was talking with our audience that from December onwards, that number has to go up, and that you had mentioned it also in the con call. So we are in the end of December, and bulk sales recovery, have they started coming in, or some sales strategy or recognition strategy is actually impacting the December numbers?
So with respect to patented and bulk sales, our endeavor was we are going into a high level of innovation and to get R&D products. So since last 3 years, we had launched 9 patented products, which is pretty difficult in this industry. So these 9 products, along with 3 products what we had introduced, had ensured that our portfolio from these patented products in the branded has gone up from 35 to 50%. So this year, we have increased our share of these patented products, and going forward, our endeavor is that we should be hitting or continuing this 50% of our patented products from the total branded products. So this will ensure, or this will result in a lot of reduction in other generic products, but ultimately the profitability, gross margins will improve because of this policy. And on the bulk sales and the technical sales, what we had been reducing since last 2-3 years, again, this year we have not been pushing too much, but the plan is to improve on these technical and bulk sales as well next year. So next year you will see a good amount of growth coming. This was more like a stabilization year. We wanted to control various things. More or less, we have been successful in doing that. So next year you will see not even the improvement in the bulk tech and bulk sales, but also improvement in margins because the share of the patented products is increasing each year.
Because for the viewers who are hearing for the first time about your company, if you could just help us divide, the patented sales, technical sales, bulk sales, what are these actually there in your industry? It is theoretical, but our audience who are listening for your company for the first time, what you are all about, if you just give us that kind of a breakup.
So just to explain initially about all these sales, so for our industry, there are different kinds of way we sell. One is the technical and the bulk, wherein suppose, for example, if we have a technical plant, so we import raw materials, and for various products, we do a lot of backward integration. We produce technical. So this technical can be sold to other competitors who will finally make it into finished goods and sell into the market. So this is the technical part. Then formulate is wherein we produce fully for on behalf of other companies. We white label, in other words, it's called white labeling, wherein we give in their brand. So that is a bulk sales. So this is technical and bulk where we sell to the competitors.
Correct, because that's an interesting point you've raised. Your debt reduction and international expansion plans, if you could just give us highlights of both of my queries, debt reduction and international expansions.
So international expansion has been going on pretty fast. We have applied for our products, especially our patented products, in many part of the world. And we had also recently incorporated an entity in Mauritius, which will hold those IP. So we have already started a small portion of exports this year, and the exports will pick up going forward in next 1 or 2 years. And this will become a good part of our revenue model. The other part, debt, we have reduced debt by more than 20-25% in last 3 years. And the present level of debt is more or less sufficient what we see, or we might take a little bit of debt from here on. But the existing levels is a good level of debt which would continue for us to continue our branded sales.
All right, but I have an industry specific questions. Q1, Q2 inventory impact was there. A lot of companies and your peers are also changing strategies, inventory adjustments, sales adjustments. Is the international and the domestic segment, both of them, which you are catering to, has this actually moved on? The industry specifics are bottoming out, or the pain will be there?
So industry has been facing the pain since last 2 years. It had reduced a little bit this year with respect to the prices, but the effect continued because of the unseasonal, or rather bad seasonal conditions this year. So it was not more about pricing this year, but it was more about the seasonal conditions. So we feel in this industry, it doesn't happen that we suffer for a long time. So the prices more or less have stabilized, and we don't see the prices affecting next year as well. And hopefully, if the season is a little bit moderate also, the industry will improve from here on. So you are right that mostly the industry has bottomed out in this year, and there will be a lot of improvements next year onwards.
All right, the industry has bottomed out this year. That's coming in from the management, and as per my analysis also, the valuations in this sector are on the lower side. Thank you very much, Vikas, for joining in and giving your views going ahead. And that's all, folks, for KYC. Best Agro Life was in focus. Stay tuned to NDTV Profit.
Yeah.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome to this very special conversation. We are joined by Umesh Revankar, Vice Chairman, Shriram Finance. Welcome to NDTV Profit, sir. I would like to start by asking you, could you please take us through the, this largest strategic deal with MUFG, given the aspect in mind that you have sufficient fund there to push your growth for next 2 to 3 years. So what is the strategic rationale behind bringing in foreign partner at this stage?
See, basically, if you look at our capital adequacy, we are at 20.68 as on the last quarter. And since we have a borrowing from the international market, especially for bond and syndicated loan, and we have an international rating, they prefer to have a 20% capital adequacy, even though statutory requirement here is 15. So we wanted to remain above 20 all at any point of time. That's the reason we were looking at some kind of equity raise. But when we wanted to go in for equity raise, we wanted to have a long-term plan. We did not want to have a short-term plan raising capital frequently. And since we were already at 25.3, we had to have a long-term partner to remain with us for longer. And that's the reason we have raised. And when we have a strategic partner, when a large institution is coming, you can't be doing a small ticket or small equity raise. Therefore, we made a large one.
Okay. But during the press conference, you did mention about that you are expecting a rating upgrade after this deal. What is the expectation there, if you could throw some light on that?
See, basically, if I look at my rating upgrade, post the merger of the STFC and SCUF, when we became SFL, we were hoping that a combined balance sheet and the diversified portfolio will give us a rating upgrade. And it was taking its little time, and then we felt that probably now with the balance sheet getting very strong, it will be a very strong case for the rating upgrade. See, one thing is there are two things here. One, strong balance sheet itself will give us an advantage on cost of borrowing. Because the lenders will feel more comfortable with a company with a strong balance sheet. Second, rating upgrade. So there are now, we have two things to talk to my lenders, so that the credit borrowing cost coming down is steeper than what it is normally if it all had upgraded to AAA rating.
So how that the promoter shareholding after this deal, especially given the fact in mind that we are seeing the retail shareholding dilution as compared to promoter dilution, it's relatively low. So how that ratio would be post this deal?
It's basically what happens is when 20% gets added, the promoter stake is coming to 20.3, the new shareholder is 20. And the retail comes down as an overall portfolio. So it is just a mathematics number. So it is not that retail number is coming down. The proportion of retail is coming down because of the new addition of capital, which is a 25% addition. To arrive at 20, you need to put 25%.
If you could share the timeline as well, that when we could see the capital coming in, what is the timeline in the mind to seal this deal? How much time it will take?
See, basically we are going to apply for RBI approval and CCA approval. So we have kept 3 to 4 months as the timeline and the broader terms. It can come early also, because now I have seen the regulator and government are very much pro-business, pro-active in supporting the business. Supporting the business. They want to see the India's growth story to continuously to keep growing. And last 2 quarters you have already seen that Indian GDP has grown 8%. Keeping that momentum really helps.
So, given NBFC sector in mind, there are a lot of steps government has taken in last few years and measures probably that how to, boost this particular sector. Is there any expectation from your end, from the government side, especially since budget is upcoming? So, is there any kind of expectation from the government you are pushing, or you want government to sort of implement for the overall sector?
Now, I believe that government is doing the government is really doing a lot of things to build infrastructure, to bring down the logistics cost, so that India can become the export hub for in the long run. What I believe that government has to do is build a sufficient infrastructure in the rural India, because rural India, if you look at the agri-based income economy, around 65% of the population is involved in agri economy, which has 15% GDP. Definitely, the more people getting out of the dependence on agriculture and getting into some other activity or businesses or self-employment will definitely help the GDP growth to become much better. So a rural infrastructure, rural job creation is very important, and that will also help us, because we being in the rural India, we can grow our business much faster.
With this synergy with MUFG, could you please also elaborate a bit what kind of innovation and technology they are bringing on board, and how you getting benefited out of this deal on that front?
See, we are not really discussed much on what kind of a technology coming to the Shriram or to India, but we have seen their investment into various countries. They have invested in Vietnam, Philippines, Indonesia and Thailand. And they have also invested in Morgan Stanley. But what is very important for us is Asian countries. The investment, and they have built a robust technology platform. That should really help us in learning their experience. So what we can do is we can learn from them and try to get it into India, if that is really helping us to grow our reach much faster.
Assuming that this is quite a big deal for this year itself, so if you could also give some outlook for, asset of return for FY27, is there any estimation you arrive at as far as, asset going forward in FY27 is concerned, return on asset?
Yes, we have for this financial year, I don't really see a big change. We have been growing at around 16-17%. We should end up at 17% AUM growth for this financial year. But next year onwards, we expect to grow at around 20% year on year for next 4 to 5 years, because we believe that the strong capital base, lower cost of fund gives a lot of advantage for us to grow much faster.
Last question on the banking license. Of course, I asked you also during the press conference, but with a long-term strategic partner you have in place, are you not planning on those direction to have a banking license to enter into banking space?
See, you are a lender, whether it's a banker or NBFC, you are a lender. But when you are a bank, you have to have multiple activities. Savings bank account, overdraft facilities, forex, so many things are there. So we have no knowledge on the same. MUFG definitely has a knowledge in other countries. So right now, they have liked our business model of being NBFC, our ability to reach to the customers, and our constitution. Our constitution is basically vehicle financing, asset-backed lending, and creating a sustainable income. So that they liked. So they have been they are partner with this move now. So as we progress, then probably we have to look into whether we need to create a separate structure, infrastructure or not. So right now we are not discussing that at all. They are very comfortable, happy being in NBFC, investing in NBFC.
Absolutely, and I think there's no immediate plan. That's the wrap of this insightful conversation. Thank you so much for speaking with NDTV Profit, sir.
Thank you very much.
Let's take it across to Abhay Agarwal, who is Managing Director of Piper Serica Advisors. He joins in right now with his thoughts on what the markets look like in 2026 maybe. And Abhay, forecasting may be a fool's errand, but well, we're in the business of hypothesizing and then seeing if the hypothesis turns out to be correct. And you could argue that after what has been you could argue, tumultuous 2025, the stars are aligned in more ways than one for 2026 to be appearing a lot more respectable.
No, good morning, Neeraj. I agree with you. I think 225 was, I would say, a year of consolidation across most of the capitalization classes, large cap, small cap, mid caps. We saw some corrections also. But you're right. I think the earnings have picked up. The macros are largely in favor. The valuations are more reasonable. FPI flows, which have been anemic throughout the year, hopefully will pick up. So I think I agree with you. I think 26, I'm quite hopeful, will be a much better year, back to mean reversal as far as long-term returns are concerned.
Okay, interesting. So, Abhay, here's the question. When we spoke to 2 or 3 sell-side strategists / sales guys, and they said that their recent interactions / visits to the centers of FI activity seem to suggest that people are now willing to relook at India because of the 1 year of severe underperformance, what 27-29% dollar term underperformance, right? That they are willing to relook at India, or wanting to relook at India, not willing, but wanting to relook at India, selectively albeit, and the assessment seems to be that even if it doesn't lead to FI inflows in a meaningful way, it will probably lead to a pause in the incessant outflows that we've seen for a better part of 2025. Is that a trigger even if the trade deal were not to happen?
So let's start with the last point. I think a trade deal is very important, not only now from the perspective of getting a deal done, but also as a signal to the broader investor community that, look, India is serious about looking beyond political issues and entering into deals focused on getting the trade going. So I think from a signaling perspective, it's very important that we get a deal done. And I think once that is done, I have no doubts that will open up the FPI taps, because that is one of the biggest signals that people are waiting for. I think the pressure on rupee that we have seen will also ease off once this flows reverse. So without a trade deal done, yes, we would probably be slightly ahead of the consolidation zone that we have been in. But to really see the tap open up, we would need to have a trade deal in some form or fashion, whether even if it's a multi-step trade deal that evolves over 2 or 3 months, but starts somewhere. Because right now there is also this fear, Neeraj, that if a trade deal doesn't get done soon, will the US put further tariffs or penal tariffs on India? I don't think that's likely, but of course, till a deal is done, it's not done. So I'm waiting for some announcement, some positive announcement. There has been multiple stop and goes on the way, announcements that trade deal is just around the corner, multiple visits by both parties, but nothing material has happened. So I'm hoping that at some point of time there will be some ink on the trade deal document, and then the FPI flows can resume in the normal manner that they have been.
Abhay, good morning. Hira on this side. So, when you're looking at 2026, you're talking about your FPI flows. What are the special or specific indicators that you will be watching out for to confirm a sustainable return of foreign capital from here on?
So, Hiral, I think if you look at the data in 25 also, we have received a lot of foreign FPI flows. However, the selling has been higher. So I think, on a net level, we see a $18 billion outflow. So what I would like to see is going into January, February, March, at least 2 months of positive flows. They may be small flows, but at least that establishes a reversal of the trend line where we have seen multiple months of constant selling. So I think the good news is that there is no fear in the FPI's mind, the foreign investors, when we talk to them, everybody wants to look at India. Nobody has abandoned India. They want to be in India. They're not even looking at timing the market or saying that, okay, this is a good time to get in. I think all they're looking for is some, there is a unanimous view that India is expensive. So this kind of correction, underperformance by the mid caps and small caps especially will help. Also, the rupee depreciation, while against the US dollar has been about 7.5%, against the euro, it's almost 20%. So just think of a European fund that has invested in India a year ago is already sitting on a 20% currency loss. But if you flip it around and say that, look, most of that loss is now behind me, and now the currency also is at a lucrative level. So if you take the rupee where it is and you look at the market, valuation broadly, I think it is a safe zone, a buying zone for the FPI. So, but still, I would like to see at least a month and a half of constant positive flows to establish a longer term trend line.
Hi, very good morning. Tamanna here. The good thing is that we're speaking on a day when it makes sense to be positive on 2026 with the way markets are behaving. Of course, not that you're tracking everyday moves, but in your view, what do you think are going to be the winners in the new calendar year? Because some of the key themes have played out, right? Consumption boost has kind of played out. The tariff fears in that sense have receded. Where do you think that kind of opportunity lies?
Good morning, Tamanna. I think what we are seeing clearly is that this whole year and coming towards the end of the year, we have been engaging with companies in manufacturing space across the board. These are auto ancillaries, these are pharma companies, in other spaces also, electronics manufacturing, where they have really pushed the innovation agenda to build for the market. So I think these are the companies that are now primed for secular 20-30% annual growth with high margins over the next 3, 4, 5 years. And the good news is that they are coming from all manufacturing sector. None of these are services companies. So they are now competing head on with global competitors. Very innovative products that have been developed with very large customers in Europe and US. And I think that gives us the confidence that these are the companies that have also seen some multiple correction, price correction at a very attractive 1.5 times PE growth range. So I think this is the space companies that have used the last year to complete their capex cycle. So they are at 40-50% capacity utilization. The ROCs will improve. I think manufacturing is where we are looking at, especially in auto ancillary, electronics, and pharmaceutical.
Okay. In terms of defense and railway, because I would say 'tis the season for budget stocks to start buzzing after Jan and Feb. Defense, railway, government spend, semicon play, rare earth play, is that something you start looking at a little more seriously early Jan?
We have already been invested in these spaces largely, but the caveat here, Tamanna, is you have seen that the order books of any company that is business to government kind of business, the order books are very lumpy, so you may go through 2 quarters of poor orders and then 1 quarter of one massive order, and then everything changes. So I think for investors who look at investing in these developing spaces, especially defense, railways, are fantastic spaces, with a 10-year runway easily. But the earnings will be lumpy. So as long as you are willing to look beyond just quarterly returns and quarterly announcements and look at them on an annual basis, I think you will be okay. But I think the problem is that investors want that linear growth quarter on quarter like in services business, and they don't get it here. So as long as investors are willing to look at beyond that and not worry about short-term announcements, price corrections, I think this is a space that you mentioned, all of them will make a lot of money. I think government is very cognizant of this, but then government has its own challenges of working through a bureaucratic structure. So there are challenges, but you can't have a better large customer than the government at the end of the day. So I think the willingness to engage with the private sector is there and I think it will start reflecting in the numbers soon.
Abhay, what do you think? Okay, so slightly teda question I'm asking you, but what do you think is going to be one pivot from 2025 to 2026? One set of stocks or a sector which did very well this year, which is going to fizzle out next year?
Fizzle out, okay.
Okay, not do as well. Chalo, let me broaden it for you.
Yeah. No, I think one thing that we have seen is this kind of crazy demand for consumer internet stocks, and I think they are good stocks, good companies, but I think some of that aura or that love of new stocks listing will kind of fizzle out. My guess is that while IPOs will be a very attractive space, will continue to be, but I think some of the recently listed stocks, the whole excessive valuation that people are paying for in the direct to consumer space, I think that will fizzle out. So I think that's where investors need to be a little cautious, that a lot of forward return is already in the stock price. And we have seen this cycle earlier also. So I think that is one space that people have to be very cautious about.
Okay. Abhay, the big NBFC deal that happened, and you were constructive on this space, SFBs, NBFCs for a while now. This reinforces the appetite, but has the sweet part of the rally played out, or do you believe this is just starting off and we might have one more year of upsides for NBFCs? Parallelly, just squeeze in one more thing, right? Because Shriram, CV focused as well, a clutch of other CV focused NBFCs are giving some very good commentary, and we are hearing some very good notes around the CV upcycle as well. So maybe a word on that too.
Yeah, so I think let's start with the CV one. I think very clear data points suggesting a significant demand pickup. In fact, Neeraj, not only CV, even in farm equipment in November, there was a complete stock out of tractors. There was no inventory. It got sold so fast, and the manufacturers, OEMs were not ready, and that situation is now finally being corrected. So similarly in CV space, I think there is a lot more demand than the OEMs expected. The way we are playing that is through the ancillaries, and I think the ancillaries that are about 20% EBITDA margin, high ROC, capex cycle done is a great way to play that CV cycle. On the NBFC question, Neeraj, I think we are just at the very early stage of the NBFC and small and mid-cap banks rallying, because this kind of confidence money that is coming in across the board, as you mentioned, all the deals, plus the commentary that we are getting from the lenders. For the first time, I'm seeing the senior management of these NBFCs being positive. It's been 3 years that they have been first cautious, then cautiously optimistic, but now clearly optimistic. I think a lot of froth has been settled. The self-regulations that were brought in by industry associations have done a good job. There is a good credit demand. There is supply of capital for good lenders. So I think we are getting into a very sweet spot, purple patch almost for NBFCs. And I think this whole NBFC space, even unsecured lending space, which has been very unpopular, I think this will outperform the market in 26. This is our big bet now.
Abhay, a quick view when it comes to EMS as a sector as well, because you've been of the opinion that EMS as a sector is structurally strong. We've seen what's happened with the Keynes Technologies in the recent past, or a PG Electroplast. All of them have been actually drooling under pressure. What would you make of the EMS space for 2026?
No, I think the EMS companies will show very strong, earnings growth. I think they will have very positive management commentary. Valuations have run ahead of themselves. Even as investors, we would like the valuations to be more sensible. But it is a high growth sector, so I'm not surprised about the investor enthusiasm around it. There will be, par for the course, small and mid cap stocks do go through these sharp corrections in between. So investors will have to have the appetite. But we have full confidence that the whole EMS space in India is ripe for pretty significant growth over the next 5 years. And I think any sharp correction like this is unless it is driven by very poor corporate governance, if it is just short-term pressure on the stocks, I think it's a buying opportunity rather than an opportunity to exit. But at the same time, I would say that the valuations are on the higher side, and we would like them to be lower. But then, as investors in the market, we have to take what is available to us.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Twenty 2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome. A very good afternoon, viewers. This is Malika Mishra on NDTV Profit. You're watching Profit 360, a show that gets you deep insights into headlines related to markets, national as well as international news. Today, on to our top focus is IndusInd Bank. More trouble seems to be brewing for this particular bank as a Serious Fraud Investigation Office, also referred to as SFIO, has begun an investigation into the bank's accounting discrepancies. Now, according to an exchange filing, the agency has sought relevant information from the bank regarding the ongoing probe. Let's go across to my colleague Vishwanath Nair joining us on the phone line for more insights on this particular story. Vishwanath, please take us through the latest developments that you've been hearing about with regards to the bank and the discrepancies that have come to the forefront of it.
So in an exchange notification on Wednesday evening, IndusInd Bank has said that it has received certain queries from the SFIO, the Serious Frauds Investigation Office. This is forward to a complaint that was filed by the bank in June. Remember that in June, after the then CEO and Deputy CEO of IndusInd Bank had already resigned, the bank had held a press conference to announce their fourth quarter results, during which the bank's board and its chairman had said that they believe that a fraud has been perpetrated against the bank. So as part of that, of course, they were required to file a formal complaint with the MCA and the SFIO. So that's something that happened back in June. Now, in December, of course, the bank is coming out and saying that they have received further queries from the SFIO and they've been asked to submit some amount of details. Now, one could assume that this is part of that entire investigation process, and that's why the bank is required to give this information. However, the timeline that is happening here, right? June, the complaint is being filed, and queries are being asked still in December. That's a bit worrying as far as IndusInd Bank is concerned. The other part of this is that there was some expectation that this problem for IndusInd Bank is now in the past. Because a new CEO has taken over. He's building a new management team at the bank. Very soon in January, you will have a new chairman on the bank's board. So there was an expectation that things were moving forward, but this SFI investigation seems to be pulling it back now. And that's a bit of a concerning point as far as IndusInd Bank is concerned. So we'll watch out for how the market reacts on Friday when the stock opens.
Right, thanks so much for that. And to give us more insight on this development, viewers, we have Siddharth Rajpurohit, lead analyst at Banking and Non-Banking Financial Systemics Institutional Equities, and Aditya Shah, founder, Hercules Advisors. Joining me in this conversation is also my colleague Somit. Thank you so much, gentlemen, for joining us. My first question, let me set the stage by asking Mr. Rajpurohit, what according to you specifically may have prompted the SFIO to look into this investigation, because all we've been hearing about is accounting discrepancy.
So this is a normal normal course of processes that will happen. Generally, whenever there is a fraud, and there is an RBI regulation which says that any fraud, financial fraud above 1 crore is to be reported to SFIO. So that is what is in the process. So, and this has been the course. This has been the course in PMC Bank when the fraud came out. This has been the course when Yes Bank, the fraud was there, in ILFS when the case was there. So all these places, ED was involved, RBI was involved, SFIO was involved. Here there is another case that is also to the Maharashtra police that is there. So all these things are normal course of process when such a large amount of fraud has happened. Around 2,000 crore worth of fraud has happened. It has shook the entire banking system, and it's been happening for a while. So definitely those people who are part of this fraud, the law will take its course and they should be brought to justice. So this is a process that will go on, and this will have some hampering on the bank's operation. But IndusInd Bank has already had an external agency who has checked their book, and there was nothing incremental kind of found by that external agency also. So let's see how things will take course, but it will have some implications on the operations, but I don't think it will bring out something major, because already Mr. Rajiv has joined in August and he has been taking up things, he has been working on things, he is giving the confidence to the investors, the entire management has now changed, there have new people joined, so I think things will take its course, and it's a regular course of how law will play out for a fraud.
Aditya, bringing you also into this conversation, do you think this could lead to any further financial damage that could come in for IndusInd Bank at this stage?
So from my perspective, this is very normal, the SFIO coming in. Mind you, IndusInd Bank lost nearly about 2,000 to 3,000 crores of shareholder money. There needs to be an investigation into what happened that such a humongous loss had to be booked on the balance sheet. Now, I don't think per se that anything new is going to come out any which way for the period of next 2 to 4 quarters. I expect the new management to anyway clean up the book. Anyway, the cleanup process is really going on. Mind you, IndusInd Bank's NPAs in some of the sectors continue to be really high. For example, the microfinance sector. So I don't think SFIO investigation is something new. This was bound to happen. I don't think the stock price also will be very surprised by this. What we are looking at for IndusInd Bank is what the new management will do. How is the new management strategy? Where does the new management really want to grow? These are all questions that are more important to the investors rather than what has happened to the past. IndusInd Bank stock already has lost around 30 to 45%, and I don't think this is something which is really terrible for the company. In fact, this is good for the company in the sense that whatever happened will start to come out, and those who did wrong will then be brought to justice.
Siddharth, just wanted to understand from your side, could there be more action, not financial impact, we are not expecting much, but could there be more action on the bank, not on the CEO or the deputy CEO, but what further management or board changes would be required to restore confidence?
See, Sumit, we are not privy to whatever the information is shared or what the SIF, because it's a very early stage of what SFIO is doing, because they had a telephonic conversation somewhere in, I think, on 18th or somewhere in December, and now there is some official paper exchanges that are happening. So it's very early stage at this point of time to understand. I think a lot of action the bank and its promoters and the board has taken up. So I don't see very serious implications. See, bank is in a process of still working on things. If we see the recent credit card data that was out from the RBI that came out for October and November, their spends has come down sharply. Around 35-40% spends from September has come down in cards. So there's a change that has happened in that business that we can see. So these kind of changes the bank would continue to do, because see, Rajiv Anand has come from Axis Bank. He has seen that phase of strengthening of the processes, and it takes time for a bank. IndusInd is not that size of Axis, but still for a bank it takes time for all the strengthening of the overall liability and the assets book. So it will take some time for the bank to overall get to the growth phase, but I don't see any major hamper or any adverse thing that would have any major means implication on the bank's operation from here on. But it will be a gradual process that the management would take to bring the bank back on the growth path.
Exactly my point. When both of you have already established that you do not foresee or you do not really see a major or adverse implication for the bank, especially when it comes to the operational front of it. But you know, when banks like IndusInd Bank, which has high presence in hinterland of India, the tier 2, tier 3 cities, etc., when banks like these have to weather such storms, it does kind of have an impact on how it is perceived in the market, not just in the stock market, but how it really affects customer trust. And that's what I want both of you to comment on as well. Of course, recuperation from this particular phase will take time. The management is on course of it. You said SFIO stepping in is not really a bad news. In fact, it is part of the process. But what happens to customer trust, and how much time do you think the bank will take to regain that trust? And I would direct this question to Mr. Shah.
First of all, we need to be very clear. All banks in India, particularly are safe to bank with. RBI regulation on them is really very strict. This is a learning process for RBI as well. We saw after IFS crisis, RBI did become really very strict, and RBI will learn from this, and more stricter regulations will be put on the bank. Remaining the question of the brand, IndusInd brand continues to remain strong. Of course, this is a setback for the company per se, but this is not something that the company cannot come out with. Over a period of time, as rebuilding continues to happen, rebuilding a bank from what has happened will take about minimum 2 to 3 years, or 4 years, or even longer, where the bank sets out a strategy on how to grow on the secured and the unsecured side of the book, and how to clearly gather liabilities per se, which is the bread and butter of the bank. In the shorter term, of course, there will be a hit on the liability side, which we are already seeing that deposits are not going for IndusInd, but they are going for all other banks. But however, over a longer period of time, stability will return to the bank. We've already seen Yes Bank also come back from a much larger problem that they had got. Shorter term, yes, negative for the bank. Longer term, opportunity for the bank to re-establish itself and start to grow slowly and steadily from here on. As I said, only in the stock market things happen fast. On the ground, slow and steady rebuilding will happen.
Right. Siddharth, from the stock price and the valuation perspective, at the current price to book valuation that IndusInd is trading in, and considering the near-term earnings drag and plus this overhang, is the stock already pricing in the worst case impact or the bad case impact, or could there be further derating?
So this bank is actually currently factoring in something good also. It's not the worst case. Worst case was when it hit some lower numbers, means around what the price went around 700 or 6, that range. So that was the worst case that has been factored in. Now the up move that is recently happening is factoring the new developments that has happened, which shows that the loss of deposits could be halted in the near quarter, because last 2 quarters we have seen the loss of deposits, but the loss of deposits has not been very high. So it is kind of in tandem with what the advances kind of go. So the flight of capital is not there currently in the bank. So that way the bank is safe at this point of time. Now there is the bank's valuation at around 1 price to book 1 year forward is almost factoring a lot of improvements that have happened in the bank. So I think that the steps that the current management has taken, because a new HR head has been involved, a new CFO has been now placed in, there's a new data head that has been brought in, new marketing head that has been brought in from say various other banks and other reputed groups. So all these changes is what market is kind of seeing and kind of bringing the bank to something. The confidence is back in the market, because that's why it is brought back to the 1x multiple. So let's see, means creating a 1% ROA is still far from the bank, but still market has the confidence in the new management. So currently, in my recommendation, I don't have an upside from here. I have a hold rating, but it would be around 850, which is where the current bank is hovering. So I don't see much of an upside, and I have a hold rating on the bank. But yeah, a lot of positive seems to be factored in at this point.
Mr. Rajpurohit, you do not really see an upside as of now, but you have expressed confidence in the management to take it ahead and up the ladder. Therefore, I'd like to ask you, for the sake of clarity, what is that key trigger that could possibly, iterate a buy rating for this bank?
Malika, there are a lot of things in the DuPont of as an analyst, I see the ROE movement. So what at the end, it is the management level of confidence has come. The people, the team, that level of confidence, the market would be having that, yeah, the team is good. And now there are on and off news that come off that promoter would be selling, RBI would pushing up pressure. So all these kind of news are there. But the bank has to gradually put its number out where it was once doing an 1.5 kind of 1.4 kind of level of ROAs, the NIMs were high. So the confidence should only come after a gradual quarter-on-quarter consistency of their performance and a gradual trend line. And there is no, still this quarter also we have seen asset quality issues. Now those issues, when they abate and there are not new surprises, then only it would have the market would have that confidence to come out and put your head out and say a buy for the bank. It is a long drawn process, but yeah, it would take its own sweet time is what I understand being a banking analyst.
Got that. Thank you so much for that. And Mr. Shah, very quickly as well, in your previous answer, you were penciling in a steady recovery for the bank. I'd like to ask you the same question. What, according to you, would be that key trigger for a buy rating on the bank going ahead?
So I do believe that most of the negatives for IndusInd Bank are already priced into the numbers. Market will re-rate it is as simple as this. Market will re-rate the stock when the market feels it has complete confidence in the management, complete confidence in the future roadmap as to where IndusInd Bank really needs to go. Let me give you an example. Federal Bank is there. Mr. Manian has come in, and Mr. Manian is creating a whole new strategy where both secured and unsecured book are now poised to grow for Federal Bank, and Federal is now moving towards the next leap of growth that is required for the bank to become a mid-sized bank. So from my perspective, IndusInd is very heavily armed towards the microfinance side of it and the vehicle finance side of it, where microfinance called out IndusInd Bank really badly. So from my perspective, once the market really understands where the management wants to grow, how the management will be able to control NPAs and what's the steady state growth for the company, that's where the market will feel the confidence to re-rate the stock. I don't think that the management has laid out any of these plans, because last time when the result season came out, the management was only 10 to 15 days into the job. So we cannot expect the management to give a plan so fast. I believe next 2 to 4 quarters is the time where the management will start to lay out their own path, their own roadmap in front of the investors. And from there on, the stock price will move on.
As we take note of the SFIO stepping into this probe with regards to IndusInd Bank, it's also important for us to understand, as highlighted by Aditya Shah as well as Siddharth Rajpurohit, that it is part of the course, right? And it shouldn't be taken as a negative connotation for the bank's reputation. Also, the management needs to be given enough time to show what they can do with the bank, to show that they can elevate the status and the repute of the bank going forward. Thank you so much for giving us your insights into this matter, and also many thanks to my colleague Samit as well. And moving on, viewers, big push for Delhi Metro. The cabinet has approved a major expansion plan worth 12,015 crore rupees, and this includes 13 new stations across key corridors. Among them, RK Ashram to Indraprastha, an extension of the Magenta line, which will benefit Kartavya Bhavan government staff. Other key stretches include Tughlakabad to Kalindi Kunj and Aerocity to Terminal 1, extending the Golden Line. Now, stations will cover high traffic zones like India Gate, Bharat Mandapam, War Memorial and High Court. The construction is expected to be completed in 3 years. Let's listen in to the INB Minister Ashwini Vaishnav speak on the same.
इसमें एक नया चैप्टर जुड़ेगा दिल्ली मेट्रो के एक्सपेंशन से। उसके लिए आज 12,015 करोड़ रुपीस का प्रोजेक्ट सैंक्शन हुआ है। आज जो अप्रूवल हुआ है वो बहुत इम्पॉर्टेंट है। इसको फेज 5A कहा जाएगा। दिस विल बी दिल्ली मेट्रो फेज 5A। 13 स्टेशन इसमें बनेंगे, 10 अंडरग्राउंड एंड 3 एलिवेटेड स्टेशंस। 16 किलोमीटर्स नई लाइन इसमें बनेगी, 16 किलोमीटर्स, and the total investment will be 12,015 crore.
And one of these 3 new corridors, the extension of Magenta line from RK Ashram Marg to Indraprastha, is set to boost ease of living in the national capital. My colleague from NDTV, Tejashree, reports to us live from the Indraprastha metro station. Take a look.
Union Cabinet has approved expansion of Delhi Metro under phase 5A. This will be including 16 kilometers, 13 stations and 3 routes. From where we are reporting right now currently is the Indraprastha metro station. This will also be the part of one of the 3 routes, which will be also improving the connectivity for the people of the national capital. There are 12 lines so far and 6 new projects are already under construction to extend existing lines. Delhi Metro will cross 400 kilometers and will be among the top 5 in the world, catering to over 65 lakh commuters every day. Now if we talk about the project 5A, it will be having 3 lines: Ramkrishna Marg Ashram to Indraprastha, Aero City to Airport Terminal 1 and Tughlakabad to Kalindi Kunj. And Kartavya Bhavan will be connected better for those who come to work from neighboring states as well. So not only this, not only just for the people of the national capital, but also who live in Noida, that will also be a great help for them, or nearby states as well, because it will be improving the connectivity, as it will also be including 3 routes and 13 stations as well. So now this was one of the major decisions taken by the Union Cabinet as far as the Delhi Metro is concerned.
Now, as we bid goodbye to 2025, NDTV Profit has curated special reports that capture the journey of different sectors through the course of this year. Today, let's take a look at a space that faced multiple hurdles. From geopolitical storms, spiking fuel costs, the disastrous accident and cancellation chaos. I'm talking about the Indian aviation sector. The journey for this industry was not easy. Let's take a look at this report by my colleague Danish Anand that gives you a 360-degree aerial view on Indian aviation's 2025 journey.
Calendar year 2025 was a year full of turbulence for India's aviation industry. In fact, this will be remembered as one of the darkest periods and one of the most toughest periods for the industry in a very long time. While elevated ATF prices, rupee depreciation were some challenges for the sector, but on the other hand, the crash of AI-171 in Ahmedabad and the airspace closure over Pakistan after Operation Sindoor and IndiGo's December flight cancellations shook the industry.
January 2025 saw the Bharatiya Vayuyan Adhiniyam 2024 take effect, replacing the outdated 1934 aircraft rules with modern, globally aligned aviation regulations. With rising capacity, fleet revival and wet leases, airlines geared up for a busy summer. DGCA's 2025 summer schedule operated over 25,000 weekly domestic flights, a 5% jump year-on-year.
While the first 3 months of 2025 went smooth for the Indian aviation industry, but the sector entered its first set of dark clouds when Indian Armed Forces launched Operation Sindoor, targeting terror launch pads deep inside Pakistan.
As a result, at least 32 airports were shut till 15th May due to no-fly zone. Post-ceasefire, Pakistan banned Indian carriers, forcing detours, spiking fuel costs and crippling airline finances. The industry's darkest moments in decades. June 12th, Air India flight AI-171, a Boeing 787 Dreamliner, crashed 32 seconds after takeoff from Ahmedabad into BJ Medical College Hostel. Of the 242 on board, only one survived. This was the first ever fatal Dreamliner crash. Air India grounded its fleet temporarily. Preliminary report revealed that the cockpit recorder captured pilots discussing fuel switch cutoff. The final report is expected in 2026. December proved to be a melting point as India's largest carrier, IndiGo, saw unprecedented flight cancellations. IndiGo cancelled more than 1,200 flights in November and over 5,000 in December, citing pilot rest rules, tech glitches and weather. That drew intense government and regulator scrutiny. Expert Mark Martin warns that 2026 skies remain turbulent with policy, infrastructure and global risks.
I'm not very positive on 2026 when it comes to aviation. There are major concerns. There are policy, infrastructure, economic, and global risks which need to come at play. And my personal view is that it's not going to be as progressive as we believe it to be.
Experts believe that 2026 will be a year full of challenges for the Indian aviation industry. While on one hand, elevated ATF prices, rupee depreciation, capacity constraints and adapting to the new ABTL norms could haunt the industry for the next 12 months. In fact, things will get more clear post 10 February when DGCA's relaxation for IndiGo in terms of FDTL collapses. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
And as we wrap that up, let's bring you visuals of Christmas celebrations from all across India, from Ayodhya to Tiruchirappalli, from Ahmedabad to Mizoram. India is rejoicing in the Christmas spirit. And on behalf of the entire NDTV Profit team, we wish you a very Merry Christmas.
Good evening, ladies and gentlemen.
Actor of the Year.
Director of the Year.
Debutant Director of the Year.
Sports Performance of the Year. The Actor of the Year award goes to.
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you.
Hi, we're talking about Your Money Matters on NDTV Profit, and today I'd like to talk to you about a big change in the mutual fund space. It has to do with the way that the cost is calculated for you, the investor, when you invest in mutual funds. Now, you probably heard the term total expense ratio. This essentially covers all of the costs that you bear as an investor. That is now undergoing a change. It is now going to be made up of 4 components, and I'll list them out for you. There's going to be the base expense ratio, there will be the brokerage, there will be regulatory fees and statutory fees. All of this was more or less morphed into one earlier. Now there is a division between these two. And to facilitate this, the SEBI has said that the base expense ratio will be reduced by 10 to 15 basis points for most equity mutual fund schemes and certain other schemes as well. What else has happened is for those schemes that had an exit load, there was a special allowance that was given to them of about 5 basis points. And the SEBI has said now it's been enough time. It was supposed to be a temporary measure. It actually lasted for more than a decade, and they've said remove this. So that has happened. And the brokerage that I mentioned, that is part of those 4 components, the SEBI has reduced the cap that is allowed for these mutual fund schemes so they can charge less to you, the investor. It used to be 12 basis points with levies. It has now become 6 basis points for cash transactions without levies. And so if you account for the levies, effectively the difference is about 4 basis points, 4.3 to be exact. Now, what is the result of this? You have a situation where the cuts for the base ratio are between 10 and 15 basis points. For open-ended schemes, for closed-ended schemes, there are between 20 and 25 basis points. Now, all of this sounds pretty complicated. So let me give you an example. Take a look at this table. This is for an equity mutual fund scheme that has an assets under management of 55,000 crore rupees. And so it's pretty much in the highest threshold for the calculation of expense ratio. Now, the expense ratio actually moves in slabs. So it starts with less than 500 crore, which allows for the highest expense ratio, and then it keeps reducing as you go up the value chain in terms of assets under management till you reach above 50,000 crore rupees. But the expense ratio that is charged on the whole is actually a blend of all of these slabs. So in this example, earlier the expense ratio was 1.31%. It now becomes 1.21%. The exit load allowance that was allowed earlier at 5 basis points, it goes away. GST on management fees, and here we're assuming that management fees is about 55 basis points. That would be 10 basis points, but that shifts to your statutory fees and taxes, and everything else also shifts to that, all your GST, etc., and your STT. And finally, your brokerage has been capped at 6 basis points. So ultimately, the difference between the two can range anywhere between 4 basis points and 9 basis points. This is supposed to explain to you how this works. Now, do remember that this is for a very large scheme. It's quite possible for a smaller scheme, the difference could be wider. But all told, it's not too much of a difference seemingly on the cost. Let's talk about how this affects you though. So hopefully that explains to you how this change is going to take effect. But how does it affect you as an investor in mutual fund schemes? Let's talk about this with Harsh Kumar, who is a CFA and managing partner and co-founder at Zvest Financial Services. Harsh, thanks so much for taking the time. And I know that both of us, you and I, because I called you yesterday in the evening, try and figure out how this works. You and I have done quite a bit of back of the envelope calculations or Excel sheet calculations. Ultimately, though, the crux of the bottom line is, how does it affect the individual mutual fund investor?
So, Alex, there are two impacts here. One is talking about the numbers per se, which you very well explained. And second is the psychological part of it. Now, this is an industry which works on trust, and investors' trust or unit holder trust is prime for anyone involved in this business, be it about asset manufacturers, be it about intermediaries. All of us have to win the trust of the investor, and the kind of growth we have seen in this industry is because of that. Just to take a step back and set the perspective right, in last 10 years, mutual funds have seen a CAGR growth of 20%. In last 5 years, the growth has been 22%. And right now we are talking about an AUM of around 80 lakh crore plus. Now, in this scenario, the more transparent we become, the more clearer we become in terms of our calculations, our numbers, the unit holders are going to trust us more. Now, the numbers in terms of impact change as far as benefit to the investor is concerned is say 6 to 9%, 0.06 to 0.09%, or rather 6 to 9 basis point. But the trust of the investor comes into this picture because investor feels that whatever I am paying as an expense ratio, I am getting a clearer picture on what is going where. Second advantage is that tomorrow, if there is a change in GST, there is a change in statutory levy, then I should not be holding fund house responsible, or I should not be feeling that fund house is charging me extra, because there is a clarity that fund house is charging me base expense ratio. On top of it, whatever is happening is very much managed by the regulator and government authorities, and I'm not paying anything extra there. So from that point of view, I feel this is not an issue of a cut, but more of a clarity. And I think I'm very happy about it because all people involved in the chain will have a clearer picture on where the money is going and how is it going. Second thing I would want to touch upon is fund houses which have low churn versus fund houses which have higher churn could also have a difference in the total expense ratio now, because you would have a situation where brokerage being paid is higher by a fund house which is running a higher churn, and the investor can take a measured call on which fund to invest basis all these parameters.
Is it brokerage that would get impacted, or is it because that brokerage is capped, or is it your statutory fees that could get impacted? Because one would assume that if you're churning a lot, you're selling and buying a lot, and so your securities transaction tax and your other statutory fees that you would pay per transaction would go up, wouldn't they?
Yes, absolutely. So overall, you are paying the same base expense ratio in two comparative funds with similar size, but one fund on account of higher churn ends up charging you higher total expense ratio, which rightly you explained that it is on account of higher statutory levies as well.
Okay, so therefore, I think the crux of this, Harsh, is not an attempt to make this cheaper. In fact, if anything, in that circular, the SEBI is very clearly stated that it has adjusted the reduction in base expense ratio to ensure that it wants to primarily pass through the effect of removing the statutory levies from here and moving it to the other side. It's reduced it to that extent, more or less. Is that the right way to look at it? And its primary objective is transparency.
Absolutely. So if I go by the intent of the circular and the way it was implemented, so for example, the discussion paper which came in October versus now, SEBI has listened to the parties which were involved, and there have been good number of changes which have been made versus the circular which was released, versus the white paper which was released in October. And that has only happened because the voice of the industry was heard. And from that point of view, I feel it's a good regulation, not just from investors' point of view, but whatever industry had requested in last 1.5 months, that has also been heard.
Interesting, because that sticking point, I think, Harsh, from my perspective, was that brokerage fee, right, on cash transactions in particular. Because the consultation paper that you referred to, which came out in October, had suggested bringing it down to from 12% cap, or rather 12 basis point cap, which includes statutory levies, to 2 basis points without statutory levies. And that was a dramatic drop. What has actually come about is a 6 basis point cap, which is a middle ground, so to speak. How much of an impact will this have? Because ultimately, the caution or the concern that the regulator had was that as a mutual fund house, you are supposed to have a fund manager, you're supposed to have a research desk or a team that looks at the investment thesis, has your own research, and on the basis of that, you're supposed to take a call. Whereas some fund houses were paying brokerage charges because they were getting research from outside. And ultimately, the regulator was saying, we don't want the investor to get double charged.
So again, Alex, I would just want to take a step back and explain how the nature of this industry is. So if you look at 80 lakh crore AUM, which I mentioned earlier, roughly 50% of this AUM is concentrated in top 5 fund houses. Now, as you speak during the day with other fund houses, you can check with them how much do they actually pay to institutional broker. While I do agree that out of 46, 47 mutual fund houses that we have in India, I'm sure majority of them were earlier paying 12 basis point, but I'm fairly certain that the top mutual fund houses would have been paying anywhere between say a 5 basis point to 7-8 basis point and not 12 basis point. So from that point of view, with the fund houses of certain size, maybe they were actually not paying 12 because it was up to 12 and it was not minimum 12 or mandatory 12. Second thing, the circular very clearly explains that it was not actually in the number was not 12 but 8.59 which was being paid, and now that 8.59 has become 6. So my sense is that that is the reduction, but like you mentioned, it is much better than what was the scenario earlier. Now let's see the impact of this. So we can't undermine the sell side research or the research provided by institutional broker also, because that is also very important part of mutual fund performance. And why I say so, because there are people who are employed with institutional brokers who have been tracking one or two sectors for last 20-25 years. They have a lot of knowledge about that sector and their opinion matters. So from that point of view, today, a fund house which is smaller in size, they will have to negotiate with them in terms of excess of their report or research, and they may have to pay something which could be relatively higher as a percentage of their AUM than what a big fund house might end up paying. So my sense is the impact of this would be twofold. Smaller fund houses would have slightly lower access to research than what bigger fund houses would have. Smaller fund houses may have a little higher hit on their balance sheet than what the bigger fund houses would have, because they were already not paying 12 basis point as far as my understanding goes. And thirdly, you mentioned about in-house research. Now, in-house research is possible, but imagine this is a business of economies of scale. Now imagine I am a person who has been tracking pharmaceutical sectors and a niche in pharmaceutical for last 15-20 years. And if I can share my research with 10 or 15 mutual fund houses, at the end of the day, economies of scale play for the benefit of the end users in terms of funds creating alpha with respect to that. But today, after this change, if that access gets restricted, I'm a little worried about research capability, especially of those fund houses where the AUMs are not very huge.
Okay, that's a counter argument that you have there, and it must be said that it's a pretty strong argument. But I would argue on the other side that one would expect that even smaller organizations will build out capability over a period of time and having in-house resource. And ultimately, I will give you a number of examples of schemes that have chosen to have a certain size or have chosen to spread themselves only to a certain point, to say that I will only have a flexi cap fund, and you probably know what I'm talking about. But you have one offering, but you have a good offering, and you will build out the team that will be needed to serve that. So why do you want to create 16 different schemes, not have a team that will do enough research and then have to do it from outside, which has a bearing on cost, which has a bearing on quality? And ultimately, if the same research is available to 15 fund houses, then what are you doing differently that requires people to come to you as opposed to somebody else?
So absolutely. So now there are 2 points to that. If you look at most of the fund houses, be it smaller or big, the number of stocks they cover is generally 10 to 15% of the total universe available. So assuming there are 4,500 to 5,000 listed companies available in India, the universe is generally confined to 400 to 700 stocks, depending on the fund house. Now, coming to your second part, that if all have access to that research, it's not that they would rely on that research exclusively. Now, after getting research analysis from the broker, they would have their in-house processes to figure out whether they want to go with that hypothesis or not, and then what kind of a weight they want to assign to that stock. So it's not a very simple way in which the schemes work and in which the decisions are taken. It's a little complicated way how the hypotheses are arrived at, but I would be very happy if most of the fund houses have their own in-house research desk, which are capable enough to track 500 to 600 stocks. Because when that happens, then you will see true differentiation between multiple fund houses. And when you were mentioning about that there won't be much of a difference between 2 or 3 fund houses who use the same research report and apply the same decisions, I agree with you. So you would see a lot of funds in the industry as well, which are benchmark hugging, some funds in the industry where the returns are not differentiated. So you have a valid argument there, and I hope that changes.
Yeah, exactly. I hope that this, Harsh, is the factor that galvanizes these fund houses to look for talent and to look for research capability. If anything, that would be a good sign for the investor at the end of the day. So thanks so much for joining me on this conversation. Pleasure having you as always, and look forward to the next chat.
Thank you, Alex. Pleasure's all mine.
All right, with that, let's get you another end of the year conversation. And here's where we get you the thoughts and the ideas of people that manage your money. And I'm in conversation today with Shreyas Devarkar, who's a head of equity at Axis AMC. Shreyas, thanks so much for taking the time. And I think a lot of people are thinking about how to position themselves or how to set their expectations for the new year. Invariably, that's what happens. And as we end this year, it's not been the best for equity markets. It's in fact not been the best for fund managers and stock pickers as well. How would you describe 2025?
If you look at as far as 2025 is concerned, so 2025 actually it has been, as anticipated, a year of moderate returns, and that forecast has largely materialized. So Indian equities delivered muted return and single digit in what turned out to be a stellar year for global markets. And that's where we actually ended up underperforming the global market. But in my opinion, this drag was mainly because of reciprocal tariff imposed by US, and where India faced the steepest levies among affected nations. And elevated valuations along with the persistent foreign portfolio outflows, which also we witnessed, it added to the volatility. And domestic, obviously the inflows has been the savior this year. And in my opinion, the earnings cut cycle, which was there, which started somewhere in the mid of 2024, it continued till the part of 2025.
Yeah, ultimately all of this helps people understand what the year gone by has been, but then ultimately everybody wants to look forward and try to figure out what 2026 is going to look like. Is this Mandi going to get over is the question that a lot of people are asking. Shreyas, what do you think?
So 2026, the way I would look at it is, as far as the valuations are concerned, both on Superca, which has been one of the main reasons for underperformance, because after supreme returns, actually what we saw almost in 2022, 23 as well, that kind of return, your overall CAGR was running much ahead of the earning growth, and that's where there was a PE re-rating what we saw. So that had to correct as such, and that's where I would first start from. So underperformance of Indian equity compared to the emerging market, which it has led to now Indian equities valuation compared to emerging market at just one standard deviation above. Earlier it was much higher. Secondly, there has been a trade of AI beneficiary companies versus non-AI beneficiary, or someone who gets hurt. In that trade, generally in India, there were not many companies who could benefit from AI. And that's where, again, India was left out of that trade. So there are multiple indications worldwide that the focus is back to looking forward to whether AI investment is making money or not, whether the valuations are elevated, and many companies have corrected in that space as well. So in that sense, if that trade of pro AI start reversing, that also can be a good outcome for Indian equity. Just to give you a perspective here, that Nifty's P in 2022, late 2022, was closer to the Nasdaq P, and now Nifty's P is 24, while Nasdaq is at 36. So to the extent this trade had happened, that gives you a perspective of that.
Yeah, it's fair. Speaking of valuations, relative valuations, and the large cap space in particular, Shreyas, ultimately over the last 1 year, broader markets have underperformed, relatively speaking. Large caps have actually been the ones that have done okay, even though it's nothing to write home about. But having said that, even at this point, you have the Nifty 50 as a percentage of overall market capitalization for the Indian stock market at pretty much the lowest ever, right? You have the top 10 odd stocks as a percentage of total market cap at the lowest ever. Is this an opportunity in your mind from the lens of how you approach portfolio selection? You've had a quality bent in the past.
So if you look at from the quality and growth point of view, what market has done is over last 3-4 years, since 2021 to now, is that the companies and the sectors which has actually shown very high growth, or there is a promise of growth, there is a story, there is theme, such companies got re-rated a lot. So if we compare the multiples pre-COVID versus now, in segments like capital goods, it is almost 96% higher multiple. Electric utility 67%, construction material 65%. A segment of pharma, especially CDMO, it is 45% higher. So these multiples are way higher. While there is a coming back to the large caps, so the segments which I highlighted are having representation more in mid and small cap. Now the segments which have more representation in large cap, which is private bank, consumer staple, IT services, PSU banks, consumer discretionary and auto, here the P re-rating is only up to the extent of 20% compared to the pre-COVID. So, but there is a reason. In most of these segments, the growth has been subdued in last 4-5 years. And that's where the market, the way we are investing, we are also looking at both approaches. One is valuation comfort, which is coming with a lower growth. So the part of portfolio which is mostly large cap oriented falls in this bucket. While there are growth companies, but they are coming with very, very high valuation. And that's where you are standing on a very high valuation risk. And that's where, from risk reward perspective, even now, in my opinion, the large cap, more because of the valuation comfort, looks favorable.
It looks favorable. So, but if you were to look at the market as a whole, and of course you manage schemes across the board, so therefore you would look at the broader markets as well. As you stand on the cusp of 2026, are you more confident than you were at the start of 2025 that there are more tailwinds than headwinds, and that you will return? See, a lot of projections are calling for what, 15% odd earnings growth in FY27. By that logic, one would assume that portfolios will also do dramatically well. We're moving past a year, Shreyas, where you had single-digit earnings growth.
Sure. So the few things which I am looking forward to fundamentally here is, one is RBI's neutral stance, and it has actually given us a rate cut. The ample liquidity we have seen by RBI in this market. So that, coupled with fiscal measures like GST rationalization, tax cut, MSME support, and regulatory reform by both RBI and SEBI, all these things are actually the cornerstone for the structural growth story of India. So all the steps are in the right direction. That is one. Secondly, India's macroeconomic stability will be more driven by fiscal consolidation effort, the low oil prices, what you are seeing now. Every day you are looking at the low oil prices, and the steady global growth. On the domestic consumption front, along with the GST and the fiscal stimulus, the point is that there is also rural recovery, which may be more driven by the agricultural activity. On the other hand, if there is a resolution of the tariff issues between US and India, that actually can accelerate recovery and that can attract FII even faster. Today, valuation-wise, we are reasonable, but there should be some trigger for it, so that can actually attract FII even faster. In my opinion, as I highlighted earlier, the valuation definitely is in favor, especially the AI trade which has happened, the reversal of the same. And lastly, the earnings which you pointed out to. This earning cut cycle, which started somewhere in the mid of 2024, that actually, in my opinion, lasted till 2025 end. Now, from here on, when you're expecting just single-digit growth, definitely on this low base, there is high probability that now the growth can be in mid-teens for next year. So that is also good news in terms of earning growth trajectory as such.
So are you going to end 2025 with a smile on your face, Riyaz? Smile of relief and smile of expectation?
In my opinion, yes, the nominal GDP growth, if it revives the way all the macros are stacking up, there is a very high probability. And if it gets delivered, definitely we can see good returns.
Okay.
The only aspect I always say that the expectation from the market should be nominal GDP growth plus minus few percentage points, and that should be the possibility.
And let's hope that nominal GDP goes back to double digits next year, Shreyas. On that note, thank you so much for taking the time. Pleasure speaking with you as always.
Thank you very much.
All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Now 300, 300, 300. टीवी पर पहली बार.
Hi sir, I am Sarang Pani.
तू एक खून करने वाला है.
सच बोल रहे हो क्या? कुंडली. मेरी शादी में किसी की नजर ना लग जाए, इसीलिए खून करना पड़ेगा. Let's kill it.
देखिए सरंग पानी जट कम कल शाम 7 बजे शिमारू जोश पर सभी प्रमुख केबल DTH और केबल ऑपरेटर्स पर उपलब्ध.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है. आँख नहीं फूटती धूप में, मैं फटदनी से चाय बना ले, बहुत सहूलियत है हमें इसकी.
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले.
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
एक नए भारत की शुरुआत. A healthy nation, a healthy India. Possible with one simple habit, hygiene. Dettol बनेगा स्वस्थ India, unites us all.
लेकिन ये जिम्मेदारी किसी अकेले की नहीं, हम सब की है.
क्योंकि जब हाइजीन बनेगी हर घर की पहचान,
तभी तो होगा एक स्वस्थ और विकसित भारत का निर्माण.
I am the change.
I am the change. I am the change.
I am the change.
Good evening, ladies and gentlemen.
Actor of the year.
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to,
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Presented by RP Sanjeev Goenka Group.
Co-powered by Gallant TNT Rebars and Cement. Nirman ka real hero.
Associate partner Just Rights for Children. Access Max Life Insurance. Credit Score partner CRIF. Associate partner Art House Glassware.
Let me come to Mr. Arun Selvan, President and CFO of Chola Investment and Finance, to throw more light on the issue. Mr. Selvan, thank you so much for your time to us here at NDTV Profit. And like I said, the best response is one which is factual. And I think that's what's happened with you, isn't it? I want to ask you, why do you think your company and your group was at the receiving end of this attack? And I call it an attack because it's not just you saying, no, we didn't do this. Now you have a lot of independent brokerages and analysts saying that a lot of things that you were accused of is something which is industry practice. Then why do you think Chola was singled out?
I think you should ask them rather than me, because we didn't prompt this, or we are at the receiving end. But I think with all humbleness, I should say the growth in Chola has been quite, good. And so that might have attracted attention of people to sort of look into what we are doing, or wanting to sort of put certain hurdles in our growth path. I really don't know, and I really do not want to be worried about that. As long as I know that what we are doing is right, and what we are doing is, as per the industry, and what we are clear. Our disclosures across, whether it is driven by the regulation or even outside that, when we do our investor presentations, etc., have been much more granular than most of the other industry players, and we have been always open to any new thoughts and new ideas of sharing, and we have been the first to come across divulging information with regard to our operations. We'll continue in this space, and we do not want to get worried about these sort of small thorns that come our way. It always happens, and we are not worried. But I am thankful that the market and participants, like the brokers and the research analysts, have given the fair opinion about what we are doing and what is not misleading about the allegations.
Comment? Were you asked for a comment or your response before this was put out?
Yes, it was asked, and it was said that they will be releasing it. It came to us day before yesterday evening, and it was supposed to be waiting for our comment till yesterday evening, when the press conference they had originally scheduled. Unfortunately, while saying this, they had parallelly released it to all the media, and we were already getting calls. So that is where we had to react immediately and come on board to clearly state our position. And it was not a very difficult task, because whatever we are doing is what we are talking about. So it is easy for us to come back and say this is what is happening, and the allegations are false. The allegations have been made, with different comparisons of different time periods, and it's completely chaotic and unnecessary. But let's just say
it's a lack of understanding or malicious intent. You said earlier that maybe because we're doing well, this is happening. I mean, who do you think would want to see something negative happening?
I cannot certainly rule out malicious intent, because there is no reason, and I think these are fairly easily understandable positions that they seem to have done, and the very way that they seem to have used different time points to, gather, just to inflate numbers and mention allegations. Seems there is malicious intent, but as I said, we are happy that the market has recognized what we are doing, and we really do not want to, get into this as any larger concern. But we are prepared to do or even go against them if they continue to do this sort of allegations and do it. Then we will certainly be able to, and we are confident of doing it. Yes.
Mr. Selvan, on this side, so you're clearly saying that the claims are malicious and baseless. One question I have is, have you received any communication or red flags from the RBI or any other regulatory authorities with regards to any of these allegations that have been made? Any communications of sorts?
Absolutely no. As a matter of fact, we had, after these allegations came, we had been in touch with all the concerned both regulatory as well as others, like, for example, rating agencies, banks, shareholders, etc. And everybody had reposed their faith in us, and they are doing their, their regular audits and their, scrutiny. And there have been absolutely zero issues marked or even earmarked by them or flagged by them for us to look into it, and none of them are looking into any of such things.
Okay. Mr. Selvan, and for a lot of people who've tracked your company for long, these came in as a surprise and your clarifications are out there. In fact, a lot of brokerages have given out this verdict as well, that all of it seems mispriced, including the cash transactions, which are a part of normal practices at all, right? Entirely. A question would be, therefore, on how do you see business per se over the course of the next 6 months, over the course of the next 18 months, because you seem to be in a pocket which is in the right space at the right time currently, with all the moves that the Reserve Bank has done and all the moves that that the government has done, leading to a higher vehicle offtake and a start of potentially a new CV cycle.
Yes, actually we are poised for good growth and meeting the expectations of the market. What we have been sort of outlining over the past few quarters, as usual. We don't see any negative impact either because of these allegations or even otherwise because of the market movements. Especially the Q3 and Q4 are where the seasonality favors us, and we should completely be in control of improving or increasing our.
Got it. Sorry, I was not asking this with reference to this thing. You well established now that that is not a concern for you, but do you anticipate strong growth? Do you also, I have a part 2 of my question, Mr. Selvan, because you are best placed to answer this. Do you also foresee the beginning of a new CV upcycle for the next couple of years?
Yeah, NIM CV upcycle will be there, especially in Chola, primarily because while the cost of funds is coming down, a large part of our book is fixed rate book, and so we should see some NIM improvements. Having said that, it also needs to be kept in mind that Chola has different products across its businesses. For example, even within vehicle finance, you have products which could be of lower yield, but of a lower credit cost and lower OPEX. So NIM is not the line we really work towards. Because when the cost of fund benefit comes, we then try to focus on products which are slightly lower on the yield. So like, for example, heavy commercial vehicle is the area where we would like to go as and when the demand picks up there, because that would help us to scale volume. Because it gives us the advantage of the cost of fund, lower cost of fund also. So this is you may not see the translation of the benefit completely in NIM, but you will see the translation of the benefit coming into the bottom line, which is a PBT rota or a PAT rota.
Fair call. Is there a number on disbursements that you would want to share? I mean, estimate second half, Mr. Selvan?
Certainly no.
No, okay, fair call.
You can hold me to it later. As I said, it will be better than the first half.
Okay,
Absolutely.
better than first half. So, but better than first half can be 10% better, 50% better, 99% better also.
We are not magicians, okay?
I know. That's a good line.
Mr. Selvin, I just want to ask you, and I understand you can't give us guidance, etc. now, and our conversation's in a different context, but all of the buzz and chatter about easy liquidity, the consumer push, and the excitement for new vehicles and the impact that will have on companies that give vehicle loans like yourselves. Are you beginning to see signs of that in any substantial way?
The signs are, I would say, not yet fully, robust. It's a little muted, especially in the products which are directly linked to industrial production growth, etc. So you will see, you are not seeing the traction good enough in let's say, in heavy commercial vehicle or in the CV segment yet. While it has improved, it is not improved to the levels that we thought of, or the industry was talking as the growth levels. So we will see this coming as we move into the next few quarters. That's our expectation. We also, there is a little bit of apprehension that in Q1, Q2, where the seasonality comes into play, there could be a small dip, and then it could again move up when the auto cycle completes its turn. This is also, we have to factor in that the shift from BS4 to BS6 that happened a few years back had made the products costlier, and also the longevity of the product has become longer. So the shift has made the customers utilize this vehicle for a longer time. Generally, the loans which used to be for 5 years, 4 to 5 years, is now trended to become 6 years or above. And so they will wait for this full EMI cycle to complete before they replace the vehicle. So I think that would be the cycle that would come up maybe 2 or 3 quarters from now.
Okay, interesting inputs. Thank you so much, Arun Selvan, for speaking with us and coming in and answering all of our questions today.
Abhishek, thanks so much for joining in, and great having you. This is Neeraj here. Good morning. First, just an insight from you on the serious battery energy storage system capacity expansion that you've announced and a lot of your peers have announced. I mean, we typically would have expected these announcements coming in from the renewable energy companies, but it's not just that, because it's not just their domain. Everybody can do it. You are a prime example there too. But a lot of companies are announcing these BESS expansions. What's happening in this space?
So, good morning, Neeraj. See, if you look at the reports, right, the way India's energy mix is growing with renewables coming in. So currently battery storage is hardly about 235, 250 megawatts. In the next 5 years, the predictions are the battery storage requirement in India will go up to 300 gigawatts. Although the thermal capacity will continue as a base load, but to manage the grid stability, battery storage is very essential in today's energy mix. So that is why, as a company, we have decided to venture into battery storage. That is the reason behind it.
Got it. And Abhishek, I'm sure you know this industry like the back of your hand. So if the projected requirement is 300 gigs by 2030, what is it that, based on the announced capacity expansions by everybody, including you, what is it that the industry-wide capacity is going to be, let's say in 2030?
See, at the moment, whatever announcement has happened, close to about 100 gigawatts announcement already happened. By new entrants, by existing solar players. But going forward, there's also a big export market with tariffs looming on US and Europe from China. So we feel going ahead, battery storage in India as well as globally will be essential mix. That's why companies are investing big in this money. That is the reason.
So I just want this clarity. Sorry, Abhishek, and I'm going to take a moment here just to understand this before we ask you about your plans as well. But you are saying 300 gigawatts is the India requirement. There could also be an export requirement, and therefore the actual requirement could be more, and therefore even if the current plans, which are around 100 gigawatts, subject to everything getting executed on time, happens, it will still be a highly profitable start for you or anybody else.
See, to be honest, because the investments are on the lower side, only for the battery storage at the moment, the margin is going to be wafer thin, probably about 8 to 10%. It's more going to be a volume game. And since battery storage itself is very high-tech technology, right? And it's a very evolving industry. Every 6 months, you'll see a new technology coming up. So eventually, industries have to do backward integration, probably get into cell line, collaborate with cell manufacturers globally, and take it forward.
Abhishek, good morning. Hiral on this side. Now, when you're talking about commercialization as well, the gestation period is still pretty long. Phase 1, you're talking of what, 20 gigawatts operations in the first quarter of FY28, right? So what are the milestones that you're looking at when it comes to construction, machinery, installation that will be achieved through 2026? And do you think the kind of capex that you will need for all of this, you're going to be pretty much strong on that front?
See, we've already started the land work. We've already been awarded land in Aurangabad, Maharashtra. The construction period is hardly less than 12 months.
Okay.
Machines have already been placed, which will start delivering in month of Q2, early of Q2 for FY27. So the construction period is hardly 12 to 15 months. That's why we've given a target of Q1 of FY28, which is April 27, for our first commercialization of the first 20 gigawatts.
And to add to this, if you have to talk about the single line efficiency, you had mentioned that the availability of the 20 gigawatt single line unit for phase 1 will actually lower your structural costs as well. So how will the operating margins of this 20 gigawatt single line setup actually compare to the original 10 gigawatt plan that you had?
Right. So earlier we were planning a 10 gigawatt where we were doing a single line of a 12 ppm single line of 10 gigawatts. So when we further evaluated, we realized in the same land, in the same area, we could double our capacity by choosing a higher model, which is a 25 ppm model. And there would be substantial saving of almost 5% in terms of operating cost. So because of these two reasons, the land requirement and the saving on operating cost, we decided to increase the capacity from 10 gigawatts to 20 gigawatt in phase 1 itself. That is the primary reason.
Okay. Anything on the funding mix? Because the revised project cost, if I'm not mistaken, is around what, 1,600 odd crores.
Correct.
Your strategy is to use 60% debt at the subsidiary level and 40% equity from GPIL's internal accruals, right? How will this impact your net debt-free status when it comes to the parent company?
See, at the moment, our cash flows are very healthy. Our steel plant hasn't kicked off. Of course, our pellet plant got commissioned. So revenues from that will start coming in from next quarter. Our mining EC is expected very soon. Once that is in place, so for FY27, we have a substantial increase in our free cash flows. So we might not be net debt going forward if the steel plant comes up. But looking at the current cash generation and whatever loan or whatever money we raise from the market, we are very confident we will be very healthy in the next 5 years. We don't see any challenge in servicing a debt if whatever we borrow from the bank.
I have two questions, one on your company, one on the industry. Hiral may have more, but one on your company. Therefore, based on all the plans that you have right now for BESS and even otherwise, we've spoken in the past wherein your plans for the non-BESS business, which is your main business, of course, are fairly aggressive too, right? What is it as you end the first 9 months or as you end 2025? What is it that you believe could be the growth rate for your company? CAGR, let's say over the next 2 or 3 years?
See, on the steel side, it's very well known. We're backing on a iron ore mining EC, which we should receive in next, probably a few weeks. Pellet plant is already commissioned. So you can see growth happening that side. And on the BESS side, we are very clear, although we are a new entrant, but we want to be in the top tier when it comes of capacity and execution in India. So we're looking at a long-term plans for BESS, and we want to be in the top tier, compared to other peers in the market.
Just one more question, Abhishek. So battery energy storage systems for the power sector alone, you said, is 300 gigawatts by 2030 and export. Now there is best systems for some of the other sectors as well. I believe medtech is coming in a meaningful way, needing energy storage solutions and battery solutions as well, right? Yeah, and correct me if I'm wrong. So the overall demand, you believe by 2030 could be much higher as well.
Yes, see, so 300 gigawatts is only from the power sector. And if you understand the technicality of battery storage, right? Battery storage can be implemented anywhere and everywhere, whether it's your home consumption, whether it's, agriculture, or whether it's commercial buildings. So battery storage is going to be the future globally. And on the export side, Europe's demand is about 400 gigawatts. US is about 150 gigawatts. So the capacity requirement of battery storage globally for any sector will keep going up. That is for sure.
Got it. Abhishek, this was a great explainer, some knowledge about what Godavari Power and Ispat is going to do on the best side as well as the others. We'll of course look forward to some exact numbers. I believe post your quarterly numbers are out. So
Right.
wish you all the best for quarter 3 as well. And thanks for speaking to us today.
Thank you so much. Thanks, guys.
All
Have
right.
a lovely day.
Yep,
Bye.
you too. Merry Christmas. Have season's greetings. Have a great time.
Hanuma Prasad Modali joining in this morning. He's Managing Director at Deccan Gold Mines. Thank you so much for speaking with us. Tell us first about the Spanish mine and why you want to mine there. What is the idea? How does it add to your strategic outlook?
Good morning. Thanks for having me here on the show. As you all know, tungsten is a very critical mineral. It can sustain very high temperatures like 3,400 degrees, and it is used as a super alloy in jet engines, rocket components, etc., etc. So the company, the Deccan Gold Mines, for the last 3-4 years has been diversifying into the critical mineral sector, and the Spain is one of the destinations that we have chosen to be in. The reason being, this particular belt is known for tungsten mineralization, and there are a number of tungsten deposits that are being developed. And actually, if you see in the global production, of course, China dominates everything, but in the top 5, Spain is also one of the tungsten producers. So we plan to be there. And also, the Spain offers several incentives. I mean, it has, apart from the incentives, it has a good infrastructure, there is
the capex? What is the capex that you have
Yeah.
to spend? What is the acquisition cost? And just for my understanding, tungsten, as you're saying, is very valuable. Isn't that something
Yeah.
which the government or the sovereign in that location would also want control on? So what is this deal going to be like? Do you have control on what you mine?
Yeah. The plan is it's a gradual investment that we make. We are looking at around $40 million investment till we set up the processing plant in that project. Initially, first 2 years we will be drilling and improving the resources, and subsequently we will get into the processing plant. It is a critical metal, and the government would like to have a say in that one. But as of today, the policy in the Spain, actually they are giving incentives even to export these critical commodities. In the next 2 to 3 years, we'll be investing this kind of money, and we are hopeful that these critical commodities can be brought into India at some point in time.
Okay. So this is Hiral on this side. I want to understand, your focus initially was India. In the last 2 years, you've actually prioritized expansion when it comes to Tanzania, Spain, and other regions. So what is the reason for the priority to be given to expansion and diversification into other regions versus your India operations?
Yeah, I think you're right. Last 2 to 3 years, we have been diversifying. Previously, when we started off, we were like a gold based. I mean, our entire focus was on gold and in India. But in the last 2 to 3 years, we have clearly seen there are opportunities outside India. And also, we took a decision to move into the critical commodities sometime around 2021-22. I think that was a very good decision we made. And obviously, the driving force is wherever the geology demands, wherever there is a potential, we have to go there. I think even Government of India is now planning to go to various other countries to get these critical metals. So our diversification strategy going outside India also is in tune with whatever that is happening in this particular sector. At the same time, we are developing mines in India. The gold mine in Andhra, which has now come into the production. that has been developed over the last last few years, in fact. And also we are fully participating in Indian operations as well. I mean, like Indian mining industry as well. Like we took a nickel, copper, platinum block in Chhattisgarh through auction, and we are going to explore there as well. So yes, we have diversified into other jurisdictions because there are potential areas, and as a company, we need to look at all the possible opportunities elsewhere as well.
Mudali, good morning, and all the best for all of these plans. Now, sir, I would love to know, when do any of these plans or some of the earlier noted plans start in some way showing up on the numbers for Deccan Gold, right? I mean, I saw the change of management happening in 2021. You got reappointed 24. But I've heard about potential gold mining from on the Ganajur or some of the other mines since 2006. Now there are broader plans that Deccan Gold as well has. But the numbers don't show. There is no revenue, there is no profitability. In fact, there are accumulated losses. When does it start showing on the numbers?
I think since we started in 2003, we were focusing in India. We made several discoveries, but from 2021 onwards, we made a change in terms of our strategy. We diversified. You're right. In the last few years, we have been investing in these projects. But you also might have seen that this year we have commissioned both the projects. That is one in Andhra Pradesh, where we have 27% in that project, and also the Kyrgyzstan project. Last couple of days back, we started the trial. So we are effectively into the gold production. From next year onwards, you will see the numbers, the revenues that are coming out of these two projects, particularly from the Kyrgyzstan, where we have 60% controlling stake in that project. We are going to produce about 350 kilos of gold next year. So next year it will reflect, but I think that's how the exploration companies are. Till you come into the full-scale production, the revenues may not be there. It may show as accumulated losses, but once you come into the production, it's a different scenario altogether. So we are very, very confident. From next year onwards, we will have the numbers, and also we have a pipeline of projects which will add value to the company.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to,
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye.
Good afternoon, passengers. This is the pre-boarding announcement for flight.
We're for takeoff.
Santa's bringing a very special gift to Maharashtra and the people of MMR this Christmas because the Navi Mumbai International Airport will open its doors for passengers. This has been the need of the hour in a place which is so congested, and now you're going to have this swanky airport. You've seen the sneak peek here, and with me to speak about it is Jeet Adani, Director of Adani Airports. Jeet, thank you so much for your time.
Of course.
This place looks fabulous.
Yeah. It's turned out quite nice.
And it's been a labor of love, isn't it? Because you're thinking of bringing in an airport not just as another service for passengers, but also as an experience.
Of course. So that's the whole idea behind Navi Mumbai, that, you know, we've really thought through the design, the elements that have gone in, everything from the point of view of experience. There's things that you haven't seen today in the sneak peek, but a lot of the passengers you will see. You know, where you can just spend at least 2 to 3 hours just going and staring into things, and every single thing from the food to the art to the hospitality, the staff training to the retail, everything has been so carefully curated, keeping in mind our passengers. And although one thing I'll tell you, it's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger set. People who are actually flying for the first time.
Yeah.
People who, you know, are working professional. People, of course, the 1%, but also the bottom 50%.
No, so talk to me a little more about that, because this ties in beautifully with the concept of Udan.
Exactly.
Right? Which is,
yes,
you know, Hawai Chappal mein Hawai Jahaz mein, which is where that concept started from. How do you build that into design elements of something which is a huge infrastructural service?
So I would say a couple of things. One is, and I'll show you on the screen, that if you see a small thing, people who are flying for the first time, there's a good chance that some of them might not even know Hindi if they're coming from, you know, Mumbai is such a big city.
Yeah.
So anywhere they are coming from or they're going to, depending on the location, the languages change. Yeah, it's the first. I don't think it's done anywhere else in India. Where if someone is going to Kolkata from Mumbai, Kolkata of course is written in English, but then it's written below in Bengali. If you're going to Gujarat, Ahmedabad, it'll be written in Gujarati underneath it. So that gives that sort of, you know, very small thing I'm saying, but it tells us a lot about the mindset.
No, so come to that point again which you made. I thought that was very interesting, where you said that the person will see the name of the place they're going in the language where they're going to.
Of course, yeah. So it's a small insight into the mindset that's gone in. But even if we look at the overall commercial offering, And this came to me actually when I was in Mumbai airport at the food court. Food court is a place where you normally go to get an affordable bite to eat, right? But you go there and there's a vada pav there for 430 rupees. Or it could have been 530, I don't remember. Come, let's go on a ride and
continue this conversation.
Absolutely. So we went to the food court and I was appalled to see that, boss, how can the vada pav be here for 430 rupees? I buy it outside for 40 rupees. And so that's when we actually started developing the retail strategy for here. We've cut all the middlemen and directly gone down to the chef and being able to price not at 40 rupees of a lari wala, but at least at a decent enough price of 80-100 rupees where people don't feel like they're being gouged.
How do you manage that? And then in that case, if you can actually do that, and this is I think going to be a general interest, public interest question, why should airport food be so expensive?
It shouldn't.
You're showing that it can be cheaper.
Of course, it shouldn't be. I think it has to do with a lot to do with how the commercial structure put in place is at a lot of places. But at the same point, I would also say there should be food which is expensive, but that is to cater to a certain kind of traveler. The majority of travelers who are flying don't have the ability to afford that food, and we're letting them go unserved. And that's the opportunity we're trying to tap in this place. So if you see here, you see Wagamama over there, which might be at a price point of 1,000-1,500 rupees for a meal of two. A lot of people that's like the perfect sweet spot for the middle class population. But then there's also the food street, which is going to be on average you can get a meal for two people for 200 to max 300 rupees, which is good for the general population in place. And then you can go upstairs to the Michelin star restaurant, which is very expensive, but people going there don't care about price, they care about the place they are. So we are here to serve the entire consumer cohort.
So one is of course the experience when you come here. So if you have a delayed flight, you're not going to mind it too much. You have a lot of things to do, and that's important as well. The other is accessibility, and what this airport has done is it's just lifted the infrastructural profile of the whole area. I think that's something people don't realize.
100%.
That large infrastructural projects have that ripple effect, isn't it?
Absolutely. And look, it's like a necessary part for us, to make this successful. And show you a couple of things downstairs as well. Look, for us to make this airport successful, we had to deal with the biggest issue of, what's going to be the drag factor. What's going to make people not want to come here? Is going to be the inconvenience of the travel. Is going to be, that people are used to a Mumbai airport in the middle of the city and now they have to travel out to go to the new airport.
Which is the norm, by the way, in some of the largest cities in the world.
Absolutely. So we tried to target that by planning along with the government to make sure that of all modes of transportation, be it road, rail, suburban, metro, water, vertical takeoff, eVTOLs, high-speed rail, everything sort of interfaces with the airport on this side. So, we are very well looking at 10 years down the line. This is probably one of the most well-connected places in India because every form of transportation interfaces through this.
Including water taxis.
I thought
that was a novel idea. Can you explain in a little detail how that's going to pan out? What would be the experience of someone coming in or out of this airport once all of this linkage takes place?
So once everything is in, you're very well looking at someone who's collecting their bag, getting onto one of our monorails within the site, which will come up, getting onto the monorail and going to the water taxi station, taking a water taxi, going down to Radio City near Gateway of India, and going to home using a cab or further on metro.
Oh, wow. So, okay, now let's come to the strategic importance of the Navi Mumbai International Airport from the point of view of the needs of this city and the surrounding areas, because you have fairly ambitious targets, like you 20 million passengers in the first year, and then of course you scale up to 90 million. How are you going to make that happen? What's the plan there?
So I would say 20 million passengers is something that we are targeting next year. Because Mumbai's latent demand is anyways very, very high. is the demand which has been not unserved since 2016 when it hit its peak. And so we don't foresee in the first phase there to be any challenge. Now, given the GDP growth of the MMR region, the kind of opportunities coming in, we look about GCCs opening up all the time. We're talking about aviation ecosystem growing here, the service sector growing here. So I'm very confident that the overall traffic growth is going to keep trending at the mid-teens year on year as it has. And that means we'll be 15 years down the line, we'll be needing a third airport because this one will be full.
Wow, and that's the pace at which things are moving.
Yeah.
Are the airlines also ready? Because the whole infrastructure has to come in place. You need enough aircraft.
Yeah, I think that's the biggest challenge. How do we, the supply side of, I think the airlines are willing and they've demonstrated their commitment to keep buying more planes. But we are always stuck with the issue of supply chain.
Yeah.
And that's for us to see how it solves itself.
For the first phase, I think all of the major airlines have signed up. If you're speaking right now to travelers from around the region, what is that one line or two line pitch of why they should select Navi Mumbai International Airport? Apart from, wherever they are and the distance to where they are, that would be one factor. Price tickets would be another. But what is going to be the differential here?
I would say, if I have to say it in one line, say come experience New India. When you see every single thing from the art, from the experience to the materials, to the design, to the retail, everything talks about, it's connected to India somehow, but it talks about it with full youthful modernity. And that's what this airport represents.
This is clearly a labor of love, Jeet.
Yeah, no, it's been 4 years in the making.
Yeah, how many people, how many man hours on putting this together and making sure it's not just another, cookie cutter airport?
Yeah, no, it is 25,000 people at its peak. 4 years. 4 years. Once it starts, 5,000 people in the first phase will be working here day in, day out. Probably another couple of thousand indirectly. So it's going to be a buzzing hub of economic activity.
Yeah, and what has it also done for the surrounding areas? I mean, part of the airport development is also city side, real estate development, and how the airport lends itself to further development. What are the plans there? What's the outlook there?
So the whole idea behind city side development is that leverage the connectivity of the airport, leverage the place of the airport in the city's ecosystem, and double down on that. So in Navi Mumbai itself, what we are planning, there's 240 acres of developable land, of which the first phase we are doing immediately, which is already under construction. In the end state, you're looking at anywhere from 15 to 20 hotels, multiple million square feet of office spaces, GCCs, that kind of stuff. A massive retail mall. Which we're targeting to get it as the first outlet mall in India. So people have seen outlet malls in London and Milan and US.
I'm excited about this.
Exactly. So we're trying to get to set that up. Again, differentiating itself. Then entertainment is also going to be a big part of the ecosystem. So we're planning for a 25,000 seater arena integrated with the retail and hotels. To serve the needs for the live entertainment economy, the gig economy that's coming up.
So, and which is because there's one stadium which is in
this entire region,
entire region, and it's always packed.
But you think about it, if you had to go to DY Patil Stadium, the connectivity isn't as good.
No, it isn't.
When you have the connectivity of the airport, where you can take a water taxi and a monorail to go to watch some big band coming to perform, or take the metro directly in, directly out. I think that kind of connectivity nowhere else will be there.
What has been your own inspiration for some of these thoughts, Jeet? I mean, obviously you're well traveled, you've seen the world, you want to bring some of that here.
Yeah.
What has been the whole thought process that you went through when this project first started and you got involved in this?
I mean, look, we spend a lot of time looking at a lot of airports, Zurich, Schiphol, Changi, Dubai, Doha, Abu Dhabi, Dallas. And I wouldn't say there was any one airport which I would attribute this to, because this is sort of taken little bits from all of them. Of course, airports are also very situational, so they're developed and designed for the way their system works.
Yeah, and at that phase of where
that economy is. But yes, we tried to take the most of it. And we took a lot from, Changi into think through how experiences can be curated. Changi's done a fantastic job with, the jewel and the forest and all of those things.
Yeah.
Even Abu Dhabi now, Doha has now done it with the forest. How we, position retail not just as a storefront, but as an experience again. That you don't want to just do sales, you want to give experiences. Because there's a lot of research that when you give a good experiential retail, your values of purchase increases. Because people feel they're happy. If you're going to, let's say, a cosmetic store or something, if I've tried on a nice hand wash, I'll be more likely to buy it than not.
Correct.
So that's those kind of things, make it more interactive. And again, like I said, the technology backend also we looked at a lot from Skiffle and Zurich.
Okay.
And that's been one of our collaborations that we did. Yeah.
Oh, fantastic. Yeah. So, like some airports have a big draw, and you spoke about some international airports. For them, sometimes duty free is the big draw, or it,
of course.
It used to be on the retail experience. It's also become a lot about if you're spending time at the airport, then there should be affordable things that you can do. How much of that has built in? And take us through some of those concepts and ideas that will come in.
No, one thing which we are innovating, which I doubt anyone else has done, small bits and pieces, a couple of other places have accomplished this, is creating a very strong experiential zone. So there's a zone which is still boxed up. It's dedicated to showcase 3 experiences, which we will also be, offering to companies to brand it.
Okay.
And those experiences, and I've seen those experiences, it's mind-boggling. Like, I don't want to say too much and reveal too much, but
I'm guessing that there is a bit of a reveal here. At least give us some sense. Absolutely. When you say experiences, like what?
So one of the experiences literally takes you back into time and to experience the forts of Maharashtra, how they would have been 200 years back, or 300 years back. And just to see the ecology and the quality and the detailing. And a lot of AI has obviously gone in doing this, but the kind of quality and detailing that's there, and the immersion that you feel in the entire thing is unreal. And there's one glimpse I'll give you, but there's a couple of more also. I think that's something quite unique that no one else has done. When you talk about commercial and food and lounges. With lounges, the biggest challenge the whole lounge industry is going through is that because of the increase in card usage, there's no differentiation for passengers.
Yeah.
You would be a business class customer sitting in a lounge where all card people have come in, you don't have an experience. So we're actually differentiating lounges across the airport by silver, gold and purple categories, and that's why we were trying to have separate access controls. So for people in business, go to gold. People in first go to purple. People in just using a free card to come in. We get the basic services, very nice place to sit, chill, get good Wi-Fi, watch a movie, whatever. But that's the basic amount. If you go to a purple, you can get a cocktail, you can get a Michelin star meal, you can get like a, there's no buffet. Everything is restaurant style.
A la carte and stuff.
So create differentiating based on experience and pricing.
What do you think is going to be the growth potential as well of this business and of the Navi Mumbai Airport in terms of, actually contributing to revenues coming in? How big do you see this growing?
So, if I give you an overview of the airport business as a whole, airport business will see one step of growth in the next year once Navi Mumbai comes in. And then again, it will see some gradual growth over the next 4 or 5 years until 29-30. And then again, a massive step in 29-30. For a couple of reasons, because the next step right now is only Navi Mumbai coming in. I'm saying only, it's a big size, but it's 20% increase of traffic.
Immediately. From the 25th.
We're at 100 million, approximately 100 million passenger base. This is 20 million, so 120 million straight 20% increase. But the bigger step is because Navi Mumbai phase 2. Then the next phase of Navi Mumbai will be open in 2030. Ahmedabad's new terminal will be open in 2030 for the Commonwealth. Jaipur's new terminal will be open. Lucknow's expansion will be done. Guwahati is opening now. And Trivandrum's new terminal will be open. And all of the 15 million square feet of city set development we're doing, everything will be will be commissioned and leased out. So an entire massive portion of our business is going to come online in 29-30, and that will be, higher, upwards of 20-30% of revenue jump at that time.
Wow. So in 2030, what is the picture looking like in terms of total number of passengers and city side development?
Total number of passengers should be at 200 million in 2030.
Wow.
From doubling what there is today. And in terms on revenue will be too much of a forward guidance, but I would say at least in terms of passengers, operationally it will be double the size of what it is today.
Wow. When you look at the airport business and what your learnings have been, and I think the last 4-5 years has been specifically interesting because of the FOMO travel.
Yeah, of course. Yeah.
Things just changed. And then you have the regional airlines coming in. So how do you see that picture as an evolving landscape?
Look, I think travel as a landscape fundamentally has changed. After COVID, the way people travel, the reason people travel has changed, both for good and bad. Good because leisure travel, the importance people give to taking holidays is increased. But at the same time, work travel is decreased because you're Zoom now. Still, I don't fully believe you can do away with it, but
do away with Zoom or do away with
physical travel.
No, I think in real life experiences are back. I mean, look at what's happening with the gig economy. People are traveling for weddings, concerts, everything.
Exactly. So there's a massive boom in this industry, and I wouldn't say it's a one-time thing. It's now structurally the industry is changed. Now it's poised for growth, but like we were talking about, the only thing is airlines and planes.
Do you see with more regional connectivity coming in, this paradigm also shifting? I mean, there was a time when air travel was a very luxurious experience. Right?
Yeah, of course.
Everyone could do it. I'm not saying everyone in India can still do it, but that pie is widening rapidly.
No, 100%. And regional travel is going to be important. I mean, you look at just what happens in China and what happens in the US. The regional routes, so-called regional routes, start with the smaller planes, keep upgrading to bigger. I mean, I've seen some routes which are to regional cities, small towns if you compare it to India. And they'll have like a wide body plane going between them and completely full. So I think it's just about developing the entire routes and developing the ecosystem. So definitely, I'm a big believer of connecting regional cities and regional to metros also.
Okay, just one last point before I let you go. We've spoken so much about how this airport is high-end and going to serve new kind of experiences. How much of AI or technological integration have we seen in it?
Oh, a lot. So this airport, we developed ground zero of, like the entire backbone of the airport was developed keeping in mind our Avio stack. So Avio is our enterprise stack for airport systems. And what we've been able to do is merge Adani One and Avio on the back end. So the way customer transparency is, I won't get anything better than this, because what the customer sees is what the operator sees in the same time, in the same accuracy. What building this up grounds up has allowed us to do is bring in. I wouldn't say AI is as pervasive today as it can be. There's a lot that we can still do, but it's still experimental. It's not something that's off the shelf and can be deployed in a critical environment like this. So we're working on a couple of things which can automate workflows. But there's been a lot that's been done on base technology, because I feel airports are also behind on that. Forget forward-looking technology, but even base things like data management, transparency. How can you open? Just do smart tracking. It's information. People love information, right?
Yeah.
So if I'm able to know everything about where my bag is, where my flight is, everything, I'm happy now.
Yeah, I always wonder in those flights, why do people just watch the picture of the plane going where it is?
Exactly. Because people love information. Yeah.
Well, fantastic, Jeet. Thank you so much for your time and in explaining what a wonder the Navi Mumbai International Airport is going to be. All I can say is it's for you to come and experience it. Thank you.
Thank you.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us. Let me come to Mr. Arun Selvan, President and CFO of Chola Investment and Finance, to throw more light on the issue. Mr. Selvan, thank you so much for your time to us here at NDTV Profit. And like I said, the best response is one which is factual. And I think that's what's happened with you, isn't it? I want to ask you, why do you think your company and your group was at the receiving end of this attack? And I call it an attack because it's not just you saying, no, we didn't do this. Now you have a lot of independent brokerages and analysts saying that a lot of things that you were accused of is something which is industry practice. Then why do you think Chola was singled out?
I think you should rather ask them rather than me, because we didn't prompt this, or we are at the receiving end. But I think with all humbleness, I should say the growth in Chola had been quite, good. And so that might have attracted attention of people to sort of look into what we are doing, or wanting to sort of put certain hurdles in our growth path. I really don't know, and I really do not want to be worried about that. As long as I know that what we are doing is right, and what we are doing is, as per the industry, and what we are clear. Our disclosures across, whether it is driven by the regulation or even outside that, when we do our investor presentations, etc., have been much more granular than most of the other industry players, and we have been always open to any new thoughts and new ideas of sharing, and we have been the first to come across divulging information with regard to our operations. We'll continue in this space, and we do not want to get worried about these sort of small thorns that come our way. It always happens, and we are not worried. But I am thankful that the market and participants, like the brokers and the research analysts, have given the fair opinion about what we are doing and what is not misleading about the allegations.
Comment? Were you asked for a comment or your response before this was put out?
Yes, it was asked, and it was said that they will be releasing it. It came to us day before yesterday evening, and it was supposed to be waiting for our comment till yesterday evening, when the press conference they had originally scheduled. Unfortunately, while saying this, they had parallelly released it to all the media, and we were already getting calls. So that is where we had to react immediately and come on board to clearly state our position. And it was not a very difficult task because whatever we are doing is what we are talking about. So it is easy for us to come back and say this is what is happening, and the allegations are false. The allegations have been made, with different comparisons of different time periods, and it's completely chaotic and unnecessary. But let's just say.
Okay, interesting inputs. Thank you so much, Arun Sarvan, for speaking with us and coming in and answering all of our questions today.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to.
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most.
Hello and welcome. A very good afternoon, viewers. This is Malika Mishra and you're watching Profit 360 on NDTV Profit. But apart from the Christmas spirit, today is special also because December 25th marks the day Mumbai gets its second international airport. The Navi Mumbai International Airport formally kickstarts its operations today. The airport, in fact, welcomed its first commercial flight with a water cannon salute this morning. The water cannon salute is a ceremonial aviation tradition in which fire trucks spray arcs of water over an aircraft as it taxis. IndiGo flight 6E460 traveling from Bengaluru landed at the NMIA at 8 a.m. this morning. My colleague Saurabh Gupta sent us his ground report capturing the moment of NMIA receiving its first flight. Let's take a look.
As one enters the terminal, one gets a feel of what an amazing experience it's going to be for flyers who are going to fly through the Navi Mumbai International Airport, which is a digitally advanced high-tech airport. This is how futuristic airports in the country are going to look like and how airports in Viksit Bharat are going to look like. Now, the airport is not just about high-tech and design. It is also about integrating India's elements, India's cultures, and this is of course inspired by the lotus, India's national flower. The design, when you see, is inspired by the lotus, India's national flower, and it is of course integrating the architecture with cultural identity and contemporary design. Along with sustainability features. In its initial phase, the NMIA is designed to handle 20 million passengers per annum, with future expansion planned to scale capacity up to 90 million passengers per annum. So, to give you a sense of what the entire project entails, this is a full-scale model or a miniature model, of course, of the full scale of development at this airport. Now, this is the Terminal 1, which is the one that's been constructed now in the phase 1, and then of course the two parallel taxiways and the initial runway, which is of course the southern runway of the airport. And then there are, so look at the connectivity. You have this metro station that's coming in, you will have road connectivity and metro station that's coming in, and that comes all the way up to the terminals. And then of course there is the
the metro terminal at the station. Then also there is the Targhar station, which is the local train connectivity, and there is metro connectivity that's coming. And then there is also this particular line, the automated people mover, something that foreign airports have. That is also planned here. With the first flights landing and taking off today, with operations beginning at the Navi Mumbai International Airport and commercial paying passengers taking flights from this airport, this day in Mumbai's civil aviation history is going to strengthen the city's role as a global gateway and support long-term economic growth through expanded aviation capacity. Planned as part of a distributed aviation framework, the NMIA of the Navi Mumbai International Airports, with flights now operating from this airport, is set to transition Mumbai to a multi-airport system aimed at improving capacity, operational resilience, and long-term scalability, giving the city a chance to grow, a chance to achieve its potential and rewrite its own destiny as it looks to build for the future with a goal in Viksit Bharat 2047.
Well, that was all about the first flight that took off from the Navi Mumbai International Airport. Now let's show you the visuals of the first flight that landed from at the NMIA from Bengaluru. Our colleague Ritu Rajpurohit captures those historic moments, and we also bring you an NDTV exclusive with Gautam Adani as he personally welcomes passengers at the new airport. The Adani Group chairman calls it a proud moment for Mumbaikars and says the facility will ease air traffic and offer world-class services. Let's take a look. Here you see finally the first flight that took off from Bengaluru Kempegowda International Airport has landed here at Navi Mumbai International Airport, and you can see the excitement here in the air among the passengers, the way they have been welcomed here at the airport, being garlanded. You have Adani Group chairman himself, Gautam Adani, being here greeting the passengers with a bright smile therein. You see, that's the sort of a special welcome that's been provided the moment that you had the flight landing over here. There was a special welcome in the form of cans, basically the water cans, showing that whole of a different dance show for the passengers. You have the passengers being with the phones up now, excited to take selfie with the man himself here, who is valuing each and every passenger being landed at Navi Mumbai International Airport. It's a historical moment, of course, because this is the airport with the lotus structure, which again significantly of nation's national flower. But the picture here says a different story of how that the aviation gateway is now seeing a new chapter altogether. We have the man himself, Mr. Gautam Adani, joining us, who is greeting and welcoming the passengers with a bright smile. Sir, the excitement is in the air. We saw, passengers clapping. We are seeing a new gateway altogether when we talk about the aviation, sir. What's like for you now?
Oh, actually, this is a very proud moment for Mumbaikars, and we are really fortunate where we got basically rights to develop this airport. It's a brand new airport, and we try to make it the world-class airport.
Sir, at this point in time, what would your really message be to the passengers? I saw them all with the phones up, being excited to take selfie with you.
No, this is actually Mumbai was struggling since last 10 years to having the more facility on airport side, and the present Mumbai airport was actually fully jammed. And this will basically ease out air traffic movement in Mumbai.
Now, as the city welcomes its second airport, let's talk to some voices that would help us understand the gravity of this milestone. We have with us Ajay Avtane, aviation expert, and Jitendra Bhargava, former ED at Air India. Thank you so much for joining us, gentlemen. Let me begin by asking Avtane, how will NMIA's launch today significantly reduce congestion at Mumbai's Chhatrapati Shivaji Maharaj International Airport, sir? And I ask you this question because, Mumbai has been struggling with managing its congestion for a long time. We're a very populated city and there's high traffic. How do you think NMIA is going to solve that key problem?
So, thanks for having me on the show. I think one of the primary issues
with Mumbai always has been that there is only one runway. So they've been trying to do the best that they can do with managing, as much traffic movement out of that single runway. With Navi Mumbai, obviously you have two runways now. I mean, the first one's already operational right now. The second one's coming up. So there's already planning for two runways, and I think they've been potentially talking of a third one as well. So additional capacity is always welcome, and this is going to be helpful for the people of Mumbai and the visitors to Mumbai, because obviously now you don't have to really kind of be constrained by capacity at this point of time for expansion into one of the largest cities in India.
Expansion does give a relief in terms of handling high number of passengers. But Mr. Bhargava, from your experience at Air India, how will NMIA relieve the severe capacity crunch at Mumbai Airport that has impacted operations for years in some form or the other? And do you reckon with his view, is it the same reason?
No, I fully agree. And the fact is, it's a historic day for Indian civil aviation, historic day for Mumbai city. As a financial capital, Mumbai had always had an important place in Indian aviation. Let's not forget, the first flight which heralded the birth of Indian civil aviation landed in Mumbai with J.R.D. Tata in command. Now, what are we looking at is that in the last few years, Mumbai ceded its place and other airports grew because they had greenfield airport. What was done in Mumbai was that the old airport was only renovated, refurbished, and as we call it, a brownfield airport being made to add capacity. But now that the new greenfield airport is coming, and as Ajay said, the capacity will be increased in a calibrated manner, which would mean that the government will be able to give slots, both departing and arrival slots, to foreign airlines, to domestic carriers to expand. And that is what will take the load off the Mumbai existing airport, and there'll be no more congestion. And once you take care of the congestion, the growth will certainly take place. Mumbai being the financial capital, and more airlines would love to travel, arrive in Mumbai and have businesses out of it. The other part, of course, is that once this airport is coming up now, and you will find the real estate growth in that area. So it acts as the catalyst for economic growth, economic activity, and this is what we must be looking at. And I am myself looking forward to traveling from the Navi Mumbai International Airport day after, just 48 hours from now.
Right. Mr. Bhargava, you highlighted a very important point. You mentioned city-side development as well. And I remember when I was watching the interview that our managing editor Tamanna Inamdar did with Jeet Adani, he did mention that how this airport is going to fuel growth, not just inside, but also outside and in and around the area. It's going to uplift the economical appeal of the area by various folds. But my follow-up question to what you just said, and this is just me being inquisitive, what is a metric for the success of an airport? And I ask you that because while the airport has been made in a very fancy and appealing manner, where there are many features that make the airport experience itself extremely memorable, I just recently heard somebody say that the success of an airport lies in the number of airlines that would eventually come and partner with the airport. How do you think NMIA stands at that position, according to you?
The first thing is to look at that convergence of economic growth, infrastructure creation, airlines adding capacity assures growth in aviation. This is a standard practice that's happened. Navi Mumbai International Airport has all the qualities of an international world-class airport. Now, there is no reason, Mumbai being the financial capital, that airlines will not press the government into giving them slots which were being denied in the past. We saw Delhi Airport grow, Bangalore, Hyderabad, all greenfield airports. They grew in a very fast manner at the expense of Mumbai city. Mumbai would always remain the first choice. So I am very clear about it, that it's a question of time, and as the calibrated growth takes place of Navi Mumbai International Airport, more and more airlines will flock to Mumbai city because Mumbai has the capacity. One thing, of course, one can say that there was a time when Mumbai monopolized the international travel. People would come in from different cities to Mumbai to catch an international flight. But now India, as the Prime Minister has very often stated, the number of airports has grown twofold. Now, with all major cities having their old airport, now you don't need transiting passengers to come to Mumbai and then take an international flight. But Mumbai, on its own standing as a financial capital, will have enough business for many more airlines to come in and fly or add frequencies to it. And of course, as I said earlier, the real estate development, and we have very often said, aviation industry acts as a catalyst for economic growth. And with the coming up of the airport, you will find the area up to 50, 70 kilometers away from Mumbai, from Navi Mumbai International Airport, develop and create employment, create hotels, create travel industry, create businesses for a whole lot of people. And of course, the exports, let's not rule out, because there is a separate thing for cargo that this airport has made a provision for.
Right. So the holistic development is a key byproduct of the airport being built in such a strategic location. But Mr. Vatne, as Mr. Bhargava highlighted, that he sees high potential and expressed confidence in a flock of airlines coming at NMIA. I'd like to ask you, just for the benefit of our viewers, to understand what exactly are the challenges when such a transition happens, and how do you think this is going to happen? Is there going to be a fresh line of airlines that would come with a fresh batch, or are they going to divide their operations between the two airports? What do you think the strategy would be?
So, different airlines will have different plans for this airport. I think, as we've already seen today, Akasa, IndiGo, and Air India Express, these three airlines, and Star Air as well, they've all started operations from Navi Mumbai today. So obviously these are domestic carriers and they will continue to fly from both the airports. What can also happen is for some international airlines who were unable to launch flights to the Mumbai international airports, these might now come into Navi Mumbai and target flights from the same catchment area that Mumbai and Navi Mumbai share. So, domestic carriers, they will obviously split operations between both the airports because, for a Navi Mumbai person or somebody flying into Navi Mumbai for a meeting or a work thing, it becomes easier.
Mr. Aftani, sorry to interrupt you, but you mentioned that the airport would now facilitate flying of those airlines that have not been able to fly from the existing airport, which is in the central part of the city. What airlines exactly are you referring to?
Look, I don't have names, but there could be international carriers who wanted to come into India, but they never got slots because the other airports were crammed. So they can now approach the airport operator and kind of get slots if that was the constraint for them.
All right. Mr. Bhargava, I'd like to get you in and ask you, what key passenger benefits does NMIA bring in phase one, especially for domestic flyers facing overcrowding at the older airport?
One can say that in the initial months, there will be a problem of connectivity. But then when you have the Atal Setu bridge, you'll have a metro connectivity, you'll have even waterways, water boats to taken from that place to Gateway of India, etc. It's a question of time. But then, as I say, always, with all new airports, it happens that in the initial part, you do not plan for a large capacity. And as you go along and the capacity increases, number of passengers will get and there will be enhanced connectivity. So one negative factor, because it is away from the city. And as we have often seen, all airports are essentially created away from the city, but city grows closer to the airport as you go along. So this is a limited, I think, restricted factor, maybe for a year or two, that you will have connectivity issues. And that's why the significance of airlines splitting their operation from the existing airport and the new airport that they have. Because what it impacts is, when you have capacity restraint, the fare differential comes in very often. And then you find, okay, this is closer to the city, so the fares are higher, and in the city, which is far away, your fares are lower comparatively, putting this way. But then, as Ajay very rightly said, at the moment when airlines approach the government of India for enhancing their capacity into India, in and out of India, the government does not look at Mumbai currently because of the capacity constraint congestion. Now that the congestion will be taken care of, you will naturally have more airlines, not just new airlines coming into India, but also airlines adding capacity.
Bhargava, I again have a follow-up to what you said, and you actually make some very interesting remarks. Yesterday, I had the opportunity to speak to some experts on how easy is it for India to welcome airlines, and not just welcome them, but help them sustain on Indian soil. Because since 1995, if you go back, we have seen about 18 airlines fail. And very recently, Ram Mohan Naidu, the civil aviation minister, he announced going to platform X that he's been meeting teams of 3 new airlines, 2 of which have already gotten their no objection certificates, one being Shankh Air out of them, and Al Hind as well. I'd like to ask you, is India ready to now not just welcome new airlines, but also help them sustain on Indian land? And if not, what are those loopholes that you see that needs to be fixed on an immediate basis?
It's good of Minister to say that there is provision for 3 more large airlines to come into India to break the duopoly of IndiGo and Air India, Tata Airlines. The reality is, you really cannot bring an airline and it can't muster support or get a market share of even 2% to 3%. Take the case of Akasa and we can review it. A good airline, but has it been able to muster the market share? If all that it has got is thanks to SpiceJet, whose market share has been dwindling. IndiGo is unlikely to yield ground. Likewise, Air India. Air India, of course, has in the recent months cancelled a whole lot of international flights from their operations. But for a domestic player to come in a market with high taxation, high landing charges, high parking charges, high airport charges, let me add this also, you are unlikely to see a new airline survive. And the reason why 18 airlines, including mega people backed by Naresh Goyal, for example, Vijay Mallya, etc., could just survive, the fact is they never made profit. It's a low-cost model that India needs, and if the more low-cost come in, and of course these new airlines we are talking about are low-cost carriers, but for IndiGo to yield ground, considering that they've already placed orders for 1,000 aircraft to take care of future growth of the Indian market. Likewise, Air India has placed orders for 570 aircraft to take care of the future growth. Now, how is anybody going to grow? And unless you have some volume scale of operations, you cannot break even in the aviation industry. It's a tough industry.
That's exactly my point. Thank you so much for giving us some reality check on where India's aviation landscape currently stands in terms of sustaining airlines. But Mr. Avtani, how might NMIA improve connectivity to underserved areas in Maharashtra and beyond through its initial domestic routes? Because we've been talking extensively about how its multimodal transport facilities is going to enable transport from different locations within Mumbai and Navi Mumbai. But what about its strategic location and the significance of it in connecting other areas, not just in Maharashtra, but beyond?
So, one of the interesting things about the location is that this is almost centrally between Mumbai and Navi Mumbai. So, one of the impact of this is going to be that Pune, which does not get enough connectivity of its own. Now, the people from Pune don't have to come to Mumbai whenever these new flights internationally and domestically start. They also have the option of taking a flight from Navi Mumbai in case that is served by the destination that they want to fly to is going to be served from there. So that's one point on the connectivity. And also, I was reading this morning that a lot of at this point of time, a lot of bus services are being started into the neighboring areas, which can also, again, connect a lot more people. People who had to take cabs, to drive down to Mumbai, and they can now kind of just take a bus or still get a cab and come into Navi Mumbai, which is closer to them at this point in time. Over a period of time, obviously, as the new options of connectivity with the airport are established, there'll be a lot more people coming in because, this is a greenfield airport and there is hence a lot more capacity here to accommodate passengers. And again, this is closer for a lot of regions of Maharashtra as compared to the, Mumbai airport, which is like right at the tip of the island city sort of.
Okay. Great point made. Thank you so much, Mr. Ajay Avtani and Jitendra Bhargava, for giving us your insights into this milestone for Mumbai. Of course, there are areas of more development, there is scope of further expansion, but one can't ignore how strategic and important Navi Mumbai International Airport is, not just for Mumbaikars, but also for the country at large. But viewers, Navi Mumbai International Airport is now open for business. That matters, bringing faster travel, reducing congestion and fresh hope. From the first IndiGo touchdown this morning to the promise of 90 million passengers in the future, NMIA has the potential to be a game changer for travelers, businesses and the city. And on that note, viewers, it's the end of this edition of Profit 360, but I do urge you to continue watching NDTV Profit as we bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to,
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani and today we're going to talk about two very interesting topics. The first one is IPOs. 2025 was a blockbuster year for IPOs. Heavy subscription numbers, strong grey market buzz and massive retail participation. But once the dust settled, did the returns live up to the hype? Is the question that we're going to ask to our guest tonight, and to look at how the IPO scorecard is looking like, and to take this conversation ahead, Narendra Solanki, Head of Fundamental Research Investment Services at Anand Rathi, joining us now. Mr. Solanki, thank you so much for taking out the time. Firstly, in terms of 2025, the second half of 2025 did see a flood of IPOs coming in. We saw heavy subscription numbers as well. Some saw listing gains. But if you have to give retail investors a report card so far as to how IPOs have done in 2025, what would that report card look like?
Yeah, hi Mahima, and thank you for inviting me. Definitely, the second half of 2025, we have seen buzz coming back in the primary markets. Initially, the start of the year was riddled with a lot of geopolitical uncertainties and US tariff tantrums, etc. And gradually, what we have seen in H2 is that the tariffs have started coming down. It looks more likely that India would also be signing a deal in very soon. Plus, a lot of geopolitical uncertainties have also reduced. And added with that, we have seen multiple rate cuts along with not only from RBI but also from the US Fed. So all these things plus the domestic factor macros like inflation coming down and the growth picking up, especially the Q2 GDP, which has been surprising on the positive side. So all these macro factors have also added to the sentimental optimism, and hence we have seen a bumper IPO this year in the H2. And I think we have almost hit more than 100 IPOs. A century of new IPOs have already been hit. And we have also surpassed last year's peak IPO funding, and I think we are closely sitting at around 180,000 kind of number, and maybe we would be crossing and touching around 190 or something by the year end. So definitely the IPO in 2025 has been very good. Now coming to the 2026 outlook, I think the market would be still be buzzing with a lot of IPOs from the big names, and the markets are also expecting that a lot of companies like Jio, NSE, Oyo, and new age companies like PhonePe, Flipkart, PayU, Zepto, Boat. So these are the interesting names which are lined up for the next year as well. So I think the market should continue to remain in a good mood as far as IPOs are concerned.
But Mr. Solanki, do you think that recently, with a lot of IPOs that have come in, is it about strong businesses coming into market, or it is more of strong marketing of businesses coming to market? What is the view like?
I think it's more about the business of the company as well as at what valuations the company is coming out with an IPO. So wherever investors have found out that the business proposition for a company is very good and the valuation is also very attractive, so that IPO has performed really well. For example, you may have seen how the LG IPO has done the listing gains. So, where in that scenario, the business case was also very good. The growth was very promising. Being a market leader in most of its segments, having a market share of more than 40% across multiple segments, gave the company a kind of a moat. Plus, the valuations were also very reasonable. Hence, the investors have rewarded it very well handsomely in the listing. So, whenever both these combinations fit in for the company, we see a good amount of listing there. Even on a standalone basis, either of these combination should be there for any stock to perform better post listing. So overall, good business internals as well as attractive valuations should be the key criteria for analyzing the
The other aspect that generally people look at is grey market premium, and that's one of the reasons as to why a lot of investors go ahead and invest in these IPOs as well, right? How reliable do you think that grey market premium is as an indicator to subscribe to these IPOs?
I think since in the name itself suggests that it's a gray area, hence the reliability is really questionable. And I think investors should not actually keep their premise of investing just because of the numbers shown in the grey market, because they are very risky. And actually, what they should do is to study the company, look at the valuations of the IPO, and then make an investment case rather than just following whatever the number is being shown into such kind of messages or websites.
Okay. Several IPOs, Mr. Solanki, were oversubscribed many times, but have struggled post-listing. And, retail investors who did not get subscription chased the counter after it got listed. That led to a spike, then a sudden downtick in the counter. How do you advise retail investors to deal with such IPOs?
I think, as I've said, that post-listing, any IPO is just kind of any normal stock wherever you are going to invest. So analyze it that way, study the business of the company, see how the business is going to improve, what are the competitive intensities in the industry, where the company is operating, what are the growth prospects, what are the plans of the management of the company, and how has been the company performing in its latest results, be it quarterly results, annual results, etc. And then see at what valuations the company is trading. So I think analyzing all this, so I think it's not a different kind of analysis wherein you apply to any new company versus any existing company. So it's all the same things which you have to look wherever you are trying to invest into stocks for medium to long term.
Do you think, Mr. Solanki, you did talk about valuations in your previous answers. Do you think that IPOs in 2025 were priced for growth, or were they priced for perfection? Because there were some IPOs that were extremely overvalued yet oversubscribed.
I think it's a mix of both. As far as data is concerned, if you just look at on the basis of the data, definitely the kind of valuations at which the IPOs may have been listed in past, maybe 5 years back. So we have seen significant premium listings this year. So that is true. But again, you have to see it on a more granular basis. So when you compare any IPOs coming 5 years before and the kind of IPOs which are coming now, so there is a huge difference in the structure of the companies as well as the industry itself. So right now, what we have seen is that earlier most of the companies who were coming with the IPOs were mainly into the manufacturing kind of segments. Right now, in 2025 or in recent years, the companies are more of companies which are operating into a services sector. So they have a very small physical footprint, and a lot of scalability optionality is there in terms of providing services. Hence, the services companies have generally multiples on the higher side. Plus, some of the new age companies wherein the growth runway is very huge for most of these companies. They are expected to grow and become a 5x or more than that in terms of their revenues and profitability. So if you have that kind of a high growth runway, then it's certain that the valuations would be at a premium side in comparison with other companies in other sectors as well as in the later stage of the businesses.
Not understood. With regards to the mindset of, exiting on the listing day itself, do you think that's a dangerous thing to do? If a retail investor is looking at a particular IPO from just a listing day gain point of view, is that the right approach to it? How should one go about it?
I think in the markets, there is nothing like a right approach. So everybody invests and everybody sees the market from his or her own perspective. So it is ultimately the person who is putting in his or her money. So he is the best one to decide how long he wants to play. So we have seen that there are players who just invest for listing gains. Plus, we also see there are investors who invest in for a very, very long time. So in markets, there are multiple kind of investors and there are multiple kind of strategies which different people deploy. So even if you see the listing gains data, so I think in last 3 years, we have seen overall on an aggregate basis, the listing gains have also, the investors who are following this kind of a strategy has also made a decent amount of money along with the medium to long term investors.
Mr. Solanki, what's the biggest red flag that retail investors should have spotted in 2025 IPOs, not just in 2025 but before that as well, but has still not been able to do that and should do that going forward in 2026?
I think what investors should really do is that whenever they are trying to invest in a very early stage company or a very new age companies, so they should not follow a knee-jerk kind of a strategy wherein because these companies tend to have a volatile early periods. So in any new age companies, there are a lot of volatilities involved. There are a lot of variables. Even the management of the company is still evolving their medium to long term strategies. The competition is also very severe. So there are a lot of variables into the play in the business. So they should not react to each and every news, either it is negative or positive in a very short term manner. And they should have a medium to long term outlook in terms of evaluating their investment rationale, and then only take a decision based on that. So I think everyone should follow this kind of strategy in order to consistently make investment return in the markets.
Understood. One last question, Mr. Solanki, to you is with regards to the IPO market maturing. Do you think that as and when we move forward, do you think the IPO market is maturing, or there are still lessons to be learned by retail investors?
Yeah, I think our markets are definitely has matured. Plus, there's there's always a lesson to be learned from the market. So it's a never-ending thing. So you always try to learn something from the markets, and so definitely, I think we are continuing that journey. So definitely in terms of investments as well as the kind of enthusiasm and the kind of reach we have seen, the kind of number of investors and applications which we are seeing. So definitely shows the amount of maturity the overall category of investors have shown. And I think it will continue to improve going ahead.
Solanki, I hope that it helps our viewer entering into 2026 and making a sane decisions while applying for IPO. So thank you so much for giving us all those insights and of course taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, so the second conversation that we're going to have today is also an interesting one. Selling investments for liquidity sounds logical until you realize it could break long-term compounding. Whenever investors need quick liquidity, the instinct is simple: redeem mutual funds, right? But with product like loan against securities gaining traction, The real question is, should you exit your investments or borrow against them? Tonight, we decode which option truly makes financial sense. And to decode exactly this, we're joined by Nikhil Kotari, who's the Director of Etika Wealth Private Limited, joining us now. Nikhil, thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is that generally, when investors are looking for liquidity, the default reaction is to either redeem mutual funds. But do you think that this is, always the smartest exit to make?
See, always first we need to realize that what is the purpose of this redemption, right? Is the purpose for really long-term, if it's a goal, like if you're invested for a goal and your goal is achieved now and you need money for that purpose, then it's obviously wise to withdraw the money because your goal is already achieved. But if it's not because of that and you need some money for your bridge funding, say for example, suddenly you have a delayed in the salary or delayed of some payments, and you need to do a bridge funding, then it's not a wise call to withdraw your long-term assets to pay for those goals or those bridge funding, because you are breaking long-term compounding. So you need to understand the purpose of withdrawal. If the purpose of withdrawal is very, very short-term, is to bridge a funding which is for say 1 month, 2 months or 6 months, then it's wise to take a loan against mutual funds or loan against securities. But if the purpose is like say really long term, like say for example you're buying a house and you want to make a down payment, right? Or your kid is going for education and you need to pay a school fees or pay a payment or college fees, then it is advisable to withdraw because that is long term in nature and you're not going to get this money back. But if the purpose is very, very short term, then it's always advisable to take loan against securities, because you're not breaking the compounding, right? And you're not paying huge capital gain tax also.
Sense. And when we talk about loan against securities, it's often sold as don't disturb your investment solution. But is this a real trade-off that you always look at?
See, basically, earlier, when you had to apply for loan against securities, it was a very, very cumbersome process. But now with the whole advent of online and the technology, right, we can get a loan against securities very, very seamlessly. So the liquidity is very, very high. Now, why it is pitched is again from perspective that if you need money for overdraft facilities or you need money in terms of bridge funding, say for example, you have got a 1 crore rupees. Now, you may need this money for sometimes for 5 days, sometimes for 10 days, sometimes for 15 days. Then every time withdrawing this money doesn't make sense. So it's advisable that you invest this money, and whenever you need this money for short-term needs, right, like the bridge funding, that time you again always take this loan against securities and use this money as a overdraft facility. And as soon as your work is done, you can repay that, and you only pay interest for that tenure which you have taken the loan. So if the pitching is very clear that if the money is not required for long term and money is required for very, very short term, unnecessarily breaking the long term assets, right, is not advisable, and you are losing out on compounding benefit and you're paying huge amount of taxes, right? And so it's always advisable for very short term, take the OD facility and use that money.
Okay. Nikhil, then I wanted to understand as to when you compare these two in terms of cost. First one where, loan against securities is being taken, so interest cost for that versus the opportunity cost of exiting the existing investment, right? How do you compare these two?
Okay, so say today loan against securities is available in the range of 9% to 10%. That's a broad cost of taking the loan against securities. Now, if your money is invested for very, very long-term assets, like an equities, in equity fund or equity stocks, right? And over a long period of time, what we have realized that the equity mutual funds has given you return in the range of 12 to 14% year on year, right? As compared to what the cost you are paying is only 9 to 10%. So that's and we have always realized that if you miss best days in the market, right, then returns can come down dramatically. So you can't time the market, right? So that's why it says that if you're investing for long term in equity mutual funds and you have to bridge funding in between, then it's advisable that to take a loan against securities, because as I discussed with you, you pay capital gain tax also, because once you withdraw and again reinvest, you pay capital gain tax also, right? So in that case, even if it's a long term assets, then you make 12 to 14% as compared to 8, 9, 10% the interest cost which you're bearing. But if your money is invested in debt securities, right, in a fixed income securities, which is yielding, say 6 to 8, 7% return, then it's not advisable that if you need money for long term or medium term, then it's not advisable that you withdraw from then you take a loan against securities. It's better that you withdraw from the asset, because your return on that asset is only 6 to 7%, whereas your cost is 9 to 10%.
Nikhil, the other aspect is that what happens to loan against securities in sharp market corrections? Does it add to your stress of at the worst possible time? Because at the same time, when you're paying interest, your value of investment is also going down.
True. So if you're taking against equity mutual funds, so normally you get in the range of 50% of your overall value. So, for example, if your overall portfolio value is ₹1 crore, you get a OD facility up to 50 lakh rupees. Whereas in debt securities, you will get a slightly higher percentage. Now, if the market goes down and the market from, say, you have a portfolio value from 1 crore goes to 80 lakh rupees, then what you can withdraw is only up to 40 lakh rupees. Right. So if you have already withdrawn 50 lakh rupees, then you have to do a top up, right? You have to repay 10 lakh rupees, or in that case, they'll sell the securities worth 10 lakh rupees to bridge the margin funding. Now, during the market crashes, why loan against securities makes sense? I'm saying if you're buying, if you have to withdraw during the market crash, then you're making your paper loss into permanent loss, right? If your money is only required for very, very short term and the markets have fallen, then say it's not wise to withdraw from the market that point of time. Then it's advisable that whatever OD facilities you can get for the portfolio value, take that OD facilities and use that money for your bridge funding, and do not make your paper loss into permanent loss. And as soon as the market recover, right, then your portfolio value will again go up. Because if you've already withdrawn, if you've already done redemption, and if you're not, and then market rallied, then you make your loss as a permanent loss. So if when the market has crashed, then it's advisable to take loan against securities instead of redeeming the money. In normal cases, yeah, if you have taken money for a very, very long-term goal, which I discussed with you, that if your loan is for 4 or 5 years, then it's not advisable to take loan against securities. It's always advisable that you withdraw your investments and use that money.
Interesting, very interesting, Nikhil. Now, with regard to some behavioral aspects of somebody who's taking loan against security, right? Generally, an easy access to loan against security might encourage over leveraging against his or her portfolio, right? How does one manage all of this, considering not over leveraging their portfolio as well?
See, that's the thing. The purpose has to be very, very clear. If your purpose is to do a bridge funding, if the purpose is to maintain your working capital, right, then the loan against securities completely makes sense. But the purpose is that, okay, let me borrow at 9-10% and invest that in market, assuming that I'll make 12 to 14%, that's not right, because then you're leveraging your money, and then in the times when markets are bad, right, then you get a pinch of both the sides. When the markets are falling, as well as you pay the interest cost. So, like say for example, last year a lot of people thought that it's very easy to make money in equities, right? You will always make 12 to 15% return. So if you've already invested and you have mortgaged that and you've taken loan and again reinvested in equities, right? Then it's not a wise call, right? Because you lose out on both the things. So you should not over leverage, right? You should only use loan against securities to bridge your bridge funding gap. When you get over leverage, right? When the markets are very down, when the valuations are very, very cheap, like times of COVID, when the things are really markets are really cheap, that time if you want to leverage it, so leverage also depends on when you want to leverage it. It's still fine if you want to leverage when the valuation, when the markets are very, very cheap, and you want to leverage it, and you know the risk that okay, if things goes bad, I may lose out some part of the money, but if things goes in my favor, I can make huge amount of money. So leveraging during those times still is a tactical call which someone can take it. But in the normal circumstances, one should not leverage. One should not take a loan against securities and invest back in the mutual funds or equities, because markets can be in rough phase, and that time you will get a pinch on both the sides. You have to pay the interest cost as well as your portfolio is going down. So you lose out on both the sides.
Interesting. Nikhil, the other aspect is when somebody is taking a loan against security, what are the hidden clauses that one needs to look out for in the agreement that could possibly deceive the customer?
So first is the interest cost, and what is the compounding, like the interest cost frequency, whether it's a monthly or it's a quarterly or it's a annually. So because as the frequency of interest cost is also depends, it will impact the overall cost of the loan. So one is that you can look at that. Second is the amount of percentage of overdraft facility they will give on the overall portfolio, right? So some may give 40%, some may give 50%, some may give 60%. You look at that very carefully. Third thing is that when they will sell the securities, right? So at what margin level they will sell the securities. So that clause has to be very, very clear. Will they give you how much heads up time they will give you in terms of reminder that okay, there's a margin call and you have to get you have to withdraw, you have to give the money. So that the number of days and the level at which margin call will be coming in, those one need to read very, very carefully before going and signing up the loan against securities.
How important do you think is monitoring the LTV ratio once you take this loan against security?
It's very, very important because if, for example, you have used the whole money and then suddenly market falls, they will only give you 1 day's notice or few hours notice, and then they'll sell your securities immediately. And that happens when markets are falling, right? So you make your paper loss into permanent loss, and that's why a lot of people lost money, right? Because what people have done is that when the markets have fallen, right, they are not able to pay the margin money, and then their shares are sold, right? And when the shares are sold, they are sold at the lowest level. Right, so that's what we always say. It's a margin pressure, and that's why you're seeing a huge fall in the market. So when there's why markets suddenly fall in deep dive is all because of margin pressures. That the brokers sell the securities without looking at the price, and they just sell the securities. So that's why we want to be very, very careful. You should never allow your securities to be sold at a distress level, because then you're making it a permanent loss. So you need to monitor your LTV. If your allowed limit is only 50%, make sure that you never cross 40%, right? So that you always have the buffer of 10%. So if any market falls, your securities are not sold at a distress level.
Point to note, viewers. One last question, Nikhil, before I let you go. One golden rule that every retail investor should keep in mind before planning this entire loan against security, against the portfolio.
See, loan against security is a facility given to you so that you don't break your long-term compounding. But it should not be used for your lifestyle goals. It should not be used for your consumption, right? It should only be used as a bridge funding. So if you need money suddenly for a very, very short-term purpose, right, and you are going to get back this cash flows over a 1 month, 2 month, 3 months time frame, then you can use loan against security instead of breaking the golden rule of compounding. But if the money is required for a very, very long term, right, and if it's a permanent nature, then do not take loan against securities. It's better that you withdraw the investment. And third rule, never leverage, right? Leverage will only be done in the extreme when the markets are very, very lucrative, not in the normal circumstances. So don't use loan against securities as a free loan available to you and go and buy your consumption goods like phones or a car or something. The loans are not cheap. The loans are expensive. So basically, make sure that the loan which you're taken is for productive purpose and not for unproductive purpose, and do not leverage by taking loan against securities and reinvest in securities, because market falls, you get the impact on both the sides. So do not take for lifestyle goals, do not take for leveraging, take for actually bridge funding, and you know that your cash flow is going to come.
Absolutely, Nikhil, that makes complete sense. Thank you so much. This conversation has been very helpful to me as well as to all our NDTV Profit viewers. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Thanks a lot. Thank you.
All right, viewers, with that, we're completely out of time on this edition of Your Money Matters. Stay tuned. More news and updates on the other side.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to,
and the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPO?
This is not a family business of movies. Tell us a bit about those beginnings.
I went to the trucking business, Amritsar Transport Company, ATC. I struggled. My father had also a cinema, which he acquired in 1978. I felt that Hollywood can be one differentiating point because Hindi movies used to get played in so many cinemas.
This was the beginning of multiplexes in India.
97 is the first multiplex that was fortunate to open. I was obviously extremely nervous because cinemas were tiny, and I said, my God, will people come to small screen? People loved it, and the rest is history. 1 kilometer long queues were outside.
There's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. Does that keep you up at night?
I mean, cinema has gone through a hell of a lot. When COVID happened, first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. This was a body blow.
IRL experience has now become important as
What is
well
IRL?
in real life.
That's in real life, okay, fine.
I'm following my Gen Z.
Home entertainment and out of home entertainment have always coexisted. There is not an either or.
People actually crying in Sayyara as they showed on online reel.
That is what gets me excited and positive about this business. When a content connects, I mean, there's no end.
Ajay, thank you so much for talking to us here.
Thanks for having me on your show.
Yeah. So, if I think about the movie business and the love that Indians have for the movie, cinema goers have, I think that's uncontested. But there's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. You know?
Yeah.
It's available everywhere, right?
Correct,
on my
correct.
phone, on my laptop, on my smart TV.
Yeah.
Does that keep you up at night?
No, basically, for the first time, I mean, cinema has gone through a hell of a lot, right from the beginning. And you must have read the history as well. I'm sure you've done your homework with the Spanish flu coming in. People thought that, cinemas will not remain. World War I, World War II, then you had your TV coming in, black and white TV. Even then people said, oh, why should you go out? But cinema survived everything, because the experience of going out and watching on the big screen is very different to watching anything at home. However, when COVID happened, I think that raised the decibel levels a hell of a lot, because for the first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. So I think this has never happened. Lots of disruptions, as I said, have happened, lots of distractions have happened, but this was a big one. This was a body blow. So demand side got impacted, because demand, suddenly they were at home. So the habit of going out, there was also some trepidations of whether we can go out or not, and supply side got disrupted because obviously shooting stopped. So I think that period had a very big impact, and suddenly there was so much content on the small screen OTT platforms. There was so much stickiness, because people were waiting for what is the next TV show coming. Plus one more thing that happened is that prior to COVID and prior to cinema shutting down, only TV shows were very popular. But because there was no content available, even movies started coming, and even the producers, the film fraternity, because in India movies are still very fragmented. Production houses are not like you have in the US, where you have 4 or 5 studios are making movies. Here, if there are 1,200 movies that get made in a year, there are about 5,000 producers across the country. So I think I don't blame the producers, because their holding cost also was piling up. So they also said, okay, let me monetize my content, and straight away sell it to a platform, because the platforms also were starved of content. So instead of making TV shows the way they were earlier, they said, okay, doesn't matter what content it is, let's just buy it and play it. So that had a big impact, and so therefore we took a long time. So I thought, to be honest with you, that it won't take that long once we open in 2020.
You thought people will flock back?
Yeah, I thought they'll flock back, and they did, because there were some very big movies and some big producers like Rajamouli and even KGF. They waited. They had the waiting power as well, and when they came, consumers were still starved of going out. They still wanted something big. So suddenly we saw a huge spike where RRR, KGF, lots of movies came, and people came back. So I said, wow, this is fine, business is back to usual. But then I didn't realize that the backlog of no shootings happening still remains. The habit changes still remained, and therefore it took us at least two and a half years to come back. There was some green shoots in the middle.
But are you back? Are footfalls and occupancy rates at pre-COVID levels?
In South, yes. So if you look at the southern film industry has always been very robust, and because the movie going habit is very strong, and the content flow is also very strong. So South, I would say, is almost back, maybe more than 90%. Hollywood is also back, because Hollywood actually got disrupted not just because of COVID. Hollywood got disrupted or had a bit of a setback also because of the Hollywood strike,
the
screenwriter strike. So therefore 2024-25 was not very good for every angle. But 25-26 onwards, we are back now to where we were. We are not exactly at the same occupancy level which we were earlier, but we are getting there. So like, for example, October was fantastic. Our second quarter was very good.
Yeah.
And even now, December is looking very good. So the volatility has got reduced dramatically now. The peaks and troughs are not that this thing. So the good thing that I find is, and I've been saying that even when we were shut, that is home entertainment and out of home entertainment have always coexisted. There is not an either or. This whole binary discussion started getting on my nerves also, to be honest with you, because we are just not realizing that, and I use this analogy all the time, so sorry if I'm sounding very hackneyed or repetitive to you. We have Zomato, we have Swiggy, we have kitchens at home. Okay, people have various choices to eat, but they still go out and eat in restaurants. They go to places, hotels and restaurants. That's number one. People again can get everything to Blinkit at home, but they still go to the shopping malls. So people are not straight-jacketed. They want to do everything. They want to be at home also. So this phenomena will always coexist. What people do at home will not completely obliterate their habits from going out.
No, agreed.
What they're going out.
Agreed.
Yeah.
But it's also about the cost differential. What also came into play is the cost differential.
The cost differential of cooking at home.
Cooking, okay, but if ordering in versus going out
is also different.
Maybe to some, it depends on where you order for, but
yeah, then it's exactly the same. But still, restaurants thrive. Yeah.
Agreed.
Yeah.
The only aspect, and my question really is in terms of cost differential. If I buy a year-long subscription or a monthly subscription to any of these streaming services, I can watch X amount of voluminous content. To go out to a movie hall, the cost of getting there, my popcorn, my the extras over there, plus the movie ticket. I want to sit in a nice theater like that, I'm going to shell out a lot. So all of that kind of adds up.
Yeah, but I think people are not blind. They see what they're paying for. 7.8 million people have already come to the cinemas this year, and 15 million roughly is the number of people who come. So India is a very heterogeneous market. So what you're saying is true for a lot of people. Not only are they extremely cost conscious, they don't also have a FOMO of a brand new movie. So first of all, the 8-week window, then you will not see this new movie that has come of Kriti Senan and Dhanush just now. So that consumer is also there.
Yeah.
He's saying कि भाई मैंने नहीं जाना. So I'm not saying that consumer doesn't exist. He's also saying I don't care how good the movie is, how popular it is becoming. I will wait for 8 weeks and I'll sit at home and I'll watch the movie. ठीक है? There's another consumer who's saying I want to watch. I want that big screen experience. I can see what has been done. I can't get a 14-meter screen at home. I can't get that communal experience of laughing and emoting with the movie. I can't get that comfort and that going out. I can't get that escapism at home. Okay, so therefore I want to go out. So luckily India is a very heterogeneous and disparate market. We have enough number of people who want to come out as well, and they actually are finding it value for money. Because our price points are not just this. There's only 16% of my portfolio. 84% of my portfolio is at 259 rupees. If you look at my Q2 results, my ATP, average ticket price, is 259. So I have ticket prices from 100 rupees also. The balcony ticket price of a single screen is 150 rupees now. Getting this kind of infrastructure for 100 rupees, I don't think people complain.
Yeah.
It is still much cheaper than various other out-of-home entertainments. Look at the amount of money they have to shell out for a Coldplay. Look at the amount of money that you have to shell out for AP Dillon, a concert.
Yeah, no, I agree, and I think we may be swinging to the other side of the pendulum in the sense of the IRL experience has now become important as
What is
well.
IRL?
In real life.
Achha, in real life, okay, fine.
So I'm following my Gen Z.
And then it's fine, it's okay.
Which I'm very proud of.
I am very happy to ask the meanings of all acronyms now.
In real life.
I can't keep up.
You are in the IRL business, where you actually go out.
So I mean, Aristotle said that, people are animals, they're social animals, they want to come out. So you can't, I think there's no comparison of being at home and going out. Both will happen. So many times I want to kick up, sit at home and watch a movie that I missed out or a TV show that I missed out.
I'm saying people are perhaps now swinging to the other end of it, because you talked about concerts and how concerts are getting sold out, live events are becoming something that people want to go out and do. What is the way that your experience can catch on to that and add a plus to the movie going experience, because you're already kind of doing it? Gourmet food served at your seat, more than just sitting and watching a movie.
Yeah, look, in India, why PVR Inox is only in India. The only exception is we've got is one cinema in Sri Lanka, and that also was almost like an extension of our South India strategy, is because India is a very volume driven country. You have 1200 films that come through the system. So alternate programming, if that is what you're referring to, is something which is a filler. So whether it's re-releases or showing Taylor Swift's show that we showed a little bit, we showed BTS, sometimes cricket matches, these are fillers. But primarily, there is no dearth of content. The other day, somebody was talking to me on a Friday. He said there is some movie that got released and they didn't know where to see it. I said 42 films got released that particular day. 42 movies in a day got released all across the country. So I don't need to do anything other than making our experience of going very, very experiential, very enhanced.
How do you do that?
One example is where you're sitting here. So by making sure your projection system, sound system, your seating, your F&B, your service is like a hospitality. People really feel good about going. And what people can say, oh, this I can't get at home. So that differential has to be, IMAX, 4DX, ICE. Now we opened something called Dine-In. So all sorts of formats which are more experiential. Everybody is working towards how do we make this experience. LED screens are coming up now. So the Dine-In that we've opened in Bengaluru just now, there is no projection room there. The whole thing is an LED screen. So I think people in India are very discerning. They can sense it. So I think we have to be on our toes to make sure that the experience is very different to watching it on airline or your phone or this thing.
You talked about October being good, and yes, Q2 PAT profitability in place and a good set of numbers. A lot of analysts also looking at it favorably. You think this is continuing into Q3, Q4? What is the pipeline looking like? Is this a situation where the H2 second half is going to be better?
Well, so far it's looking very good, and even Q4 is looking first time very good. Eid is a very important date. That's also in Q4. Normally it falls in Q1 of next year. Toxic is a very big movie which is coming. Border 2 is releasing on the 26th of January. A lot of Hollywood films are coming. A lot of regional movies. Pongal is a very big festival. So January gets taken care of by that. So whatever lineup I'm at least seeing is looking very good. But again, coming back to my analysis of why I'm very sanguine about our business is because you also have a lot of sleeper hits now. The number of 100 crore movies which have got done this year is never happened before, and these are sleeper hits. We did not know these movies are going to do well. If you look at how did Sanyara end up doing so well, how did Mahavatar, Narsimha end up doing so well. So
were people actually crying in Sanyara as they showed on online reels, or was that?
I was not present in every single auditorium, but those were real images only.
So it was actually happening. People do emote in that sense.
That is what gets me excited and positive about this business. When a content connects, there's no end. It was almost fanaticism, the way that music connected with the youngsters and how these two became like superstars overnight. And when we were forecasting that how many people will come for Sanyara and what the numbers will be, there's no way on earth anybody could have possibly. So that's why I don't get that. Obviously one is disappointed if a big movie doesn't do well or does below expectations, but then I don't get that disappointed because there's so many movies. So as opposed to a market like UK, US, which is very Hollywood dependent, the number of movies only get released are not even 100, 150, 160 movies get released every year. If India was that market, then I'd be very worried. Secondly, PVR, right from the beginning, when I started, I was very keen that I want a geographical spread where again I'm not depending on one geography either. Okay, so 33% of our circuit is in south. 27% of our circuit is in north. The rest of the circuit is spread between center, west and east. So therefore, the geographical, we've de-risked our business model also by not remaining in one region.
I want to rewind a little because you talked about when you started PVR, and it's a story that people don't necessarily know. This is not a family business of movies. There was one movie hall in the family business which you decided to take on. Tell us a bit about those beginnings.
Our business was trucking, and I finished in school, in modern school and Hindu, and then when I went to the trucking business, Amritsar Transport Company, ATC, I struggled. So my father and my grandfather started the business, and I was not very sure if this is what I want to do. So 1988 to 1990, I was going to Naya Bazaar, which is in Chandni Chowk office. But then my father had also a cinema, which he acquired in 1978. So I said, I have to do something to make my father feel proud. So if I'm not able to do something in the trucking business, let me try my hand at Priya. And Priya was in South Delhi. And those days, South Delhi only had 2 cinemas called Chanakya. I think this way before your time in Archana. And they were the only 2 houses which were showing English movies. So I felt that Hollywood, it can be one differentiating point in that catchment, because Hindi movies used to get played in Liberty, Sheila, so many cinemas in Delhi, and they used to run for 25-30 weeks, because only very few prints used to come because of the celluloid prints that were there. So I said, if I do Hindi, then where is my differentiating point? So when I went to the Bombay studios, Warner Brothers, Columbia, TriStar, Sony Pictures, and all these guys, they said, oh wow, we would definitely welcome another cinema which is going to show Hollywood movies. So that's why I started playing Hollywood films. I didn't realize the response will be so phenomenal, and a third cinema will do well. So that's how it all happened, and I was very fortunate, God was kind, that I made the cinema very clean. I also took some input from a cinema in Bombay called Sterling.
Yeah.
They had a Dolby installed, and I needed a USP vis-a-vis Chanakya and Archana. They did not have Dolby, and I said, if I put Dolby sound, maybe I'll have some USP. These were all just happening without any thought that I'm no marketing thing. It was very obvious things to do, and the response was just phenomenal.
Was it coming from your own love of going to the movies and having a good experience?
So if somebody asks me who's a movie buff in the family, I think it's my children, Niharika, Naina, Amir, and my brother Sanjeev, and my wife. I'm not a massive movie buff. I'm really about experience. So I think if you really ask me in retrospect, experience really excites me. How can because I can't control what's happening on the big screen.
Yeah.
So that's where it continued, and I was very fortunate that little things that I did, people enjoyed, and they said, wow, this is different. And then that's how I said, now the next step is really to get into multiplexes, because again, the same reason, there's so many movies coming. How can 1,000-seater cinema showcase everything under one roof?
Yeah.
Because then you're stuck with that one movie.
I mean, this was the beginning of multiplexes in India.
Yeah, 97 is the first multiplex that I was fortunate to open in India.
And with Village Roadshow.
Village Roadshow.
So not everyone knows PVR is Priya Village Roadshow.
That's right. Yeah, because the acronym, the company was called Priya Village Roadshow Limited. There was a 60-40 joint venture, and therefore we said, let's call the brand PVR. And that's it. God is kind. I mean, after that, people, I was obviously extremely nervous because cinemas were tiny, 250-seater cinemas, one 300-seater cinema, one 312-seater cinema, capacity was 1,000. And I said, my God, will people come to small screen? They'll think it's a video parlor. All those apprehensions and, skepticism was there. But God is kind. People loved it, and, rest is history. 1 kilometer long queues were outside, and people were really, really excited about this new format.
When I think about the kind of disruptions that your business had to go through, one is of course starting the business, and then this joint venture with Village Roadshow. 9/11 happens, they pull out, and you have to look for funds, you have to list. Then you have COVID coming in. So many of those, which have been some of the toughest moments.
I think toughest obviously will be when my dad passed away in 92. Nothing can compare. I was all of 25 years old, and I just started Priya, and the trucking business suddenly was headless because my father was looking after that. I don't think there's anything that even comes close to that setback that I had. And because then I had to do both things, my newfound love for cinema plus the responsibility of running the trucking business. I was married as well, and I was about to have my first, Niharika was about to be born. So that was a tough period. Then we had a fire where we lost a lot of money in the trucking company. That again became a big setback for me. So we just kept going, and of course after that, a Village Roadshow not wanting to expand was a big one, because I'd already signed up a lot of multiplexes. I signed up worth about 100 crores of cinemas. I then suddenly said, okay, what do I do? And I was fortunate to have mentors who guided me, and Mr. Mittal has always been a good mentor to me, and he said, Ajit, time for you to now get private equity. You're too small to do an IPO, and accruals are not going to make sure your growth can be funded. So that's the time I went the private equity route, and the business luckily was profitable, and that is something I tell all young entrepreneurs, that make sure business is profitable.
Yeah,
so,
no, in this day and age that's an important lesson,
yeah,
where profitability has not become that important.
Yeah, so all the 4 units, let's call it, that I was operating, there was Anupam in Saket, there was Vikaspuri, a 3-plex, there was a Narayana 4-plex, and Priya. So all these 12 screens put together were always very profitable. The EBITDA margins were phenomenal. And so when the private equity people saw that, Renuka Ramnath of ICICI Venture, and she saw a very good pipeline with prestige, good developers, and they said, oh, this looks like a good business model. You're the only player in India who's doing this.
Today you're in a landscape where there is no competition. After the merger with Inox post-COVID, pretty much this is a one market player?
No, there is a lot of competition.
Is it? I mean, apart from OTT platforms, what really is your competition in this landscape?
Still India's got, by the way, 9,200 screens, and out of 9,000
smaller single screens.
Yeah, but we're still about 1,900 screens, 1,800 give or take, compared to this thing. So you still have players like Sinopolis with 400, you have Mirage with 200. You still have players, and I would say that only exhibition is not the only thing, like you just alluded to. Like you said, people can have an option to watch at home. Okay, I've got a window. I've got
maybe your biggest competition is a tiny phone.
Yeah, that's right. So 8-week window is also there, which also saves you. So actually, piracy is competition as well, because 8-week window, legitimately the producer doesn't want to release a movie on any other platform. He's not releasing the movie on any other platform till the theatrical run is done. But how do you control piracy? So if a great movie's print gets downloaded on piracy, pirated version, then that's a problem. But as I said, I'm just banking on the fact that if we make our cinemas very experiential, number one. Number two, the habit of people to go out to shopping centers, malls, eat, shop, that is always going to remain. And we just have to make sure we don't disappoint people when they come. They must feel they're getting their money's worth. And as long as we're able to do that, and there's a good flow of movies which is coming, then India still really number one form of entertainment is going out and watching movies on the big screen. And look at the industry. You put on your TV, all ads have got some actor or the other endorsing it. So there is Bollywood has got a very strong presence even beyond cinema. So I think the love for movies and movie stars is so much that keeps us going. And even producers are believed in the big screen. Like I said, even Sanyar, I'm just taking one example, like 12th Failed. You take so many movies that have come, my mind is blanking out, which were made at a very small budget. Now, if you go to OTT straight away, you only get cost plus. This is the budget and this is how much you'll get. There is no upper limit to how much a movie can earn when it goes on the big screen. OTT players now have got a survey done, and there are a lot of studies for that. People actually, the first movie that they'll watch is the one which has done well on the box office. Because they are not. So when you see a movie which is coming and you say, "Ye kaun si picture hai?" I haven't heard about it, but you suddenly say, "Oh my God, that's Sanyara, yaar. I missed it out on the first time around." So that movie did very well. To be honest, I also missed out on Sanyara when it came out.
You watched it on OTT?
Then I watched it on OTT after 8 weeks, and I loved it.
How much OTT do you watch?
More shows I watch. TV shows I watch. Yeah. I mean, even pre-COVID, I was watching shows only. But if somebody gives me a very compelling reason that this movie is very good and it hasn't come theatrically, I'll watch it.
As we wrap up,
what
do you think is going to be the next technological disruption that you will face? Is it AI? I think your whole industry, the content side of the industry, is facing with AI. Is it going to be another kind of change in habits? What do you think is going to be the next challenge?
I think AI is good from a content point of view, because now people don't have to go to lots of places to shoot. All that can be done AI generated, but use sparingly. Not like, of course, the whole film, but I don't think it's a tool which will be harmful. It will be an enabler to make better content. And I think there are enough experts on the production side who know how to use it properly. We just finished a workshop on AI, how we can use AI on our customer service, CRM, looking at our costs, supply management, looking at various things, all aspects, programming, showcasing, marketing. So I think AI is only going to help make our business entire part of the value chain, right from production to distribution to exhibition. It is only going to make it more productive and better.
Yeah.
Yeah.
Thank you so much for speaking with us today. This has been fascinating, and here's to people going back to the movies.
Thank you. Thank you very much for having me.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to...
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Hello and welcome to The Big Question. I'm Nisha Poddar. Today we are asking you one important question that you really use on a day-to-day basis. That is the UPI payments. Is it a convenience or is it a menace? That's the big question that we are trying to find an answer to in this discussion that we are going to have. To give you a background, if you have a UPI app and you use it for transactions, you must check on your list of auto-pay transactions that you have knowingly signed up for. Not just that, even in cases of EMI, lender repayments, or merchant payments, where your payments have been completed, be vigilant of any recurring requests of payments from those same lenders or merchants. A rising number of fraudulent transactions by UPI apps has really alarmed NPCI, which is, remember, responsible for forming the operating guidelines for the payment apps. NPCI is taking steps to prevent the misuse of certain features on the UPI apps for unscrupulous transactions that really cause the financial loss to the citizens of the country who are using the UPI transactions, just like you and me. Now, these are really centered around two specific features that we are going to talk about today. Like autopay, where you sign up for a recurring subscription or automatic payments of bills on a repeated basis, and the collect call option, where a transaction is generated not by the payer but by the receiver. Now, sources do suggest to NDTV Profit that NPCI intends to ban the collect option for smaller merchants where the cases of misuse may be higher, and on autopay, it's reiterating the industry to follow the guidelines for proper display of autopay options, especially for the subscription-based entertainment online apps, so that the customers are not duped into making recurring payments without their knowledge. So this is the big question. Are the UPI payments, some of those features, are they a convenience or a menace? In fact, we have a battery of experts who are going to really decipher and bring in their expertise to this particular discussion. Let me welcome on the show Sunil Kulkarni, who's the Fintech advisor, former RBI committee member on digital payments and digital ecosystem, Dr. Dipali Pant Joshi, who's the former ED, RBI, and also macroeconomic expert. We have Vibhav Hathi, who is the co-founder of One Card, Sachin Taparia, who's the chairman and founder of Local Circles, and Rana Durjoy Talukdar, who's partner and payment sector's leader at EY India. So, lady and gentlemen, thank you so much for joining us on this very important discussion. My first question is going to Mr. Kulkarni, Sunil Kulkarni. Having seen this particular ecosystem and also been very well entrenched with the fintech world also, what do you think about this big question? Is it now more of a convenience, or the trust factor is slipping on UPI payments and certain features, which is causing a menace?
Yeah, thank you for bringing me here. I wanted to just mention that this has been brought for convenience, and clearly you would have multiple features that would be coming even later on also, that all for customer convenience. What is also required is, along with the convenience, there is an awareness that needs to be built in, because if you take the collect call, today, none of the banks or none of the prepaid payment provider require any MPIN or any password to get credit into their system. Whereas bulk of the collect calls where frauds happen, the fraudster calls up and say, I am putting money into your account and please enter the PIN. And what happens is that when you enter the PIN, your account gets debited, and after that starts the chain of the frauds. So basically, whether it is collect call or it is auto pay, the awareness needs to be built in and constantly updated, because unless we do that, it will be difficult to communicate the entire message to masses. So that's my answer is that it is for convenience, but with a caution that it needs to have sufficient awareness.
Right. So we need to balance that act. Vibhav, you are from the industry, and while operating and navigating through the various complexities of this new technology that we have got used to, as a person who really operates, who's founded a company in this direction, How do you see the situation? How easy or difficult is it to have confidence in the UPI system, which has definitely brought about the financial inclusion that we always wanted?
So thank you for having me. I think as Sunil also said, this is for convenience. This has clearly accelerated the growth of digital payments. And as a TPAP, what we strongly believe is that right from the time that you certify with the network, when you want to start a TPAP, after that, the process of the regular operating guidelines that the network publishes, these have now created a mechanism for establishing trust amongst consumers by bringing newer and newer security features over time. So as an industry participant, our role is to ensure that we increase literacy, we drive awareness, and we continue to follow whatever regulations, whether the regulator or NPCI brings in, so that the ecosystem improves at a base level. And yes, it is fundamentally a convenience for all the citizens and digital payments.
So yes, what you said is also resonating from a lot of industry participants that I've spoken to. In fact, let's take an EY view. What, according to you, is going to be the impact on the fintech, especially the payment aggregators? And we have three in the listed space, like Paytm, we have MobiKwik, as well as Pine Labs. So these are on the aggregator side, where the regulators feel the onus is much higher.
Sure. So I would say that this selective sunsetting of UPI P2P collect request, I don't believe it's going to materially have a negative impact for any of the listed players that you mentioned. Largely because P2P collect in itself was never a large revenue driver, right? Because all these companies with largely a merchant-centric business model have driven monetization through, of course, merchant payments, value-added services, lending, of course, POS solutions, subscriptions, so on and so forth, right? Obviously, all of those have nothing to do with P2P collect, right? So especially, say, someone like a Pine Labs, which is entirely a merchant-focused B2B business, will have almost no impact. Paytm and MobiKwik, because they have presence on both the consumer and the merchant side, they might see some drop in user engagement levels. But then again, that is offset by much lower fraud compliance potentially, superior trust matrices, and of course, much better regulatory optics. So overall, I would probably say that this is it's a strong risk control measure, certainly not a business model disruption in any way, and the overall net impact is probably neutral to, I would say, mildly positive for the listed payment companies.
Right. So yes, it restores confidence. Dipali, we have spent a lot of time and energy in making our banking system as fit and proper as it is today. What are the learnings for the fintech universe from the journey we have seen in the banking world, which should be taken up for it to really gain much more trust?
Well, Nisha, that's a very interesting question because there are two strong prongs which go across all industries. One is the acquisition of a customer, the retention of that customer, and woven into this is customer protection. So this would be the first prong. And the second prong is increasing the literacy of the customer and enabling him to navigate this universe. Now, you know that RBI has over time been enhancing the unified payments interface, and it is the single largest retail payment system in India. Not just in terms of volume of transactions, but it is the most inclusive mode of payment in India. I mean, even if you go to buy chana, murmura, or you go to buy anything, you can spend up to 5 lakh, you can spend up to $5 eating whatever you want to eat, pav bhaji for instance, and you will still be able to pay for it, and the whole system of sweets and Madam No Change has gone away. And as one pretty young thing told me this morning, it makes me feel like a man. I don't need to carry anything but my phone. So it's been very liberating. But if if we allow frauds to be leveraged through the system, because there are always people ready to game any system, and it's the financial illiteracy largely, and older people who are very prone to these frauds, where you're just told that, they can't make out the difference also sometimes between these requests. So all that is being done is, nothing is being abolished. The pull thing is being pushed out, and the push requests are coming in, that you scan a QR code. It's not just that, you won this prize or you've got this money and you just send me your PIN. Because the minute I give you access to my PIN code, I give you access to my entire account and say, come, feel free to clean it. So then the UPI system itself is endangered because it's no longer safe and more secure. And once that everything runs again, as I was saying, the second prong, everything, whether it's fintechs, whether it's banking, it all runs on trust.
Yes.
So once that trust is eroded, then you have a problem. Now, RBI constantly puts out these visions, for 2025, its core theme was e-payments for everyone, everywhere, every time. And it said that we will give you secure, fast, convenient, accessible, affordable e-payment system. UPI is all of that. It also gives you integrity, inclusion, innovation, everything. And now there's also been an internationalization. But the Central Payments Fraud Information Registry has shown an increasing trend in frauds related to this collect feature. And therefore, something has to be done about it. You can't just say that it's isolated, but it is something which is dangerous, because now you're looking at the lowest deciles of the population. You're linking the RuPay cards to UPI, and you're also allowing processal mandates with single block and multiple debits. So if you have a huge sum of money set aside and you even forget, as you very rightly pointed out, that you're making recurring payments to the same person, then you're endangering the whole system.
Yes.
And when you're going to expand the scope of UPI for cross-border transactions, the mind boggles at the kind of problems that can arise in that. So I would again stress that, yes, very important for financial inclusion to build a safe system.
That's right.
Yeah.
In fact, Dr. Dipali Pant Joshi, you have mentioned so many important points, many takeaways on that. But let me take it to Sachin Taparia then. Sachin, 2 points that we mentioned and we broke the story on is that, first of all, greater vigilance and caution on auto pay by NPCI, that is being reiterated to the industry. And the second and the more important one is that the call of collect option, that being sunsetted for a certain category of merchants. How do you see this really, the two features working in tandem when it comes to more unscrupulous kind of transactions on UPI and endangering also the confidence that is restored on this particular mode of payment?
So, very good question there, Nisha. Basically, these are two issues that we have escalated over the years to RBI. The first one is, if you look at the collect issue, essentially, per our last survey, 1 in 5 families in India who use UPI had one or more instances of fraud in the last 3 years, where somebody in the household had a fraudulent transaction through UPI, right? So that's a revealing statistic. Out of that, 50% of these users did not file any complaint, right? So any government data that is out there on fraud is understated, right? The second important data point, 40% of these complaints were basically that a link was shared. I was supposed to get credit. It got debited, right? So that's right there for you is the reason as to why implementing this collect makes a lot of sense, because it is live, it is real, these frauds are happening. And we do not have today, the infrastructure in the country to be able to handle these complaints very effectively. So I think if we solve this at the source, essentially through policy measure, I think it will help solve the problem to a large extent. So the collect makes a lot of sense. The auto pay, however, is somewhat different. It applies to large merchants. What we have been finding over the last 2 to 3 years is a lot of complaints related to dark patterns on different payment platforms in India, including banks, basically, where essentially the consumer finds it's very easy to sign up for a service or a subscription, but it's extremely difficult for them to be able to cancel it. So finding that option to cancel is just not there anywhere, right? So we have had cases where they just could not find on the app of the banks also an option to go and unsubscribe from a service that they thought that they were just getting the first month on trial, but the charges continued over a long period of time.
Right.
So it's very real and something that needs to be solved, right? So essentially what this will do is it will give more power to the consumer to be able to go in and select what they want to do, right? Something very similar happened in 2017-18 when we had escalated this issue on recurring charges on credit and debit cards. And then, the entire OTP, and especially with international cards, a lot of issues were happening, international merchants rather. So I think both of these are pro-consumer measures. I think the only thing that has to be watched out here by the RBI is the peer-to-peer payments that are happening that make UPI very, very convenient for the consumer, right? Where you scan a QR code easily and you're able to pay. That core functionality is not impacted, because then that will drive volumes and whatnot if that peer-to-peer, because many of these merchants, small merchants, they are taking money in their personal account basically, so they're not doing a business to consumer transaction. So I think how that gets impacted while all these safety and trust measures, very needed measures, are implemented is something I think that they'll have to figure out.
All right, so we have already really stated that there is a lot of convenience, but menace in certain conditions, and therefore it is a big talking point. Vibhav, you are, representing the industry, unfortunately, on this panel, so you will have to do the heavy lifting on this particular question. Auto pay is a great mechanism. I use it on a regular basis and I'm not bothered about my monthly payments. It goes on time. It is just so convenient. But as Sachin was pointing out, there are many unscrupulous activities that really take place where a lot of uneducated older people and even people in rural areas and also socially lower are the ones who are really losing their hard-earned money. What is the solution for this?
So I think, as I think everybody has stated, getting the consumer to be aware and repeatedly doing it in various methods, whether it be visual, whether it could be street plays that could happen in tier 4, tier 5, 6 towns, whether it be people coming together and creating a joint campaign, whether it be bank, regulators, networks, fintech industry. We also have to play a role and contribute to the growing the awareness. So that is, I think, at the bedrock. Second thing, what has happened is, once the consent has been given, how do you create a visibility and a transparency so that consumers know what is coming as a debit instruction to their account every month or every periodicity, and the ease of disabling it or pausing it. And the third leg is the grievance redressal. In case I have something which account was not supposed to be debited but got debited, how can I raise my grievance? How can it be solved? And that is where I think a lot of work has been done by various participants. Now grievance raising through the TPAP or to NPCI or to various other fora is now easily doable compared to an earlier. So when you are establishing literacy, supporting and creating a consent revocability, and making it easier to solve any grievance, these three things, and that is where fintech industry, TPAPs will also have to play their role in ensuring that we get all these three things taken up as a unified platform in a way.
Right. So I'll take this question to Sunil. While we are discussing auto pay, the collect call option, which is, as per our sources, getting sunsetted for smaller merchants. Sunil, how will this really impact the industry and also restore the confidence?
Yeah. So I think somebody has mentioned, I think ENY gentleman has mentioned that the overall volume of collect call is insignificant compared to the push payment. And what we are trying to do here is just make one particular payment reduced, but you do have QR code. So if somebody is sending you, somebody is wanting to get money, he can send a QR code, and if it goes to your photo album, you can scan and pay up to 2,000 rupee. Even there is a restriction put. What is not going to change is a direct P2P. I think as Sachin has mentioned, that will it impact say P2P? No. Direct P2P, which is the push payment, is not impacted by any curb on collect calls. So the transaction for a merchant, even he is a small merchant who was sending collect call, he could still send QR code, or the customer can send a P2P message payment directly. So to my mind, there is going to be virtually no major impact on customer behavior nor on merchant in terms of curbs placed on collect call. On the other hand, the frauds, which were bulk of the frauds were collect call frauds, because as I mentioned earlier that you are the call is coming to because of lottery or anything, and they are saying put your PIN and then you get your account debited, and then starts a multiple transaction layering, and that entire cybercrime is busy with these frauds trying to see how that finally has landed, and sometimes it lands on some of the corporate VCs or payment aggregator who have nothing to do with it, and their accounts get frozen. So that's also a problem to business. So the moment this fraud is taken care of, I think the trust factor will overall increase. So I would say this is a welcome change.
All right. So this will be a welcome change. And of course, now that it's on NPCI's radar, probably the regulator as well as NPCI would keep a watch on the fraudulent activities on certain features. Now, I want to pose this question to Rana Durjoy, that there is one particular doubt though, that a lot of smaller payment aggregators are heavily dependent on this particular segment. What is the impact on some of the smaller ones who really operate in the area of smaller merchants' payments?
Yeah, so for that, I think it's important to understand that who is really going to be impacted, right? Now, what NPCI has put an end to is P2P collect request, right? Now, when we say P2P collect request, of course, in an informal manner, P2P collect request is also used by small micro merchants, right? What's called a P2PM, or a person to merchant, kind of a payment. It's used for informal, informal lending, so on and so forth. Now, so when you look at that particular segment and you look at the broader supply chain ecosystem, there would of course be some sort of an impact, right? Having said that, you would probably also see that there'll be a natural migration to QR payments or push payments, and even a natural shift to moving, say, these so-called micro merchants or non-verified merchants, so to speak, into a proper merchant onboarding journey, right? Given all of that, we believe that even for smaller companies who would be, say, largely supplying or addressing this particular long tail merchant base, even their business would not be substantially impacted, because we have to bear in mind that UPI Collect ultimately is just about 3 to 4% of the total UPI volumes in the country, right? Irrespective of whether you are a small, or if you're a small merchant or a very large merchant. So hence that impact remains very, very limited.
All right. From what you said, the the aspect is clear that all these measures and mechanisms will only restore more faith in the UPI system and therefore will benefit the entire ecosystem. Sachin, I wanted to also ask you, while the regulator is really looking at this particular aspect very, very closely, and the industry is aware of the problems that persist, are there any mechanisms or learnings or even suggestions that should be incorporated?
So, really, in addition to what the RBI is doing, I think the Ministry of Consumer Affairs and the Consumer Protection Regulator is working on resolving some of these dark patterns by creating awareness around them. So I think if we got RBI to work closely with CCPA, then I think we can possibly get all the key payment platforms as well as the banking platforms to become free of these dark patterns.
All right, and Dr. Dipali, last word to you. You made several points and those were very, very valuable. But after this whole discussion, of course, RBI's intent has been for financial inclusion. You've been well entrenched in the banking system. We know that trust and confidence is very important. Awareness is very important. Any last final word very quickly?
No, the last final words, of course, again, RBI is working on this. There is something called the financial markets infrastructure, from the payments financial market infrastructure, which are internationally supported guidelines, and RBI is very active there. Again, the two things which come to mind are, of course, increasing digital literacy, increasing online dispute resolution mechanisms, and beefing up faith in the system. Once that happens, and I don't think that this will impact the business model at all, there will be no cash burn, because it's not a huge revenue stream even for the smallest merchants who will get used to QR codes. I mean, you'll be surprised at the smaller shops which display QR codes. So I do not think that this will in any way be harmful, that it will be helpful in a big way, I'm certain.
Right. Thank you. Those were very positive words and looking forward as well. So thank you so much, ladies, gentlemen, for joining in with your deep perspective on a matter which really affects all of us on a day-to-day basis and several times in a day for people like me. Thank you so much for joining in with your perspective. So that was the whole discussion on how UPI payments and the trust factor in UPI can be built further by really arresting the fraudulent transactions in some of the features which are not working in tandem for restoring trust in the system. But otherwise, it's a big convenience. That's the house view coming in from the experts. With that, it's a wrap on this edition of Big Question. Thank you so much.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to,
And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us. Are you ready for the best show in town?
NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hello and welcome. A very good afternoon, viewers. This is Malika Mishra and you're watching Profit 360 on NDTV Profit. But apart from the Christmas spirit, today is special also because December 25th marks the day Mumbai gets its second international airport. The Navi Mumbai International Airport formally kickstarts its operations today. The airport, in fact, welcomed its first commercial flight with a water cannon salute this morning. The water cannon salute is a ceremonial aviation tradition in which fire trucks spray arcs of water over an aircraft as it taxis. IndiGo flight 6E460 traveling from Bengaluru landed at the NMIA at 8 a.m. this morning. My colleague Saurabh Gupta sent us his ground report capturing the moment of NMIA receiving its first flight. Let's take a look.
As one enters the terminal, one gets a feel of what an amazing experience it's going to be for flyers who are going to fly through the Navi Mumbai International Airport, which is a digitally advanced high-tech airport. This is how futuristic airports in the country are going to look like and how airports in Viksit Bharat are going to look like. Now, the airport is not just about high-tech and design. It is also about integrating India's elements, India's cultures, and this is of course inspired by the lotus, India's national flower. The design, when you see, is inspired by the lotus, India's national flower, and it is of course integrating the architecture with cultural identity and contemporary design. Along with sustainability features. In its initial phase, the NMIA is designed to handle 20 million passengers per annum, with future expansion planned to scale capacity up to 90 million passengers per annum. So, to give you a sense of what the entire project entails, this is a full-scale model or a miniature model, of course, of the full scale of development at this airport. Now, this is the Terminal 1, which is the one that's being constructed now in the phase 1, and then of course the two parallel taxiways and the initial runway, which is of course the southern runway of the airport. And then there are, so look at the connectivity. You have this metro station that's coming in. You will have road connectivity and metro station that's coming in, and that comes all the way up to the terminals. And then of course there is the metro terminal at the station. Then also there is the Targhar station, which is the local train connectivity, and there is metro connectivity that's coming. And then there is also this particular line, the automated people mover, something that foreign airports have. That is also planned here, with the first flights landing and taking off today, with operations beginning at the Navi Mumbai International Airport and commercial paying passengers taking flights from this airport. This day in Mumbai's civil aviation history is going to strengthen the city's role as a global gateway and support long-term economic growth through expanded aviation capacity. Planned as part of a distributed aviation framework, the NMIA, or the Navi Mumbai International Airports, with flights now operating from this airport, is set to transition Mumbai to a multi-airport system aimed at improving capacity, operational resilience, and long-term scalability, giving the city a chance to grow, a chance to achieve its potential and rewrite its own destiny as it looks to build for the future with a goal in Viksit Bharat 2047.
Well, that was all about the first flight that took off from the Navi Mumbai International Airport. Now let's show you the visuals of the first flight that landed from at the NMIA from Bengaluru. Our colleague Ritu Rajpurohit captures those historic moments, and we also bring you an NDTV exclusive with Gautam Adani as he personally welcomes passengers at the new airport. The Adani Group chairman calls it a proud moment for Mumbaikars and says the facility will ease air traffic and offer world-class services. Let's take a look. Here you see finally the first flight that took off from Bengaluru Kempegowda International Airport has landed here at Navi Mumbai International Airport, and you can see the excitement here in the air among the passengers, the way they have been welcomed here at the airport, being garlanded. You have Adani Group chairman himself, Gautam Adani, being here greeting the passengers with a bright smile therein. You see, that's the sort of a special welcome that's been provided the moment that you had the flight landing over here. There was a special welcome in the form of cans, basically the water cans, showing that whole of a different dance show for the passengers. You have the passengers being with the phones up now, excited to take selfie with the man himself here, who is valuing each and every passenger being landed at Navi Mumbai International Airport. It's a historical moment, of course, because this is the airport with the lotus structure, which again significantly of nation's national flower. But the picture here says a different story of how that the aviation gateway is now seeing a new chapter altogether. We have the man himself, Mr. Gautam Adani, joining us, who is greeting and welcoming the passengers with a bright smile. Sir, the excitement is in the air. We saw, passengers clapping. We are seeing a new gateway altogether when we talk about the aviation, sir. What's like for you now?
Oh, actually, this is a very proud moment for Mumbaikars, and we are really fortunate where we got basically rights to develop this airport. It's a brand new airport, and we try to make it the world-class airport.
Sir, at this point in time, what would your really message be to the passengers? I saw them all with the phones up, being excited to take selfie with you.
No, this is actually Mumbai was struggling since last 10 years to having the more facility on airport side, and the present Mumbai airport was actually fully jammed. And this will basically ease out air traffic movement in Mumbai.
Now, as the city welcomes its second airport, let's talk to some voices that would help us understand the gravity of this milestone. We have with us Ajay Avtane, aviation expert, and Jitendra Bhargava, former ED at Air India. Thank you so much for joining us, gentlemen. Let me begin by asking Avtane, how will NMIA's launch today significantly reduce congestion at Mumbai's Chhatrapati Shivaji Maharaj International Airport, sir? And I ask you this question because, Mumbai has been struggling with managing its congestion for a long time. We're a very populated city and there's high traffic. How do you think NMIA is going to solve that key problem?
So, thanks for having me on the show. I think one of the primary issues with Mumbai always has been that there is only one runway. So they've been trying to do the best that they can do with managing, as much traffic movement out of that single runway. With Navi Mumbai, obviously you have two runways now. I mean, the first one's already operational right now. The second one's coming up. So there's already planning for two runways, and I think they've been potentially talking of a third one as well. So additional capacity is always welcome, and this is going to be helpful for the people of Mumbai and the visitors to Mumbai, because obviously now you don't have to really kind of be constrained by capacity at this point of time for expansion into one of the largest cities in India.
Expansion does give a relief in terms of handling high number of passengers. But Mr. Bhargava, from your experience at Air India, how will NMIA relieve the severe capacity crunch at Mumbai Airport that has impacted operations for years in some form or the other? And do you reckon with his view, is it the same reason?
No, I fully agree. And the fact is, it's a historic day for Indian civil aviation, historic day for Mumbai city. As a financial capital, Mumbai had always had an important place in Indian aviation. Let's not forget, the first flight which heralded the birth of Indian civil aviation landed in Mumbai with J.R.D. Tata in command. Now, what are we looking at is that in the last few years, Mumbai ceded its place and other airports grew because they had greenfield airport. What was done in Mumbai was that the old airport was only renovated, refurbished, and as we call it, a brownfield airport being made to add capacity. But now that the new greenfield airport is coming, and as Ajay said, the capacity will be increased in a calibrated manner, which would mean that the government will be able to give slots, both departing and arrival slots, to foreign airlines, to domestic carriers to expand. And that is what will take the load off the Mumbai existing airport, and there'll be no more congestion. And once you take care of the congestion, the growth will certainly take place. Mumbai being the financial capital, and more airlines would love to travel, arrive in Mumbai and have businesses out of it. The other part, of course, is that once this airport is coming up now, and you will find the real estate growth in that area. So it acts as a catalyst for economic growth, economic activity, and this is what we must be looking at. And I am myself looking forward to traveling from the Navi Mumbai International Airport day after, just 48 hours from now.
Right. Mr. Bhargava, you highlighted a very important point. You mentioned city-side development as well. And I remember when I was watching the interview that our managing editor Tamanna Inamdar did with Jeet Adani, he did mention that how this airport is going to fuel growth, not just inside, but also outside and in and around the area. It's going to uplift the economical appeal of the area by various folds. But my follow-up question to what you just said, and this is just me being inquisitive, what is a metric for the success of an airport? And I ask you that because while the airport has been made in a very fancy and appealing manner, where there are many features that make the airport experience itself extremely memorable, I just recently heard somebody say that the success of an airport lies in the number of airlines that would eventually come and partner with the airport. How do you think NMIA stands at that position, according to you?
The first thing is to look at that convergence of economic growth, infrastructure creation, airlines adding capacity assures growth in aviation. This is a standard practice that's happened. Navi Mumbai International Airport has all the qualities of an international world-class airport. Now, there is no reason, Mumbai being the financial capital, that airline will not press the government into giving them slots which were being denied in the past. We saw Delhi Airport grow, Bangalore, Hyderabad, all greenfield airports. They grew in a very fast manner at the expense of Mumbai city. Mumbai would always remain the first choice. So I am very clear about it, that it's a question of time, and as the calibrated growth takes place of Navi Mumbai International Airport, more and more airlines will flock to Mumbai city because Mumbai has the capacity. One thing, of course, one can say that there was a time when Mumbai monopolized the international travel. People would come in from different cities to Mumbai to catch an international flight. But now India, as the Prime Minister has very often stated, the number of airports has grown twofold. Now, with all major cities having their old airport, now you don't need transiting passengers to come to Mumbai and then take an international flight. But Mumbai, on its own standing as the financial capital, will have enough business for many more airlines to come in and fly or add frequencies to it. And of course, as I said earlier, the real estate development, and we have very often said, aviation industry acts as a catalyst for economic growth. And with the coming up of the airport, you will find the area up to 50, 70 kilometers away from Mumbai, from Navi Mumbai International Airport, develop and create employment, create hotels, create travel industry, create businesses for a whole lot of people. And of course, the exports, let's not rule out, because there is a separate thing for cargo that this airport has made a provision for.
Right. So the holistic development is a key byproduct of the airport being built in such a strategic location. But Mr. Vatne, as Mr. Bhargava highlighted, that he sees high potential and expressed confidence in a flock of airlines coming at NMIA. I'd like to ask you, just for the benefit of our viewers, to understand what exactly are the challenges when such a transition happens, and how do you think this is going to happen? Is there going to be a fresh line of airlines that would come with a fresh batch, or are they going to divide their operations between the two airports? What do you think the strategy would be?
So, different airlines will have different plans for this airport. I think, as we've already seen today, Akasa, IndiGo, and Air India Express, these three airlines, and Star Air as well, they've all started operations from Navi Mumbai today. So obviously these are domestic carriers and they will continue to fly from both the airports. What can also happen is for some international airlines who were unable to launch flights to the Mumbai international airports, these might now come into Navi Mumbai and target flights from the same catchment area that Mumbai and Navi Mumbai share. So, domestic carriers, they will obviously split operations between both the airports because, for a Navi Mumbai person or somebody flying into Navi Mumbai for a meeting or a work thing, it becomes easier.
Mr. Aftani, sorry to interrupt you, but you mentioned that the airport would now facilitate flying of those airlines that have not been able to fly from the existing airport, which is in the central part of the city. What airlines exactly are you referring to?
Look, I don't have names, but there could be international carriers who wanted to come into India, but they never got slots because the other airports were crammed. So, they can now approach the airport operator and kind of get slots if that was the constraint for them.
All right. Mr. Bhargava, I'd like to get you in and ask you, what key passenger benefits does NMIA bring in phase one, especially for domestic flyers facing overcrowding at the older airport?
One can say that in the initial months, there will be a problem of connectivity. But then when you have the Atal Setu bridge, you'll have a metro connectivity, you'll have even waterways, water boats to taken from that place to Gateway of India, etc. It's a question of time. But then, as I said, always with all new airports, it happens that in the initial part, you do not plan for a large capacity. And as you go along and the capacity increases, number of passengers will get and there will be enhanced connectivity. So one negative factor, because it is away from the city. And as we have often seen, all airports are essentially created away from the city, but city grows closer to the airport as you go along. So this is a limited, I think, restricted factor, maybe for a year or two that you will have connectivity issues. And that's why the significance of airlines splitting their operation from the existing airport and the new airport that they have. Because what it impacts is when you have capacity restraint, the fare differential comes in very often. And then you find, okay, this is closer to the city, so the fares are higher, and in the city, which is far away, your fares are lower comparatively, putting this way. But then, as Ajay very rightly said, at the moment when airlines approach the government of India for enhancing their capacity into India, in and out of India, the government does not look at Mumbai currently because of the capacity constraint congestion. Now that the congestion will be taken care of, you will naturally have more airlines, not just new airlines coming into India, but also airlines adding capacity.
Bhargava, I again have a follow-up to what you said, and you actually make some very interesting remarks. Yesterday, I had the opportunity to speak to some experts on how easy is it for India to welcome airlines, and not just welcome them, but help them sustain on Indian soil. Because since 1995, if you go back, we have seen about 18 airlines fail. And very recently, Ram Mohan Naidu, the Civil Aviation Minister, he announced going to Platform X that he's been meeting teams of 3 new airlines, 2 of which have already gotten their no objection certificates, one being Shankh Air out of them, and Al Hind as well. I'd like to ask you, is India ready to now not just welcome new airlines, but also help them sustain on Indian land? And if not, what are those loopholes that you see that needs to be fixed on an immediate basis?
It's good of Minister to say that there is provision for 3 more large airlines to come into India to break the duopoly of IndiGo and Air India, Tata Airlines. The reality is you really cannot bring an airline and it can't muster support or get a market share of even 2% or 3%. Take the case of Akasa and we can review it. A good airline, but has it been able to muster the market share? All that it has got is thanks to SpiceJet, whose market share has been dwindling. IndiGo is unlikely to yield ground. Likewise, Air India. Air India, of course, has in the recent months cancelled a whole lot of international flights from their operations. But for a domestic player to come in a market with high taxation, high landing charges, high parking charges, high airport charges, let me add this also, you are unlikely to see a new airline survive. And the reason why 18 airlines, including mega people backed by Naresh Goyal, for example, Vijay Mallya, etc., could just survive? The fact is they never made profit. It's a low-cost model that India needs, and if the more low-cost come in, and of course these new airlines we are talking about are low-cost carriers, but for IndiGo to yield ground, considering that they've already placed orders for 1,000 aircraft to take care of future growth of the Indian market. Likewise, Air India has placed orders for 570 aircraft to take care of the future growth. Now, how is anybody going to grow? And unless you have some volume scale of operations, you cannot break even in the aviation industry. It's a tough industry.
That's exactly my point. Thank you so much for giving us some reality check on where India's aviation landscape currently stands in terms of sustaining airlines. But Mr. Avtani, how might NMIA improve connectivity to underserved areas in Maharashtra and beyond through its initial domestic routes? Because we've been talking extensively about how its multimodal transport facilities is going to enable transport from different locations within Mumbai and Navi Mumbai. But what about its strategic location and the significance of it in connecting other areas, not just in Maharashtra, but beyond?
So, one of the interesting things about the location is that this is almost centrally between Mumbai and Navi Mumbai. So, one of the impact of this is going to be that Pune, which does not get enough connectivity of its own. Now, the people from Pune don't have to come to Mumbai whenever these new flights internationally and domestically start. They also have the option of taking a flight from Navi Mumbai in case that is served by the destination that they want to fly to is going to be served from there. So that's one point on the connectivity. And also, I was reading this morning that a lot of at this point of time, a lot of bus services are being started into the neighboring areas, which can also, again, connect a lot more people. People who had to take cabs, to drive down to Mumbai, and they can now kind of just take a bus or still get a cab and come into Navi Mumbai, which is closer to them at this point in time. Over a period of time, obviously, as the new options of connectivity with the airport are established, there'll be a lot more people coming in because, this is a greenfield airport and there is hence a lot more capacity here to accommodate passengers. And again, this is closer for a lot of regions of Maharashtra as compared to the Mumbai airport, which is like right at the tip of the island city, sort of.
Okay. Great point made. Thank you so much, Mr. Ajay Avtani and Jitendra Bhargava, for giving us your insights into this milestone for Mumbai. Of course, there are areas of more development, there is scope of further expansion, but one can't ignore how strategic and important Navi Mumbai International Airport is, not just for Mumbaikars, but also for the country at large. But viewers, Navi Mumbai International Airport is now open for business. That matters, bringing faster travel, reducing congestion and fresh hope. From the first IndiGo touchdown this morning to the promise of 90 million passengers in the future, NMIA has the potential to be a game changer for travelers, businesses and the city. And on that note, viewers, it's the end of this edition of Profit 360, but I do urge you to continue watching NDTV Profit as we bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Good evening, ladies and gentlemen.
Actor of the Year,
Director of the Year,
Debutant Director of the Year,
Sports Performance of the Year. The Actor of the Year award goes to... And the award for NDTV Science Icon of the Year.
Welcome to the 20th edition of NDTV Indian of the Year 2025.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
Before she was born, we knew that we would have to kind of ensure she's financially taken care of. I figured out that there were children who invested as early as 6 days old.
Money becomes the reason for confusions between spouses, confusion between children and parents.
We'll eat first and then diet later. We pack a healthy tiffin first and then eat guilt-free. It's as simple as that.
Money which we have in our portfolio is primarily for our retirement. The money which she has, it's practically for her education.
If there's one thing that everybody seems to have an opinion on, it is how to bring up your child. Whether it's your own parents or whether it's your neighbors or your friends. They've all got an opinion about what you should and should not be doing, whether it is having certain manners enforced or which school you should be putting your child in or what their time should be used for, what sport they should be playing. But the fact is, I've spoken to a number of parents and they all agree that most of them are just winging it. They're doing it for the first time and they're hoping and praying that they're doing it right. So when it comes to planning for the finances that you need for your child, a lot of people are doing it for the first time and don't know whether they're doing it right. So today I'd like to talk with two people who advise other people on finances for a living and happen to be married to each other. And I wonder whether they approach the planning for their daughter in a more sorted manner. I'm joined by Megha Malpani, who's partner at Zvest Financial Services, and Harsh Kumar, managing partner and co-founder of Zvest Financial Services. Of course, you're partners at work and partners at home as well. Thank you so much for taking the time. Anyone can take this. Were you planners before you got married?
Not really.
Okay, so you took it up later. What's the story?
We were into the field of wealth management earlier, but I think post we got married, when we started Zvest, I think the whole approach towards very structured financial planning, which kind of reduces confusion, and philosophy which helps you build a structure, got stronger. I think we have learned from other people with the way we manage our clients' money on how to also start, planning for ourselves. So I think planning really started 5 to 6 years ago, before our daughter was born.
Oh, 5 to 6 years before. Wow. So when did you get married?
So I got married in 2015. I hope the date is not wrong or the year is not wrong. That's a tricky question to start with.
No, you better remember those dates. So certainly. Okay, so you got married in 2015 and you're saying that you planned for quite a while before your daughter was born, right? What was the thinking about?
So, Alex, our daughter was born in 21. And I think, before she was born, we knew that we would have to kind of ensure she's financially taken care of before she was 3 years old. We didn't want to go through a monthly SIP way for her. We wanted to kind of keep a target that before she is 3, we have sorted her finances out. So we did a reverse engineering. We figured out how much we would have to invest per year. And we just got about doing that. We started her on her investments when she was 2 months old. And believe me, I thought, she would be the youngest investor in a lot of mutual funds. But this Children's Day, when I was doing some research, I figured out that there were children who invested as early as 6 days old.
6 days?
Yeah.
Wow. And the beauty is that we checked 2 cases where one child was 6 days and another one was 11 days. And both of them were from tier 2 towns in India. So none of those 2 was from Bombay, Bangalore, Delhi or Calcutta.
I'll talk to you about what you invest on her behalf. Because this will give people a sense of what your thinking has been as well. But when you say that you reverse engineered, obviously at that point, you've already been aware that you are going to have a child. A lot of people don't even know that. So, Harsh, how do you start planning for something you don't know for certain will happen?
Right. So, I'll just take a step back. Now, it's not just about planning for your child, which sets the temperament for investing. So when we got married, we were also not sure when will we have a child and all those things. But we started sorting out our finances because believe me or not, in India we don't talk about money within families, within spouses. But we have seen a lot of studies, we have seen a lot of cases where money becomes the reason for confusions between spouses, confusion between children and parents, confusion between uncles and parents. And it's a very complicated world if not managed properly. But if it is managed properly, then it's very simple also. Then we decided that let's have a rule book at family level on what we will do with money, what we will not do with money. And if I have time, I'll explain.
No, please do. Because, and also I'm curious, so you're partners in a business.
Right.
And I have asked this to other business owners in the past on this very program. Do you pay yourselves salaries?
Yes, we do.
Yes.
So therefore, I'm curious about how two financial planners or financial advisors do the saving that they do on an ongoing basis. What is the kind of methodology that you follow? Do you each invest separately?
Yes, we do invest separately in our individual names, but we are cross-nominated.
Okay.
However, for maybe buying a house, potentially when we know we're going to live in a house for next 10 years, we do our investments through a joint account.
You haven't got
Not yet.
What is the thinking? Look, I'm curious because this is a conversation I often have, buy versus rent, right? And you've clearly decided you're in Bengaluru, and you've decided to not buy a house. I've heard that it's more affordable than Mumbai. But why have you not bought?
So there are 2-3 reasons for that. One, which is more of a financial reason, that's about rental yield. Today in India, the best rental yield which you have in a house is around 3% or so.
Yeah.
So imagine I'm getting a house which is of 3 crores, but I'm paying a rent which is 9 lakhs in a year. So I can use that house for 3 years, 4 years. I can move on to the next house. I can keep shifting to better quality construction and better neighborhood with each enhancement in my income. So that is rule number 1. Second, we don't want to be in a situation where we are continuously in stress about our EMIs. Now, 5 years from now, it could be possible that your job is at risk because of AI, my job is at risk because of AI. And I don't want a situation there when I have to worry about my working life only because I have to pay EMIs. That is rule number 2. Third is, when we buy a house, we have invariably seen that rationality of decisions take a backseat. What I mean to say is, let's say you have a house which is at place A. You want to put your daughter to a school which is at a distance of 10 kilometers.
Sure.
You will say, okay, let me not send her to that school. Let me send her to a neighborhood school. That is also okay. You start reasoning out, saying that that is also okay, which in actual may not be okay for her, depending on her profile and everything. You get a good job offer, which is 10-15 kilometers away from your home. Your spouse gets a job offer, which is away. And you say, no, let me not go there because my house is here. So the house becomes a center of decision making rather than an analytical approach for deciding which job to take, which school to send. And that's the reason we don't have a house.
But the counter argument to that is the stability and the security that it provides, which a lot of people gravitate towards. The reason, ultimately, that's the reason why you say roti, kapda, makan. And you don't have one of those 3 fundamental requirements when you are renting, because who knows what's going to happen with your income down the line. If you don't have a job, but you have a home, you have that security. That's the argument. How do you counter that?
So one is being financially secure. So we don't have a house, it doesn't mean we don't save. So which means I have a portfolio which is there. Tomorrow, if both of us have no income, the returns of the portfolio on an annualized basis is good enough to take care of our rentals for life. That is point number 1. Second point is, when you mentioned that one should have roti, kapda or makan, that is when you have stability in life. If we know for a fact that we are going to be in this neighborhood for next 10, 15, 20 years, for stability, maybe we can buy a house. But when our jobs are uncertain, when our location is uncertain, when we don't know where we're going to shift after 1 year or 2 years or 3 years, then it's better not to have that makan now. We can always postpone it. Maybe in 10 years from now, we will have a house, but not now.
Not now. Okay, so the thinking is very clear. We were talking about how you invest, and you said that you invest separately, but you're cross-nominated. Do you have differences in the way that you approach your investment portfolio? In that